Kindly watch this introduction video of mine before you directly proceed to the respective timestamp. Most important instructions I'm giving you so that you can get maximum output, maximum, benefit by watching this marathon. Very simple. The first and foremost instruction. In the marathon, we have used materials, right? Like some material we have used. That material is available at free of cost in PDF format in our website, gstofcma.com. Just open our website. Inside there, something called free resources is there. Inside that, you just have to select the CMA Inter option. Then you will find all the subjects. That is first important thing. Second, now these marathons are being handled by our Shrestha team. I think many of you, whoever is watching this revision class, are well aware of our faculty team. The law is being handled by Subramaniam sir, and financial accounting P6 and P10 is being handled by Sai Babu sir. Remember, for all the 8 subjects, we are uploading marathon. Not just for 1 or 2 subjects, for all the 8 subjects of CMA Inter, under one roof, that is under Shrestha for CMA, you are going to get revision classes, access. Then P6 and P10 accounting, both the accounting in group 1 and group 2 are being handled by Sai Babu sir. P7A income tax, my classes will be there. Whatever my CA Inter revision class is there, part 1 and part 2, the same revision class you can use for CMA Inter for December as well. Then GST is handled by Pawan sir. P8 cost accounting, P12 management accounting, both are costing related, is handled by Ganesh Bharadwaj sir. Then P9A O&M operations management is again handled by Subramaniam sir. P9B strategic management, P10B auditing, P11B analytics. All the 3 papers revision classes are being handled by Harish Krishnan sir. P11A financial management again by Funny sir. So these are the subjects and the faculties who are handling it. So I just want to give you an information about what subjects we are uploading for marathon. Coming to income tax, like I don't know whether you're whether you're a group 1 student or group 2 student. I just want to give one clarification. For December 24 attempt, there are no separate amendments for any subject, including tax. Even for income tax, whatever amendments that are there for June attempt, the same amendments will be applicable for December. You need not even think about amendments. Just to watch the marathon we uploaded. Whatever marathon I have uploaded for recently September attempt of CA Inter, the same marathon you can use it for, December attempt of CM Inter, because the same is applicable for even CA Inter January 25 attempt. So you can use absolutely the same. And the respective material you can find in the, as I already told, in our free resources in the website, you can find under CMA Inter option the respective materials. And third important thing, we have given for all the subjects 3/4 preparation strategy. What is 3/4 preparation strategy? In every subject, we identify 1/4 of the chapters, nothing but. Suppose if financial accounting is there, in that let us assume 12 chapters are there. We will identify 3 to 4 chapters that occupy 25 to 30 marks of the weightage in the exam. 25 to 30 or some worst case 35 marks. From these chapters, worst case 25 to 30 or 35 marks is what going to come in the exam. You have to leave it. These chapters you should ignore it completely. Sir, what does it mean? Remaining chapters you have to be 100% pakka. This is called 3/4 preparation strategy. Like many students are asking, sir, we are unable to complete syllabus in time in the exam. So can you suggest us some important questions in each and every chapter? I tell them that is a very risky strategy. Choosing important questions in every chapter is a risky strategy. Don't do it. If you don't have time, take some 3 or 4 chapters in every subject which occupy 30 to 35 marks weightage. Keep them aside. Remaining chapters, 100% you should prepare. By doing so, no matter how tough the paper, let it come, no matter how tough the paper it might be in the CMA Inter. It may be like in every chapter they might be asking C category questions. Let us assume, you need not worry because 75 to 85 marks worth of syllabus you studied 100%. So you can handle any level of paper even with limited preparation. Like you ignored 1/4 syllabus straight away. So that is what 3/4 preparation strategy is all about. Regarding that, in each subject, in paper 5, law and ethics, what are the 1/4 chapters that you can keep them as a last priority? In financial accounting, what chapters are last priority? In income tax and GST, what are last priority? For every subject in group 1 and group 2, we have identified what are the chapters that you can absolutely ignore without any second thought. Or you don't want to ignore, keep them as a last priority. First finish, suppose you might be group 1 or you might be group 2. First finish each and every subject, 3/4 chapters, 3/4 chapters, 3/4. Like take P5, all first priority chapters as per our PDF, finish it off. P6, all first priority, finish it off. P7, all first priority, finish it off. P8, P9, P10, P11, P12, finish all the first priority. Whatever you are targeting for the coming December exam. After finishing that, you still have time. Then do focus on the remaining chapters which you originally ignored. This is called 3/4 preparation strategy. Now, one more important advice. You please focus single group only for the coming December, especially if at all you are a repeater. Means you gave an attempt in June or that before attempt, but you failed. I request you to focus only single group for the December. And by the way, what should be your preparation strategy for December attempt? I have already uploaded a video on preparation strategy in the same YouTube channel. Go to that YouTube channel. So, you go to that particular video, you will understand how to plan your preparation for the coming December. And not just that, we even gave timetable for CMA inter students who are planning to write single group for the December exam. If at all you do not have any control on your preparation process, all that, daily 7 to 8 hours of study timetable we have already given. Actually, there's a timetable which we give for our subscription course students who are watching classes. The same timetable you can use for preparing the subject also. It is like a study timetable as well as it is a timetable for watching our classes. Actually, the timetable is made for watching our classes. Every day, what subject, which class you need to watch for how many hours. Instead of watching class, if at all you want to prepare on your own, instead of watching class, you study that particular chapter, that particular subject. So, timetable is also provided. The timetable also you can find in the same website, restofuscsema.com. Under, free resources, you can find the timetable as well. So that's it. I just want to give some, these instructions. Make use of this marathon carefully. And by the way, do not watch at higher playback speed. Kindly watch at standard speed. Do not rush up. You have enough time. Getting it? Plan your preparation carefully. That's it. Continue watching the marathon class and do very well. All the very best. And please do comment below. How is this marathon session? Getting it? Your suggestions, your appreciation definitely motivates us a lot. So kindly do comment how do you felt after listening to our marathon sessions. So that's it. Thank you. All the very best.
Hi, hello everyone. Good morning, good afternoon, good evening. So today we are here to start with the topic of the GST and customs as a quick revision or as a fast track. Dear students, I hope already all of you have done 1 or 2 revisions in relating to the GST and customs at the CA inter or CMA inter level. So if you have a little bit knowledge about the GST or customs, that is I'm saying if you completed 1 or 2 revisions, then this video will be useful. And please don't try to learn the entire concept with these 14 to 15 hours of GST and customs. Already, sir, I referred total GST concepts and customs, but just I need a quick revision before to the examination or for quick preparation, then these videos will be only for you, right? And out of the total syllabus of GST and customs, I'm going to cover first the GST concern. GST concern, we are going to cover 70% of syllabus. Totally 70% of the syllabus, which is more and more relevant for your examination, including amendments. Suppose out of the 70% of the syllabus, we are going to cover the topic of the supply, and the second one, charge of GST, and the third, composition scheme, right? And the next one, charge supply, charge of GST, composition scheme, time of supply and value of supply, and the next one, registration, and the next one, returns, and few areas of exemption, right? And apart from that, okay, input tax credit, right? So approximately we are going to cover all these topics in important areas. And apart from that, please remember we are going to solve few problems on it. In the classroom itself, we are going to solve few problems, that too by considering of the amendments also. So in GST, we are going to cover supply, charge of GST, composition scheme, time of supply, value of supply, registration, returns, exemptions, and input tax credit. And out of which we are going to cover the important aspects as well as amendments area. And the second one, customs. In customs, we are going to cover 100% of the concept. 100% of concept with few problems which are given for your examination. And you know that in customs, we are getting an examination on repetitive basis. So what are the problems given on repetitive basis? Those problems we are going to solve in this session. right? So let we start with the topic of the GST. But before starting with the topic of the supply, let me give an introduction part. Let me give an overview about the introduction part. I think it may not be necessary, but before starting of the preparation, just we need a little bit knowledge, right? So as you know that when we are taking a huge amount of the meal, we will start with a soup, right? It could be like that. So we are going to start with the introduction of GST, and you know that introduction of the GST came into the picture with effective from 1/7/2017, right? 1/7/2017. So the provisions of the act applicable to all of India except Jammu and Kashmir on 1/7/2017, but with effective from 8th July 2017. The provisions of the GST Act applicable to whole of India, including Jammu and Kashmir. Please remember, right? So the enforcement of the GST. So before introducing of GST, what was the provision? What was the situation? Let me explain. So before introducing of the GST, if where a person doing any manufacture activity, he was liable for payment of central excise duty. Where a person after manufacturing of the goods, if he is intended to sell within the state, that is called intrastate sale. Intrastate sale. Thereby he was liable for payment of the VAT. After manufacturing of the goods, if he is intended to sell the same goods to other state, he was liable for payment of CST, that is Central Sales Tax. And suppose in relating to the manufactured goods, if you are intended to render any service, we were liable for payment of the service tax, right? And if there is any import or export activity, we were liable for payment of the customs duty. And apart from that, we were liable to pay different type of the indirect taxes to the central and state governments, but out of which all these taxes has been subsumed in GST. So that with effective from 1/7/2017, no need to learn all these topics. Even in practical also, all these topics are subsumed in GST. So that here manufacture was levied on, central excise duty was levied on manufacture, VAT levied on intrastate sale, CST levied on intrastate sale, service tax levied on services. Then GST will be levied on supply of goods or services. GST will be levied on supply of goods or services. Sir, then what is the meaning of the supply? We will learn in the next chapter. Supply is simply, please remember, it is like as a sale. It will be like as a sale. Suppose in case of the service, rendering of the service, that's it. But in GST, supply, the legislature is intended to cover the wide areas, or is intended to give wide definition, so that such concept we will cover as a separate chapter. So supply chapter, the meaning of the supply we will discuss in the next chapter. So this is an introduction part. So wherever there is a supply of the good or service, there we are liable for payment of GST. So in case of if there is a supply of good or service, if there is a supply of the good or service, we have to divide into two parts, like as a intrastate supply, and the second one is interstate supply. Intrastate supply and interstate supply. In case of the intrastate supply, on the value of supply is nothing but consideration, on which we are liable for payment of CGST and SGST. Suppose where you are intended to sell a thing, suppose let us assume a bag worth of 10,000 rupees, and let us assume GST on it 18%. So 9% of the GST will goes to the central government, and 9% of SGST will goes to the state government. Thereby it will become 11,800. Right? If it is an intrastate supply. Suppose in case of the interstate supply, suppose taking an example where a person located in Maharashtra, he is intended to sell the goods to a person who is located in Tamil Nadu. Right? Where the supplier is located? Maharashtra. And where the recipient is located? Tamil Nadu. And suppose the value of supply, let us assume again 10,000 rupees, on which we are liable for payment of IGST, that is integrated goods and service tax. Totally it will become 11,800. Now the question it is, out of 1800, 50% of the revenue will goes to the central government, that is 900. And the balance of 50% of revenue will goes to the state government. Now the question it is, which state government is going to get the revenue? Whether Maharashtra state government or Tamil Nadu state government. Which state government is going to get revenue? Exactly, right. Tamil Nadu state government is going to get the revenue, that is where the goods or services has been consumed. GST is a consumption oriented tax regime. So where the goods or services are consumed, such state government is going to get the revenue. Even though goods are manufactured in the state of the Maharashtra, but still those goods are consumed in the state of Tamil Nadu. So that such revenue will goes to the Tamil Nadu only. Sir, then what about the Maharashtra, sir? In GST, where the goods are manufactured, where the goods movement has been commenced, such a state government won't get any revenue. Are you clear with this? Done. So this is the introduction part. Are you clear with this? Any doubt? So in case of the intrastate supply, we are liable for payment of CGST and SGST. In case of the interstate supply, we are liable for payment of IGST, right? Out of IGST, half of the revenue will goes to the central government and half of the revenue goes to state government where such goods or services has been consumed. Are you clear? Right. Now let me give a little bit knowledge about the input tax credit. What is the concept of the input tax credit? Input tax credit, where a business person who is a registered person means a person who obtained the registration under the GST Act, right? Now a registered person, he has to carry activities of purchase and sales, right? Purchase and sales. So a common business person has to do the activities of purchases and sales. Now from GST point of view or in the GST flavor, purchase will be reckoned as a inward supply, and sales will be reckoned as a outward supply. Inward supply and outward supply. Now on inward supply, whatever the GST paid, and outward supply, whatever the amount of GST payable, right? Whatever the amount of GST paid and whatever the GST payable, it can be set off. Suppose taking an example. On inward supply, we paid 5 lakh rupees worth of GST. On outward supply, we collected 8 lakh rupees worth of GST from the customers. Now, while the registered person remitting such 8 lakh rupees of GST, he can set off 5 lakh rupees worth of GST. Thereby, his net GST liability will comes to, very good, 3 lakhs. This is the concept of input tax credit. GST payable on outward supply can be set off against GST payable on inward supply. That is the concept of input tax credit. Are you clear with this? Done. With this knowledge, we are going to start with the topic of introduction to GST, right? The first one, features of indirect taxes. First of all, as you know that it is an important source of revenue to the government. More than half of the revenue is going to get only from the indirect taxes. As you know that in the year of the 2025, the Indian government is going to get approximately 20 lakhs of crores only from the indirect taxes. So that simply we can say it is as an important source of revenue. Second, taxes on commodities and services. Indirect tax, GST will be levied only on commodities and services. And the next one, shifting of burden. Always there will be a shifting of burden. Manufacturer will collect from the wholesaler will collect from the retailer will collect from the customer, right? No perception of the direct pinch. A person who is paying taxes to the government is not getting pain. Suppose when I'm purchasing petrol, suppose I'm pouring the petrol for the worth of 100 rupees, I will presume that I'm making payment only for petrol. I won't presume that it consists 50 rupees worth of tax, right? So I'm not getting pain while making the payment of indirect tax. Suppose when I'm purchasing goods in any best price retail, Reliance Mart or any etc., in those areas, just I will make the payment for goods and I won't presume that I'm making payment tax, right? So that is, there is no perception of the direct pinch. Inflation, indirect tax follows inflationary trend. Where the price increases, automatically indirect tax portion will be increased, right? Next, wider tax base. When it's compared with the income tax, indirect tax has a wider tax base. Income tax will be levied only on person's income. But whereas indirect tax will be levied on intrastate sale, services, import or export of the goods, right? So indirect tax has a wider tax base for levy of the taxes. Next, promote social welfare. How the indirect tax will promote the social welfare? Simple. Indirect tax will levy, or the rate of indirect taxes will be high on sin products. When the government levying higher rate of taxes on sin products, the price of the product will be increased. Once the price of the product is increased, automatically consumption will reduce, right? So in such a manner, indirect tax promoting social welfare. Next, regressive nature. Indirect tax is a regressive nature. How it could be a regressive nature? Indirect tax is a regressive nature due to irrespective of the fact whether you are the rich or poor, whether you are getting profit or loss, irrespective of the such fact, you have to make the payment of equal amount of tax. Suppose take an example. Suppose I'm intended to watch a movie. Suppose movie ticket worth it is 200 rupees. I have to make the payment of 18% of the GST. Suppose any rich person, any industrialist, if you want to watch movie, he is also make the payment of 18% of GST. There is no any difference. So either the rich or poor people, they have to contribute equal amount of the indirect tax. That's why indirect tax is a regressive nature, right? These are the features of indirect taxes. Next, deficiencies in the existing indirect tax system led for introducing of GST. These are the various problems. These are the various problems under the earlier indirect tax system, so that forcibly the government of India introduced GST in the year of the 2017, right? And these things we discussed elaborately in the classroom session, and approximately we spent 1.5 hours on this concept, right? And the next one, taxes that are subsumed in GST. What are the taxes that are subsumed in GST? From examination point of view, as a 4 marks question, it's very important. 4 marks question. Central levies and state levies. What are the central levies and state levies that are subsumed in GST? Central levies concern central excess duty and additional excess duty. Earlier, if you are doing manufacture activity, you are liable for payment of central excise, right? Now it is subsumed in GST. Earlier, if you are doing any services, you are liable for payment of the service tax. Now it is subsumed in GST. Next, Medicinal and Toilet Preparation Act. If you are manufacturing any cosmetics, earlier you are liable for payment of the Medicinal and Toilet Preparation Act. As per this act, you are liable for payment of the separate excess duty. Now all these things are subsumed in GST. Next, countervailing duty and special countervailing duty. It will be levied on import of the goods. Now today it is subsumed in GST, so that on import, along with the basic customs duty, we are liable for payment of IGST only. Next, central sales tax. Earlier, if you are doing any transaction from the other state, that is, if you are doing any interstate sale, you are liable for payment of the central sales tax. Now you are liable for payment of IGST, being central sales tax subsumed in GST. And apart from that, central surcharges and cesses, like as Swachh Bharat cess, Krishi Kalyan cesses were there under the earlier indirect tax system, it is also be subsumed in GST. So finally, simply we can say that these are the central levies totally subsumed in GST. No more, right? Now the state levies. State levies. These are the state taxes which were levied by the state government. The first one, VAT and sales tax. VAT and sales tax. Earlier, where a transaction taken place within the state, we were liable for payment of the VAT or sales tax. Now it is subsumed in GST. Second, entry tax and purchase tax. Suppose there are the few areas, few industrial areas, few commercial areas where the goods are brought into that area for any further process or for any other manufacture activity or even for trading activity, we were liable for payment of the separate tax which was called purchase tax or entry tax. Now it is subsumed in GST. Next, entertainment tax. Earlier on movie tickets, we were liable for payment of the state tax. Now we are liable for payment of the GST. Now the VAT and sales tax, entry tax, purchase tax, entertainment tax subsumed in GST. Next, tax on lottery and lottery betting and gambling. Earlier, under the lottery, the transaction of the lottery of betting and gambling, it was supposed to be treated as a service as well as the good. Central government was supposed to levy service tax, and the state government, by considering it is as a good, supposed to levy VAT. In such a manner, we were liable for payment of the service tax as well as the VAT under the earlier indirect tax system. Now it is subsumed in GST. So on lottery and betting and gambling, today we are liable for payment of GST only. Next, luxury tax. Under the earlier indirect tax system, if you are purchasing any luxury goods like as a car, furniture, etc., we were liable for payment of the luxury tax apart from the VAT, along with the VAT. So VAT and luxury tax. But today, all these taxes has been subsumed in GST. Next one, taxes on advertisements. Tax on advertisements. Earlier on advertisements, hoardings, right? Wherever the hoardings or boardings are there, on advertisements, we were liable for payment of the state tax also. Now it is subsumed in GST. Next, apart from that, state surcharges like as service charges and other charges were there under the earlier indirect tax system. Now all those things are subsumed in GST. So please remember, these are the central and state levies which are subsumed in GST. Please pause the video and go through central and state levies once. Right? Is it okay? Done. Now, even after introducing of GST, still you have to remember few things. What are those, sir? Even after introducing of GST, still alcoholic liquor for human consumption, on which we are liable for payment of the state excess duty only. Reason: alcoholic liquor for human consumption not subsumed in GST. Point number one. Point number two, petrol products. As you know, PAN-HM, right? Petrol, aviation turbine fuel, natural gas, high-speed diesel oil, motor spirit. All these things not subsumed in GST. Still today we are liable for payment of central excess duty plus state excess duty. Are you clear? Done. And apart from that, narcotic drugs. On narcotic drugs today, suppose Indian hemp and opium, on which still today we are liable for payment of the state excess duty. It is not subsumed in GST. Are you clear with this? So the first point, it is alcoholic liquor for human consumption, state excess duty. Petrol products, we are liable for payment of central excess duty and state excess duty. Next, Indian hemp, opium, narcotic drugs, we are liable for payment of the state excess duty. And apart from that, you have to remember on tobacco items, we are liable for payment of GST, as well as we are liable for payment of the GST as well as central excess duties and state excess duties. It is continued. Totally, it is not subsumed in GST. Are you clear? So on tobacco products, double bonanza, double taxes, the new taxes as well as the old taxes. Next, the concept of GST. GST, it is a value added tax. Obviously, we can say it is a value added tax. Simply consider this example. What is the tax we have to pay on outward supply? 8 lakhs. Right? What is the purchase value? Let us assume 5 lakhs. And finally, we have to pay GST. Actually, we discussed it as a tax amount, right? But instead of the tax amount, remember, suppose it is as a sale value, it is as a purchase value. And what is the value on which we have to pay tax? Just the balance amount. Set off sale minus purchase, whatever the balance we are getting, only on which we have to pay tax to the government. So simply we can say GST is a value added tax. And next, the continuous chain of tax credit. How there will be a continuous chain of tax credit? The persons who are involved in the supply chain, from the manufacturer to wholesaler, distributor, retailer, and finally customer, right? In this situation, the persons who are involved in the supply chain, all these peoples are eligible for availment of ITC. So there is a continuous chain of tax credit. And the next one, burden borne by the final consumers. See here, the persons who are involved in the supply chain, all these peoples are eligible for availment of ITC. But finally, such tax burden will be borne by the customer or consumer. That is the beauty of indirect tax, right? Next, no cascading of taxes. There is no double taxation and cascading effect. Under the earlier indirect tax system, a single transaction was supposed to classify as a good and service. Thereby, we were liable for payment of the multiple taxes under the earlier indirect tax system. But now under the GST, there is no such concept. There is no double taxation and no cascading effect. And the next, benefits of GST. What are the benefits of GST? So the first one, taxes that are subsumed in GST, that is important aspect. And the second one, for 4 marks question, benefits of GST. Next one, important one. Benefits of GST, creation of unified national market. Indirect tax, it created, GST, it is created, not the indirect tax. GST created unified national market. Reason, under the earlier indirect tax system, we were having state taxes and central taxes. So where a good manufactured in a state may not be in a position to sell the same product in another state with the same price. We're supposed to charge another MRP. We're supposed to print another MRP. Suppose 10 years before, if you are purchasing any candle, puppets, and a few soap items, there will be you may come across 2 MRPs. Suppose if you are purchasing this product in New Delhi, it will be 25 rupees. Suppose if you are purchasing this product in Haryana, the price will be 28 rupees, like this. Reason, simply we can say state taxes were different. When the state taxes were different, automatically the MRP will be different. So we were unable to create unified national market. A product which is manufactured in one state, it may not be in a position to sell the same product in another state. That was a drawback under the earlier indirect tax system. But now under the GST, it created unified national market. And the next one, minimization of ill effects of cascading. Minimization of ill effects of cascading. Earlier, we were supposed to face double taxation and cascading effect. Now it is neutralized by introducing the concept of input tax credit. Next, elimination of multiple taxation and double taxation. Now we come across, we discussed, these are the huge amount of the indirect taxes which are subsumed in GST. Thereby, simply we can say one of the benefit of GST is elimination of multiple taxes. Next, boost to Make in India initiative. On those days, the central government introduced the concept of the Make in India concept, but the indirect tax system was not supportive. But once the GST introduced one nation, one country, one nation, one country, one tax, right? So one nation, one tax concept has been given a major boost to Make in India initiative. Next, simplified tax structure. So in GST it is simple. Inward supply, outward supply, set off, file the return, pay tax. That's it. No need to maintain different type of the books of accounts, different vouchers, different invoices, different type of the records. There is no such concept. And the next one, easy tax compliance. Easy tax compliance. Earlier, for excise, VAT, CST, service tax, customs, you have to file separate type of the returns. But now under the GST, one return enough. For one state, one return, whether it may be manufacture, service, intrastate sale, whatever the activity it may be, just filing of the single return is enough. So that simply we can say it is easy tax compliance. Are you clear with this? Done. Next one, constitutional provisions. Next one, it is constitutional provisions. So here we are going to discuss three constitutional provisions. The first one, it is article number 246A, very important. So where the central government getting power to make laws of, that is CGST Act, or where the state government making laws, that is SGST Act, such power has been conferred to central government and state government by the constitution is under the article number 246A. Suppose simply I am asking to the central government, dear central government, where you are getting power for levy of CGST on supplies? Central government simply reply, sir, as you know that being a government officer or the government representative, if I am doing any activity directly or indirectly, I have to get the power from the constitution only. In India, constitution is the basic document, irrespective of the religion, irrespective of the caste or anything. The first basic document which you have to comply, it is constitution. So that to the central government, article number 246A empowered to make laws, and article number 269A, okay, article number 246A empowered to make laws, it's okay, good. But suppose in case of the interstate supply, who has to collect the tax? Suppose take an example where a supply has been taken place in between West Bengal to New Delhi, where a transaction taken place from West Bengal to New Delhi, right? It is an interstate supply. We are liable for payment of IGST. It is an interstate supply. Who has a power to collect the tax? Whether West Bengal or New Delhi? West Bengal or New Delhi? Now, such power has been vested in the hands of the central government. You may come across in various situations, if any dispute arises in between two states, automatically the central government will come into the picture. The state governments does not have a right to solve their problem at their own discussion. Reason, it's a matter of the two states governments. There the central government will get the power. In the same way, the article number 269 has been introduced. Where a supply is in between two states, such revenue will be levied and collected by the central government. After collecting of such revenue, it will be shared with the state government where the goods or services has been consumed, right? So this is article number 269A. And finally, article number 279A, it is power to the president. Okay, entire GST concept has been introduced, central getting power and state getting power. Okay, it's okay. But the central government and state government has to discuss. They should have a common platform or an area where they have to discuss, right? So for that purpose, with the members of the state government and central government, a committee must be constituted. So by considering of this such fact, Constitution empower the President for constitution of the GST Council. By virtue of Article number 279A, President constituted GST Council. So Article number 279A empower the President for constitution of the GST, so that President constituted GST Council, and out of which Central Finance Minister appointed as a chairperson or chairman of the GST Council, and the remaining state financial ministers will become members of the GST Council. And apart from that, 1/3 of the total votes has been vested in the hands of the central government, and 2/3 of the votes has been vested in the hands of the state government. Now, by passing of the special resolution, that is, by getting the consent of not less than 75% of the weighted votes, they have to take the decision, right? So this is the constitutional background. And the next, manner of availment of ITC. Actually, what is the concept of the input tax credit? Already we discussed, right? Tax paid on inward supply can be set off against tax payable on outward supply. Tax paid on inward supply. What is that? Tax paid on inward supply can be set off against tax payable on outward supply. That is the concept of input tax credit. Now the manner of availment of ITC. The manner of availment of ITC concern IGST payable. For IGST, first we have to use IGST credit, right? And next we have to use CGST credit. And still, if there is any liability, yes, we can use SGST credit. Is it clear? But instead of that, let me give another statement which will be useful for you. Yeah, suppose IGST, CGST, SGST or UTGST, right? Number one, input tax credit. Suppose we have a GST payable. GST payable. Suppose we have IGST liability, CGST liability, and SGST liability, right? We have a 3 liabilities. Now in this situation, less input tax credit. First one, suppose let us assume we have a IGST credit. IGST credit first we have to use to set up the liability of IGST. After using against the IGST liability, still you have any excess credit. Such excess credit can be used against CGST or SGST in any proportion. There is no priority. But first you have to make it IGST credit as a nil. First you have to make it IGST credit as a nil. First, after using of the IGST credit, that is, once you made IGST credit nil, then start with CGST credit. Right, CGST credit first you have to use to set up the liability of CGST. Still you have an excess credit, then use for IGST liability. Use for IGST liability. Sir, CGST credit can be used against the SGST liability? No. Okay. And the third one, SGST credit. SGST credit must be first used against SGST liability. Still you have an excess credit. Such excess credit can be used against IGST. And SGST credit cannot be used against CGST liability. Okay. So first, IGST credit can be used against IGST liability, and if you have any excess credit, such excess credit can be used against CGST or SGST liability in any proportion. Second, CGST credit must be used for against CGST liability. Still, if you have an excess credit, then you can use for IGST liability. CGST credit cannot be used against SGST liability, and vice versa. And the remaining liability will become net GST payable. What's that? Net GST payable. Are you clear with this? Any doubt? So this is the manner of availment of ITC. And the next, legislative framework. The legislative framework concerned in India, we have one CGST Act, right? One UTGST Act, and compensation cess 1. And SGST Acts concerned, we have a SGST Act for all the states, right? So out of 27 states, and apart from that, Pondicherry, New Delhi, Jammu and Kashmir, right? Even these 3 union territories are intended to follow SGST Act only, right? So SGST Acts. so that all the states are intended to follow. All the states are intended to follow SGST acts. So that for every state there is a one SGST act. And finally, which act we have to learn for the purpose of the examination? Please remember CGST Act. We are learning CGST Act, and the same provisions will be applied for computation of the SGST or UTGST. We will learn CGST Act. The same provisions will be applied for computation of liability, input tax credit, registration, etc. for SGST. That's it. Next, GST Common Portal. Next important question. Very, very important. Out of the GST Common Portal, you will get question like this. What are the functions of the GST? And that's it. Right? So the last one, it is GST Common Portal. What is the GST Common Portal? GST Common Portal is a common website maintained by the central government and state government. Actually, as we know, before introducing of GST, central government was supposed to maintain the details of the central excise service tax, right? The state government maintaining the details of the VAT and CST. So earlier, we don't have a consolidated statements or consolidated information with the central government. But now under the GST, central government and state government combinedly incorporated a company which is called GSTN Limited. GSTN Limited. It is a Section 8 company. Section 8 company, that is non-profit oriented organization. So that at the end of the name, using the words limited or private limited is not mandatory. So now it is called as GSTN, Goods and Service Tax Network. So GSTN, it is nothing but it is a common database where the GST information will be stored, or we can retrieve the entire information from this portal. Suppose simply we can say for Instagram, for Facebook, there is a single database. Suppose across the world, wherever you are located, if you want to access Facebook account, you have to log into the Facebook, right? If you want to log into the, if you want to access account of the what is it called, Instagram, you have to log into the Instagram app, right? In the same way, across the country, wherever you located, whether you may be a taxpayer, government officer, banker, advocate, chartered accountant, in relating to the GST matters, you have to access a single database, that is GSTN, Goods and Service Tax Network. This website can be accessed through www.gst.government.in. So the functions of the GSTN: facilitating registration. If you want to obtain registration, you have to make an application in GST Common Portal, the first one. And the second one, forwarding the return to central and state authorities. Suppose where an assessee filed the return, whether such return has to be processed by the central officer or state officer, such forwarding work will be done by the Goods and Service Tax Network. Third one, computation and settlement of IGST. As you know, IGST is the revenue of the central and state. So for segregation or distribution of the revenue in between central and state, no approval is required. Such distribution is done by the Goods and Service Tax Network. Next, providing MIS reports to the central and state officials. Suppose being a state officer or central officer, if you want to know information, that is MIS reports concern, those are the reports which will be useful for decision making. Suppose simply we can say, suppose we have a collection of 1 lakh rupee worth of GST amount. With that, we cannot take any decision. Suppose on state wise, tax revenue statement is available, or product wise revenue details are available, service wise details are available, then such report will give a support or a content for taking decision making, right? That is called MIS report. Such type of the MIS reports will be generated by the Goods and Service Tax Network. And apart from that, input tax credit matching engine work is done by the Goods and Service Tax Network, right? So these are the functions of GSTN. And the next one, Suvidha providers, just it is given for your knowledge purpose, not that much of important, right? So just we completed the topic of introduction to GST. And the next chapter we are going to start with, it is supply. Hi, hello everyone. Now we are going to start with the topic of supply under GST. Section 7 and 8 of CGST Act deals with supply. Section 7 deals with meaning and scope of supply. Section 8 deals with composite and mixed supply, right? Now first we are going to start with section 7. Now section 7 subsection 1 deals with supply and supply includes. Section 7 deals with supply excludes. And section 7 subsection 3 deals with government reserved a power to notify a transaction, even though it may be a supply of the good, government reserved power like as to notify it is as a supply of service. Suppose where a transaction is a supply of the service in general, but the government reserved power to notify it is as a supply of the good. Such power has been reserved under 7 subsection 3. Now we are going to start with 7 subsection 1 clause A. All forms of supply of the goods or services for a consideration by a person in the course or furtherance of the business, it will become supply. So simply we can say a transaction to become as a supply, 5 conditions has to be satisfied. First of all, there must be a supply of the good or service. Number 2, supply should be made for a consideration. And number 3, supply should be made in the course or furtherance of the business. And the fourth one, supply should be made by a taxable person. Finally, it should be a taxable supply. Right? When these 5 conditions are satisfied, then it will become supply. Suppose take an example, we are intended to buy a car from the showroom. The value of the car, it is, let us assume 20 lakhs. Now, purchasing of a car from the showroom, whether it will become a supply or not. Let me ensure. First of all, 5 conditions. What is the first condition? There must be a supply of the good or service. Purchase of car is a good. So first condition is satisfied. Number 2, there should be a consideration. Yes, there is a consideration worth of 20 lakhs. And third, there should be a furtherance of the business. Now the showroom person intended to sell the car in the course or furtherance of the business, right? He's not doing any charitable activity, right? No, he is intended to do the business. As part of his business, he is selling car. And the fourth one, supply should be made by a taxable person. What is the meaning of the taxable person? Taxable person means a person who is liable for registration under the GST Act. A person who is liable for registration under the GST Act, or a person who obtained the registration. Both. A person who is liable to be registered as well as a person who obtained the registration. As you know, a person who is dealing with the car, obviously his aggregate turnover will be more than exemption limit or threshold limit, so that he obtained the registration. So he became taxable person. Fourth condition also be satisfied. And the fifth one, supply should be a taxable supply. Obviously, car is a taxable supply which is leviable to GST. Here, 5 conditions has been satisfied so that it will become supply. Are you clear with this? Any doubt? Now, out of these 5 conditions, the first one, what is the meaning of the good or service? Now, first one, all forms of supply of the good or service. What are the different forms will be treated as a supply? What are the different forms that could be treated as a supply? Suppose if we come across a transaction of a sale, transfer, barter, exchange, license, lease, rental. All these transactions having their different meaning and different context, right? But for the purpose of the GST Act, sale, transfer, barter, exchange, license, lease, rentals, whatever the meaning you assign, all these things will become supply. You have to say it is as a supply. Suppose when I'm intended to sell this battery, it is a sale. Yeah, in general it may be a sale, but for the purpose of GST Act, it will become supply. That's it. Are you clear? Suppose where I'm producing a different type of the electrical goods, okay, different type of the electrical goods. After manufacturing of these products, I'm transferring all these goods to my godown. Yeah, it may be it may not be treated as a sale. It may be treated as a transfer. Okay, it may be a transfer, but for the purpose of the GST, it will become supply. So different forms, whether it may be sale, transfer, barter, exchange, license, lease, rentals, right? All these things will be treated as a supply, and those may be goods or services. So what is the meaning of the good? Good means every kind of movable property. Every kind of movable property will become good. So what are the things that we can say it is as a movable property? Movable property means where we can transferable a property from one place to another place without substantial damage. Without substantial damage. Those we can say as a movable property. Are you clear? Suppose when you are able to transfer from one place to another place, but substantial portion of the asset getting damaged, those are not movable. That is, those are immovable. It won't be treated as a good. Best example, building. Building is immovable, so that it is not a good. So that on sale of building or land, we are not liable for payment of the GST. Reason, land and building, those cannot be movable from one place to another place. But by using of your advanced technology, it may be movable from one place to another place, but substantial portion of the asset will get damaged, so that those are immovable and thereby not goods. When those things are not goods, not liable for payment of GST. Are you clear? And the next one, so supply of goods. Goods means every kind of movable property, but excludes money and securities. Money and securities. Money and securities. Even though securities and money looking like as a good, easily transferable from one place to another place, but those are excluded from the definition of the good. Suppose where a company, let us assume, taken an example, Zomato company came to the public issue and it raised the funds 1000 crores from the public. Now, so Zomato company issued 1000 crore rupees worth of shares and received 1000 crores of money. Can you say it is as a good? As far as sale of good acts concerned, shares and securities might be good, but for the purpose of the GST Act, money and securities, neither a good nor a service. Neither a good nor a service. In this situation, whatever the securities issued by the company, in relating to that money, no need to pay any GST. Reason, it is excluded from the definition of the good. Right? Okay. Next, goods includes actionable claim. What type of the actionable claims will become good? What type of the actionable claims will become goods? Let me explain. Yeah. Actually, good means every kind of movable property, excludes money and securities, but includes actionable claim. Actually, there is an amendment in actionable claims, so that I have to explain. In detail. So, actionable claims concern, it is a claims to unsecured debt. What is it called? Claims to unsecured debt. It's called actionable claim. Suppose take an example, in relating to the land, there is a dispute in between two brothers, so they file suit against each other in front of the court, and finally court given a decision. The elder brother has to give a compensation of 10 lakh rupees worth to the younger brother. Now the younger brother has a right to recover 10 lakh rupees from the elder brother, right? This is an actionable claim. Claims to a unsecured debt. When the court given an order like that, automatically the person who got the decision in favor of him, he has a right to recover, right? It is an actionable claim. Is it? One example. Another. Suppose if you have a promissory note or bill of exchange, on maturity date, you have to present the instrument and you have to claim the amount specified on the instrument. It is also be one of the actionable claim, right? And the third one, suppose sale of lottery tickets, betting tickets, sale of lottery and betting tickets. These things also be treated as an actionable claims. Now, for actionable claims, different things and different examples of them. Out of which will be treated as a good and on which we are liable for payment of GST. Actionable claims here includes and excludes. This includes and excludes only for the purpose of the interpretation, not specifically given in the Act. Here the includes concern. Betting, gambling, lottery tickets, and the new amendment, online gaming, horse racing, casino. Only these actionable claims will be treated as a goods. Only these actionable claims will be treated as a goods. Remaining actionable claims, whatever the examples we discussed, promissory note, bill of exchange, and where a dispute arises in between two people and they are filing suit against each other, all those actionable claims are neither a good nor a service. Other actionable claims, that is presentment of the promissory note, bill of exchange, check, where the government given any ex gratia, compensation, all these things are. Those are covered under Schedule 3. Schedule 3 deals with neither a supply of the good nor a supply of the service. Are you clear? So actionable claims concern only these 6 items will be treated as a goods. The remaining actionable claims neither a supply of the good nor a supply of the service. Thereby, we are not liable for payment of any GST. Are you clear? And the taxability of these things we will discuss in the chapter of the value of supply. The taxability or the value of supply, the time of supply in relating to these actionable claims we will discuss in the chapter of the time of supply and value of supply. But till the time, just understand the meaning of the actionable claim. Actionable claim means claims to a unsecured debt. Next. Actionable claims. Next, growing crop, gross and things attached to forming part of the land or which are agreed to be separated. So growing crop and grass and things, these will be treated as a goods when you are making an agreement to separate from the land. Suppose take an example, if you are buying an agricultural land, can you say it is as a good? No. Suppose where an agricultural land along with trees plus land. When you are purchasing trees plus land, that is where the trees are fastened to the earth or attached to the earth. Along with the trees you are purchasing land. Can you say it is as a good? No. Reason? There is no agreement to separate trees from the land. And the third example, you are intended to buy any logs or crop, etc. Right? You are not intended to buy the immovable property. You are intended to buy things, crop, grass after separating from the land. When you are entering into a contract, to purchase something which is separated from the land, that will become good. So when the crop is separated from the land, then only it will become good. When you are purchasing the entire crop or trees, when those are fastened to the earth, it won't be treated as a good. Are you clear? So good means every kind of movable property, excludes money and securities, include actionable claims. Next, growing crop, grass and things attached to forming part of the land which are agreed to be separated. Next, service definition. Service means anything other than goods. If it is not a good, automatically it will become service, right? So actually, if the legislature want to give an explanation about the service, actually it will goes to the more than 10 pages. When we were dealing with the service tax, in the service tax under the earlier indirect tax regime, the service definition, we were supposed to give an explanation for 6 hours to 10 hours. Approximately it will cover 10 pages to 12 pages of content. But by removing all such content, a simple definition has been provided under the GST, like service is nothing but other than good. If it is not good, if it is not covered under the definition of the good, it will become service. Now service includes activity in relating to use of money. Activity in relating to use of money will become service. Sir, how the activity in relating to use of money will become service? Suppose where your parents deposited 10,000 rupees in their bank account and you are getting such 10,000 rupees from the ATM machine. Can you say it is as a supply of service under GST? Actually, where your parents deposited 10,000 rupees and you are withdrawn such amount from the ATM, actually it is a service. Okay, I'm accepted. But for the purpose of the GST Act, it is not a service. It is called money to money transaction. Money to money transaction. There may be a service. Okay, I'm accepted. There may be a service, but money to money services excluded from the definition of the service. Okay, so whatever the 10,000 rupees withdrawn, it is not a service, neither a supply of the good nor a supply of the service, no GST. Okay, but you are using ATM now, and debit card charges are on yearly basis. In April month or May month, the banker may charge 150 rupees to 200 rupees. that will become service. Reason that ATM charges, ATM facility, it is an activity in relating to use of money. For using of money, they are providing separate service that is called ATM service, and whatever the charges charged 150 or 200 rupees worth of debit card charges, it will become supply. The point number one. And the point number two, suppose ATM transaction you can do in a month maximum of 3 to 5, right? Once the 3 to 5 transactions are over, automatically per transaction there will be a charge of 20 rupees to 30 rupees, right? Again, that will become service. That will become the service. Suppose eighth transaction, let us assume eighth or ninth transaction I am doing in ATM, 10,000 rupees withdrawn, and 30 rupees are transaction charges. Now 10,000 rupees is not a service, but whatever the 30 rupees charge for that transaction, it is activity in relating to use of money, that will become service. That's the point number one. And point number two, conversion of money from one form of currency or denomination to another denomination for which a separate consideration is charged. For which a separate consideration is charged. For which a separate consideration is charged, to that extent it will become service. Are you clear with this? So includes activity in relating to use of money, number one. Number two, conversion of money by one form of currency or denomination to another form or denomination. Suppose taking an example, we handed over 10 lakh rupees worth of money cash to the banker, and banker intended to provide, let us assume, 50,000 worth of US dollars. Sorry, 50,000 US dollars. That's it. Whether it is a supply of the good or service. Whether it is a supply of the good or service. Nothing, sir. It is neither a supply of the good nor a supply of the service. Reason? Just we converted one form of currency to another form of currency. There is no separate commission. There is no separate consideration. When there is no separate consideration, it is not a supply. Suppose for this transaction, to facilitate this transaction, banker intended to charge 500 rupees as a transaction charges. What is the amount? 500 rupees as a transaction charges. Then to that extent of 500 rupees, it will become service. But 10 lakhs or 50,000 US dollars, neither that amount. Suppose neither the 10 lakhs nor the 50,000 US dollars, it won't be treated as a service. Only to that extent a separate consideration is charged, it will become service. Are you clear? So just we completed the first point. Supply includes all form of supply of the good or services. Different form of the supplies, definition of the good and definition of the service. And the second one, supply should be made for a consideration. What is the meaning of the consideration? Consideration means something in return. What is that? Something in return, right? But in GST, 4 forms of consideration has been given. That is the first one, payment in money. When you are purchasing a good and money given, that will become consideration. Suppose otherwise, instead of money, if you are giving kind, that is also be a consideration. Suppose you are intended to buy my class. So when you are purchasing my class, if you are making payment of 10,000 rupees, that is a one form of the consideration. Suppose instead making payment of 10,000 rupees of money, you handed over one laptop to the institute, let us assume, or one mobile phone to the institute. Now here the consideration, it is kind. Institution received consideration in the name of kind. Third, monetary value for any act, it is also be a one of the form of consideration. Suppose while you are joining to the class, you requested the management, sir, after completion of my classes, I am intended to give a service for our institution and I will render services for a period of 6 months. And today I am not in a position to pay any fees. So thereby institution also be accepted and you are getting coaching classes from the institution. You didn't pay single rupee. Is there any consideration? Yes, obviously there is a consideration. Even though you didn't make payment of single rupee, but you are intended to provide monetary value of any act. After completion of classes, you are intended to serve 6 months of period of service. And whatever the amount chargeable to that extent of service, that will become service. That will become consideration, right? So consideration may be money, kind, monetary value of any act. And the fourth one, it is forbearance for the supply. If you are foregoing something, it is also be a consideration. So what is the meaning of the foregoing? Foregoing means give up. Foregoing a right. Suppose taking an example, when we are starting a class, suppose we are talking, suppose we are creating something disturbance to the neighbors, right? Actually, when we are disturbing neighbors has a right to file suit against the institution. So when the neighbors are intended to file suit against the institution, we given a small offer to their children. Suppose, sir, suppose if your children are joined in our institution, we won't charge any fees. So automatically that children's join for CA inter or CMA inter or final, and we are not intended to charge any fees for their children. Now, whatever the service given by the institution to the neighbor students, whether it will become a supply. Actually, neighbors has a right to file suit against us. Reason, when we are disturbing others, automatically other people has a right to file suit against us, but they are forgoing their right. They are forgoing their right. So we are providing classes, they are forgoing their right. So for our classes or for our services, what is the consideration? Forgoing their right is the consideration. That is forbearance for the supply. It is a one of the form of consideration. In such a manner, we can identify four forms of consideration. The first one, it is payment in money, kind. Third one, monetary value of any act. Fourth one, forbearance for the supply. Totally four forms of consideration. It is might be paid by the recipient or any other person. Like consideration might be paid by the student or their parents, or even on behalf of the student. A third party also may pay such consideration, but still it will be treated as a consideration. And the third one, excluding subsidy given by the central or state government. Subsidy given by the government is not a consideration. So what is the meaning of the subsidy given by the central or state government? Suppose take an example. Suppose where a notebook company, let us assume ITC, manufacture notebook and supplies to the student. Actually, the worth of notebook, it is, let us assume, 80 rupees. Now, the ITC company collecting only 30 rupees from the student, and from the central government or state government, let us assume they are getting 50 rupees. In this situation, ITC company received 80 rupees total in total. But what is the value on which we are liable for payment of GST? Or from the GST context, what is the amount that we have to reckon as a consideration? Here, only 30 rupees will become consideration. Whatever the amount given by the government, this 50 rupees in the name of subsidy or grant, this is not a consideration. Are you clear with this? Done. So the second one, supply should be made for a consideration. We discussed about the four forms of consideration. The first one, consideration in money, kind, monetary value of any act, and the fourth one, it is forbearance for the supply. These are the four forms of consideration. And the third one, supply should be made in the course or furtherance of the business. When we are doing any activity, there must be an intention to do the business. Suppose when we are going to the market, we bought two calculators, one for us and another one is for your friend. So when you are handed over calculator to your friend and he given 200 rupees worth. So your friend saying that, "Arey, you brought my calculator for me, it's enough. Take your 200 rupees. So when your friend given 200 rupees to you, can you say it is as a business? No, reason, you are not intended to do the business. You might be purchasing a calculator for the benefit of your friend, and when you are handed over calculator to your friend and he is making payment of 200. But only because of that, we should not say there is a furtherance of the business. There must be an intention to do the business. There must be an intention to do the business. Then only it will be treated as a supply. Suppose if there is no intention of doing of the business, remaining four conditions might be satisfied. It won't be treated as a supply. Suppose in the given example, that is you are purchasing calculator for your friend, there is a supply of the good. Okay, there is a good. There is a consideration, but there is no furtherance of the business. So that it won't be treated as a supply. So whatever the 200 rupees you received from your friend, not liable for payment of GST. So these are the different situations where the government notified these are the areas there will be a furtherance of the business. Suppose if you are doing any activity, whether it may be trade, commerce or manufacture, without any monetary benefit and without any time limit, but still it will be treated as a supply. Okay. And the second one, supply or acquisition of the goods, including capital goods and services. Suppose before starting of the business, if you are intended to buy anything for the purpose of the business, there you are intended to do the business. Might be business commenced after 2 months or after 3 months, But today you are intended to buy anything in relating to the business, it will be treated as in the course or furtherance of the business, and whatever the GST paid on it, you are eligible for availment of ITC. Next, provision for facility by club or association, etc. And this provision we will cover in section 7, subsection 1, clause AA. There is a separate line item. And fourth one, admission for consideration to any premises. To any premises entrance for park, amusement, or temple. In those areas, whatever the entry ticket you are making, whatever the payment you are made, it shall be treated as a in the course or furtherance of the business. So such entry ticket is taxable. Next, service as a holder of office. Suppose as a director or as a statutory auditor of a company, if you are accepting a position in a company, it is in the course or furtherance of the business, right? And apart from that, activities of a race club, where a race club, the totalizers are providing services to the members or the persons who are participate in the race, right? That will become in the course or furtherance of the business. And apart from that, where the race club granted license to the bookmaker, it is for booking of such stake, and whatever the amount charged from him, it will become service. Actually, no person has a right to book the ticket on behalf of the race club, and but where the race club given license to the bookmaker, and for that license, whatever the amount charged, it will become in the course or furtherance of the business. And apart from that, the services of the government as a public authority, it is also in the course or furtherance of the business. Suppose where as a public authority, central government providing railway services and the state government providing road transportation services, those things will be treated as a in the course or furtherance of the business. Okay, so these are the examples or situations which are notified by the government till the time. And the next fourth one, supply should be made by a taxable person. Who is a taxable person? A person who is registered or liable to be registered or liable under section 22 or 24. 22, person liable for registration. 24, mandatory registration, right? The person who satisfied this definition, he will be a taxable person. Suppose take an example where a person, his aggregate turnover exceeds threshold limit or exemption limit, thereby he is liable. He is liable for registration. Thereby he will be treated as a taxable person, right? And suppose where his aggregate turnover exceeds, not only liable, he obtained the registration. He obtained registration. He is also be a taxable person. Are you clear with this? And suppose where another person whose aggregate turnover less than threshold limit is not liable for registration, but voluntarily he obtained the registration. What is that? Voluntarily he obtained the registration. He is also be a taxable person. So once you became a taxable person, and whatever the supplies you are doing on which you are liable for payment of GST. So taxable person means a person who is liable for registration, or where a person obtained the registration, or even where a person voluntarily registration obtained. All these peoples will be treated as a taxable persons, right? And the last one, there should be a taxable supply. What is the meaning of the taxable supply? Taxable supply has been broadly defined and means any supply of the good or service or both which is leviable for tax under the GST law. Which is leviable for tax. Suppose take an example. This is the keyboard, right? So this is the taxable supply. How we can say it is as a taxable supply? This is the good, supply of the good on which GST is leviable. So that this is the supply of the good. Are you clear with this? Suppose if there is any alcohol bottle. Suppose take an example. I don't know, this is not the alcohol bottle. Suppose if it is an alcohol bottle, can you say it is as a taxable supply? No. Reason? This is the supply of the good, but GST is not leviable. When GST is not leviable, it is not a taxable supply. Suppose if I am purchasing this alcohol bottle, let us assume this alcohol bottle worth 500 rupees. There is a good, there is a consideration, there is a furtherance of the business. Might be he obtained the registration, he might be a taxable person, but it is not the taxable supply. So that even though it may be sold at the price of 500, we are not liable for payment of GST. Fifth condition is not satisfied. That is taxable supply. Are you clear? So in India, any transaction to become as a supply, all these 5 conditions has to be satisfied. What is the first condition? There should be a supply of the good or service. And the second one, supply should be made for a consideration. And the third one, supply should be made in the course or furtherance of the business. Fourth one, supply should be made by a taxable person. Fifth one, supply should be a taxable supply. On satisfy of all these 5 conditions, a transaction will become supply, thereby we are liable for payment of GST. So just we completed 7.1a, and a new provision has been brought into the picture, that is 7.1aa. Any doubt up to this part? Please pause the video and go through once up to this part. Now the provision of section 7 subsection 1 clause AA. Activities or transactions by a person other than an individual to its members or constituents or vice versa for cash or for deferred payment or other valuable consideration. It will become supply, where a supplier is other than an individual. Other than individual. Providing services to its members. Providing services to its members or constituents for any cash or deferred payment, that is for immediate payment, any money or future consideration, that is simply we can say a credit transaction. Now this transaction will become supply. Supplier other than an individual, that is nothing but club, society, company, body of individuals, etc., where such club or society providing services to the members for any consideration, that is, it may be in the form of the cash or deferred payment, it will be treated as a supply. Suppose simply we can say, suppose this is an apartment, right? So collectively collectively we can say apartment is an association of the person. Now a person who is residing in flat, he may be a owner or tenant, he will become member of association of person, right? That is member of the apartment. Now the apartment association will provide service to the owner or tenant. What is the nature of the service? Cleaning, water, maintenance, right? Suppose maintenance of the infrastructure, lift maintenance, security maintenance, right? All these services will be provided by the apartment association to the members for consideration. Such consideration may be called in the name of maintenance. You may come across the word of apartment maintenance, right? That is a consideration. Now it will become a supply. So what is the logic or reason behind to notify this transaction as a supply? What is the logic behind? I think in the regular class we discussed elaborately, but simply let me say here, where the group of people coming together and collectively they are rendering services for themselves or supplying goods for themselves. And when the department intended to levy GST on it, they are arguing like this. Sir, there is a concept of mutuality. We are coming together, we are rendering services for ourselves. We are like as a family. Why should we have to pay GST to the government? Like that, few business people or few associations are started to argue in front of the department. So forcibly the government of India introduced a new provision under 7 subsection 1 clause AA. Are you clear? And the next one, 7.1b. Import of service for a consideration whether or not in the course or furtherance of the business. Import of service. If there is an import of service, irrespective of the fact whether there is a furtherance of the business or not, it will become a supply provided there should be a consideration. Suppose take an example. We are located in India. Suppose we are getting Facebook or Instagram services. This is an import of service. When there is an import of service like this, and automatically there will be a consideration. Suppose for Facebook or Instagram account, suppose we are using free account and we are not getting any advertisement or promotional services, so that it won't be treated as a supply. Reason, the general Facebook and Instagram account, no need to pay any money. Even there is an import of service, there is no consideration, so that it is not a supply. But suppose if you want to boost up a post, or a pic, you have to make the payment. Or if you want to give an advertisement in Facebook or Instagram, you have to make the payment. Such service is called import of service. Reason, supplier is located outside India recipient located in India. That is called input of service. In this situation, if there is a consideration, it's enough. Whether there is a furtherance of the business or not, it is irrelevant. Suppose your personal photo has been promoted, or any your personal occasion or any event has been promoted. Even it may not be in the course or furtherance of the business. You are not intended to do the business with such advertisement or promotion, but still it will become supply. So in India, any transaction to become a supply, there should be a furtherance of the business. Without furtherance of the business, one and only the taxable in India, that is called input of service. That's it. Exception to the furtherance of the business, it is one and only the exception, that is called input of service. 7.1b. Next, 7.1c. 7.1b is exception to the furtherance of the business. 7.1c is an exception to the consideration. In India, any transaction to considered as a supply, there must be a consideration, right? But by virtue of 7 subsection 1 clause C, by referring to the schedule 1, 4 transactions has been covered till the time. How many transactions? 4 transactions. For those 4 transactions, even if there is no consideration, it will become supply. What are those 4 transactions? No. 4 transactions. Number 1, the activity specified in schedule 1 made or agreed to be made without consideration will become supply. What are those? The first one, permanent transfer or disposal of the business asset where the input tax credit has been availed on such asset. So where you are purchasing any capital asset for the purpose of the business and input tax credit availed, it will become business asset. Suppose taking an example. This is the laptop, right? Which is a business asset. Reason, I bought this property, I bought this asset for the purpose of the business, and whatever the GST paid on it, I avail input tax credit. Now when I avail input tax credit, it will become a business asset. Once it became a business asset, lifelong I have to use for the purpose of the business. Is it clear now? Suppose after 2 years, I am intended to sell in open market as a secondary product, suppose in OLX or any other. Whether it will be treated as a supply? Yes, obviously. Reason, it is a business asset. Once a business asset, any asset purchased and input tax credit availed on it, it will become a business asset. Such business asset sold in the near future for any consideration, it will become supply. That is example number 1. As per 7.1a, it will become supply. Reason, there is a consideration. When there is a consideration, no need to refer 7.1c. As per 7.1a, prima facie, we can say it is as a supply. Now the example number 2, I bought this asset, availed input tax credit, it became business asset. After 2 years, I am intended to give as a free of cost to my article student or to a friend. Can you say it is as a supply? Yes, that is the intention of the legislature. In 7.1c, where a business asset given at free of cost, it will become supply. So permanent transfer or disposal of the business asset, even for without consideration, it will become supply. Suppose take another example. This is my mobile phone, right? Oh, I bought at the price of 60,000 rupees and did I claim any input tax credit on it? Reason, it is not in my business asset. Sorry, I'm not intended to avail input tax credit. Reason, I'm using for personal as well as the business, but finally, I'm not intended to get any input tax credit. So it is not my business asset. If I'm selling in open market, whether it will become supply? No. Reason, I'm not intended to do the business. Point number 1. Point number 2. Suppose when it is given as a free of cost, or I'm selling in OLX, whether it will become a supply? No. Reason, it is not my business asset. Now, what is the difference between these 2 items? When I'm given free of cost this asset, it became business, it became supply. And when I'm giving my mobile phone at free of cost, it won't be treated as a supply. Reason, this is my business asset. I avail input tax credit on it. If it is given at a free of cost, it will become supply. This is not my business asset. So even if I'm intended to sell or intended to give at free of cost, it won't be treated as a supply. That is 7 subsection 1 clause, the first point. Permanent transfer or disposal of the business asset. Are you clear? Second, supply of the goods or services are both between distinct persons. Who are the distinct persons? Who are the distinct persons or related persons? Where any supply of the good or services both between distinct persons or related person. Supply in between distinct persons and related persons, even for without consideration, it will become supply. Who is the distinct person? Who is the distinct person? Distinct person concern, as you know, where a person having place of business in one state, he has to obtain a single registration. Where he obtain registration in another state, thereby he has to obtain a separate registration, right? Where a person obtains two separate registration, those two people will become distinct persons. And if any transaction taken place in between these two people, it will become supply. Suppose you are intended to start a mobile phone shop in Maharashtra, that is Pune. Let us assume Pune. You obtain the registration in the state of Pune, and you are intended to start another branch in Gujarat. In Gujarat also you obtain a separate registration. So you have a two branches, one in Maharashtra and another one is Gujarat. Right? When you obtain separate registration, even though you are the owner, single person, right? For these two, for you, these two businesses are same. But for the purpose of the GST Act, we have to consider these two branches as a distinct persons. Are you clear? Any supply of the good or services in between these two branches for without consideration will become supply. That is the second one, right? Third one, supply of the goods. In the second point, apart from that, you have to remember related person, right? The persons who are the related. Suppose I am the registered person, right? I am to whom the related, I will become related person. Any transaction taking place in between related persons in the course or furtherance of the business, even for without consideration, it will become supply. Suppose taking an example, I'm a partner in a partnership firm, right? In that partnership firm, all the partners will become related persons. If you refer the related person definition, the persons who are legally recognized partners, they are the related persons, right? Suppose where I'm intended to file the return of one of my partner, who is a related person, I'm not getting any consideration from him, but still it will become supply. Reason, we both are related. Second. Third one, supply of the goods in between principal to an agent. Where goods are supplied in between principal to an agent, for without consideration, it will become supply. But it will be depend upon the effect. Suppose where a principal supplied goods to an agent, and now the supply is for without consideration. Here there is no consideration. But 7.1c is saying that supply of the goods in between principal to an agent, for without consideration will become supply. When it will become supply? It will be depend upon the fact whether agent issued invoice in his own name or in the name of the principal. When agent intended to make supply in the name of the principal, in such a situation, it is not covered in 7.1c. That is, it is not a supply. It is not a supply. Reason, where agent getting goods from the principal, but still he is intended to supply in the name of the principal. In such a situation, whatever the goods transferred from principal to an agent for without consideration, it is not a supply. But where principal getting goods from the, agent getting goods from the principal, right? And agent supplying goods to the third party or to others, and invoice issued in his own name. That is, agent is intended to buy. Agent intended to issue invoice in his own name. Then it is the situation which is covered under 7.1c. Whatever the goods supplied from principal to an agent for without consideration, that will become supply. Right? This is the third transaction. And the fourth one, import of service by any person from a related person or from any of his other establishment located outside India in the course or furtherance of the business, it will become supply. Right? So import of service, even if there is no furtherance of the business, it will become supply by virtue of 7.1b, provided there must be a consideration. But for 7.1c, even if there is no consideration, it will become supply, provided supplier and recipient both must be related persons or distinct persons. And finally, it should be in the course or furtherance of the business. Are you clear? So this is the simple chart which will give a clear picture about the 7.1b and 7.1c. There should be import of service. Yes. Consideration for 7.1b is required. For 7.1c is not required. And furtherance of the business for 7.1b, it is not required. But for 7.1c, furtherance of the business is required. But as per 71B, the supplier and recipient no need to be related persons. But for 71C, supplier and recipient both must be related or distinct persons. Are you clear with this? 71B and 71C. So, Schedule 1, 4 transactions has been covered. First one, permanent transfer or disposal of the business asset. Number 1. Number 2, supply of the goods or services in between distinct or related person. Third one, supply of the goods from principal to an agent, and where the agent issued invoice in his own name, then goods supplied from principal to an agent for without consideration will become supply. Fourth one, import of service in between related or distinct persons, even for without consideration, but which is in the course or furtherance of the business will become supply. And the next we are going to start with Schedule 3 negative list. Up to this part we completed 71A, 71AA, 71B, 71C. Now we are going to start with 7 subsection 2 clause A, that is nothing but Schedule 3. The matters which are covered under Schedule 3 transacted for even without consideration, it will become supply. Is it? Sorry yaar. Schedule 3 negative list, it won't be treated as it won't be dealt with supply transaction. It will be treated a transaction which is neither a supply of the good nor a supply of the service. So the matters which are specified in Schedule 3, neither a supply of the good nor a supply of the service. Are you clear? That means the matters which are covered under Schedule 3, no need to pay GST. Come to the first point, services by an employee to employer. Where an employee providing services to the employer, thereby whatever the salary given by employer to employee, it is neither a supply of the good nor a supply of the service. Please remember, in the course of the employment, where the employer given salary, provident fund, bonus, gratuity, retirement benefit, all these are the benefits which are earned or accrued in the course or furtherance of the employment, or simply we can say in the course of employment, so that it is neither a supply of the good nor a supply of the service, on which either the employee or employer no need to pay GST. But one exception point you have to remember, where the employer given any gift to the employee and worth of such gift exceeds 50,000, that will become supply. That will become supply. And the second one, services by any court or tribunal, where the services provided by the court or tribunal and any consideration paid to the court or tribunal for acceptance of the case, actually it is called non-judicial stamp duty, on which no need to pay GST. Suppose if there is a dispute, you are intended to file suit against the other in front of the High Court. In such a situation, you have to make the payment of 5,000 rupees. On such 5,000 rupees, no need to pay GST. It is covered under Schedule 3. And the next, where the services given by the MP, MLA, Panchayat members, ward members, right? Or where a person holding position by virtue of the constitution, that is Prime Minister, President, or Supreme Court judge, right? All their remuneration, neither supply of the good nor a supply of the service. They are providing services to the government, no doubt. The government also making payment, maybe it may be in the name of the salary or honorarium or any other, but it neither a supply of the good nor a supply of the service, no need to pay GST. That is the second transaction. And the third one, first one it is employee-employee relationship, second one court or tribunal, third one is services by the MPs, MLAs or Panchayat members or a person who is holding position by virtue of the constitution. Next, fourth one, bumper offer, services of funeral, burial, crematorium, mortuary services or transportation of the deceased. For transportation of the deceased, neither a supply of the good nor a supply of the service. Are you clear? And the next, sale of land and building. Next one, it is sale of land and building. As we discussed in the definition of the good, sale of land and building, neither a supply of the good nor a supply of the service. But one thing you have to remember, at your own, if you are intended to get construction services, that will become supply. If you are getting any construction services, that will become supply and we are liable for payment of GST. And apart from that, where you are intended to buy any house or a flat, before issue of completion certificate by the local authority, that is before construction is over, if you are intended to buy such type of the house or flat, it will become service. So if you are intended to buy any house before issue of completion certificate by the local authority, that will become service. But once the construction is over, Completion certificate has been issued by the local authority, and if you are buying such property, neither a supply of the good nor a supply of the service. So finally, sale of land and building. Building which is constructed, which is completed, construction is over, neither a supply of the good nor a supply of the service. Next, actionable claims other than lottery, betting, gambling, casino, online gaming, horse racing, as we discussed in the definition of the good. Already I provided a simple chart, right? So these are the 6 items, neither a supply of the good nor a supply of the service. The first one, employee-employee relationship. Second one, service provided by the court or tribunal. Third one, MP, MLA, MP services, MP, MLA, ward member, panchayat member services. And the next one, services of funeral, burial, crematorium, including transportation of the deceased. And the next one, sale of land and building. And next one, it is actionable claims. These are the things which are covered under Schedule 3 as a neither a supply of the good nor a supply of the service. Are you clear? So we completed section 7. Now we are going to start with section 8. Tax liability on composite and mixed supply. What is the composite and mixed supply? Composite supply. What is the composite and mixed supply? So where you are intended to buy any product, actually there is a single product, single component. And where you are getting service, which is a single service, no need to refer section 8. Reason, there is no ambiguity in classification of the product. Are you clear? Suppose where you are intended to buy a product, apart from such product, you are getting other things, that is other products or other services, then ambiguity will arise. Why the ambiguity? Actually, which type of the thing or which type of the service I am getting? Are you clear? In such a situation, what is the nature of supply and what is the rate of GST? For all these purposes, we have to refer section 8. Suppose take an example, you are attending my class. And when you are attending for my class, suppose I am providing a notebook for you, or notebook or material, right? Coaching services, the rate of GST is 18%. And whatever the material I am providing to you, the rate of GST is 5%. Now, what is the nature of supply? Let us assume total fees, it is 10,000 rupees. Suppose if you consider it is as a coaching services, I have to pay 18% of GST. If you are considering it is providing material, the rate of GST will become 5%, right? So what is the nature of supply here? For that purpose, we have to refer section 8. Suppose when you are getting airline services, right? So on board, you may get few entertainment services, food and beverages, etc. On food and beverages, rate of GST is 5%. On entertainment, 18%. On airline services, 18%. Suppose if you are making payment of 25,000 rupees as a airfare, then what could be the rate of GST? For all these purposes, we have to refer section 8. So in section, when we have to refer section 8, apart from the supply of the good or service, where the supplier intended to supply any other goods or services, then only we have to refer section 8. Now the section 8 will put a small question to you. What is that? So what is the nature of supply? Whether it is a composite or mixed supply. When section 8 asking question like this, I don't know what is the meaning of the composite and mixed supply. That is my answer. That is my answer. I don't know what is the meaning of composite and mixed supply. The first, composite supply. Apart from the supply of good or service, supply of any other good or services are quite common in the ordinary course of the business. That is called composite supply. Apart from the supply of the good or service, supply of other good or services are quite common in the ordinary course of the business. That is called composite supply. Suppose if you are attending for my class, definitely I have to provide material. Reason? Student automatically will expect material. It is quite common in the ordinary course of the business. Now you are attending class for the purpose of the coaching, right? So here the coaching is the predominant nature. So that entire supply will be treated as a coaching services. So in a composite supply, it may consist 2 or more supplies, out of which you have to choose the predominant nature. The predominant nature supply will be treated as a principal supply. Are you clear? So when you are taking classes, apart from the classes, you are getting books, suppose some other water, electricity, fan, AC, etc. services. But out of which, what is the predominant nature? Such predominant nature supply will be treated as a principal supply. What is the basic purpose for attending of the classes? Coaching. So whatever the rate of GST applicable to the coaching, such rate of GST will be charged on total value of supply, being it is composite. Example number 1. Suppose consider another example. When you are purchasing a flight ticket, you are intended to get airline services. So apart from the airline services, you might be getting food, beverages, or few entertainment services. But here the predominant nature is airline services. So on entire flight ticket value, we have to apply the rate of GST applicable to the airline services. Are you clear? That is a composite supply. So then what about the mixed supply, which is not a composite supply, will be treated as a mixed supply. So any example, suppose if you are intended to buy a chocolate, you went to the Best Price, DMart or any other showroom, and there you come across a chocolate has been wrapped or mixed with the chips packet. Rate of GST on chips, let us assume 12%, and rate of GST on chocolate is 18%. Now, total packet value, let us assume 80 rupees or 100 rupees. Okay. Then what is the rate of GST? 12 or 18? Now you have to ensure whether it is a composite or mixed supply. In the ordinary course of the business, is it quite common to supply chocolate along with the chips packet or chips packet along with the chocolate? No. Even the customer also won't expect like that. So it is not a composite supply. When it is not a composite supply, simply it will become mixed. When it became a mixed supply, now we have to segregate what are the supply of the good or services involved and identify rate of GST for each supply. And you have to choose highest rate of GST, and such highest rate of GST will be charged on entire value of the supply when it became mixed supply. Suppose, let me give another example. I'm intended to buy a shirt. My budget is, let us assume, 2000 rupees. So when I entered into the shopping mall, there is a one combo pack, one shirt, one pant, one belt, one tie, and one watch. Right? Suppose one bracelet or chain. The total packet value is 3000. Okay. Actually, my budget is 2000 rupees for the shirt. But with the 3000 rupees, I'm getting all this product. So I'm intended to buy such product, that is with the 3000 rupees I'm purchasing total packet. Now in this situation, rate of GST on shirt is 5%, tie let us assume 12, on watch 18. Okay, so when different rates of GST are applicable to the different products and those are sold as a combo pack, that is artificially bundled, artificially mixed, what is the rate of GST? Simple, segregate all the products, identify the rate of GST for each and every product or service, and consider the highest rate of GST, and such highest rate of GST will be charged on total value of supply, being it is mixed supply. Are you clear? So section 8 deals with composite and mixed supply. So we completed the topic of section 7 and 8. Section 7 deals with meaning and scope of supply, and section 8 deals with composite and mixed supply. We completed the chapter of supply. Please pause the video and go through the entire chapter once. Thank you. Right. Now we are going to start with the topic of the charge of GST. What is the next topic? Charge of GST. Section 9 of the CGST Act. Section 9 of CGST Act deals with charge of GST. In this chapter, first we are going to start with the definition of the aggregate turnover. This is very, very important. Aggregate turnover from the examination point of view. So first of all, let me know what are the situations in which the definition of the aggregate turnover is required. Hello. What are the situations in which we have to refer the definition of the aggregate turnover? Actually, there are two situations. The first situation, it is whether you are liable for registration or not, to ensure whether you are liable for registration or not. That is, what is your aggregate turnover, whether your aggregate turnover exceeds threshold limit or not. To ensure such fact, we have to refer the definition of the aggregate turnover, right? And the second one, whether you are eligible for composition scheme. What is the second one? Composition scheme, whether you are eligible for composition scheme or not. For these two purposes, you have to refer aggregate turnover, right? So what are the elements that has to be includable in aggregate turnover? What are the elements that has to be includable in aggregate turnover? While computation of the aggregate turnover, first we have to include all taxable supplies. And one more thing you have to remember, all taxable supplies, these are the supplies across the country, not only the single state. While computation of the aggregate turnover, you have to include all taxable supplies made across the country, number one. And number two, export of goods or services. Exports of goods or services are includable. And the third one, all exempt supplies. all exempt supplies has to be includable. Now in this exempt supplies, we have to include three elements. Exempt supply means, as you know, nil rate of supply, number one, and number two, supplies which are exempted, under section 11 of CGST Act, right? And the third one, non-taxable supplies. Third one it is non-taxable supplies. Are you clear? So in aggregate turnover, we have to include all taxable supplies, number one, number two, export of the goods or services, and number three, exempt supplies. Exempt supplies concern nil rate of supply, exempted under section 11 of the CGST Act, and third one, non-taxable supplies. And the fourth one, branch transfers. Fourth one, it is branch transfer having same permanent account number. Suppose where the supply is taken place in between distinct persons. Who are the distinct persons? Having same permanent account number, obtained separate registration is called distinct persons, right? So any supplies taken place in between distinct persons, that is called branch transfer, having same permanent account number. All these elements has to be includable. And the next one, excludes. What are the elements that can be excludable from aggregate turnover? First one, any CGST, SGST, UTGST, or IGST, or compensation cess payable. These things can be excludable from an aggregate turnover. Suppose, let me give an example where a person preceding financial year turnover, as you know, where a person aggregate turnover in preceding financial year does not exceed 150 lakhs, he is eligible for composition scheme in the current financial year, right? Now in the preceding financial year, where a person turnover is like this, suppose assume 140 lakhs and GST paid, let us assume 25 lakhs. Now in this situation, total turnover became 165 lakhs. Now in this situation, my question it is, what is an aggregate turnover of the business person in preceding financial year? If you are saying 165 lakhs as an aggregate turnover, in this year he is not eligible for composition scheme. Suppose if you are saying an aggregate turnover is only 140 lakhs, he is eligible for composition scheme. So finally we have to ensure GST amount has to be includable while computation of an aggregate turnover or not. So here excludes GST amount. In this situation, the preceding financial year turnover, it is only 140 lakhs. Whatever the GST paid on it, it is not includable in aggregate turnover. Thereby, he is eligible for composition scheme. So the first excludable item, number one. And number two, tax payable under RCM. Okay. So tax payable under reverse charge mechanism. Tax payable under reverse charge mechanism not includable in aggregate turnover. Reason simple. Whenever you are using the word of the turnover, turnover is nothing but sales. While computation of the sales, we won't include the value of purchase. Is it right now? Suppose we are purchasing 20 lakh rupees worth of the goods and we sold the 20 lakh rupees worth of goods at the price of 30 lakhs, right? In this example, what is an aggregate turnover? 20 or 30 or 50? 30, no? So what is the value at which we sold, right? The outward supply will be included in the definition of the aggregate turnover or in the value of the aggregate turnover. We won't include the purchase value in turnover, no? The same concept, reverse charge mechanism, or these are inward supplies. These are inward supplies to the business person, so that it should not be includable in the definition of the aggregate turnover. That's the second element. And the third one, any interest or discount, received or receivable on advance or loans. So where a person doing a business, apart from the doing of the business, it might be, if you have an excess money, such amount may be deposited, such amount given as an advance, such amount may be given as a loan, and on deposit or an advance is getting the return of interest or discount. Now in this situation, whether such loan or advance amount has to be includable in aggregate turnover? No. Whether interest or discount on such loan or advance has to be includable? No. So both element, interest and discount, as well as loans and advances, not includable in the definition of the aggregate turnover, right? So this is the definition of the aggregate turnover. So the aggregate turnover definition we will refer for the purpose of registration as well as for the purpose of eligibility for composition scheme. Now, next aspect. So aggregate turnover definition is over, and the next one, levy and collection of CGST. Now 9 subsection 1. 9 subsection 1 is a charging provision, charging section or charging provision. So there shall be levied a tax called central goods and service tax. It will be levied on all intrastate supply of the good or services except alcoholic liquor for human consumption. And what is the value? As may be determined under section 15. And what could be the rate of GST? The maximum rate of CGST is 20%. Please remember, maximum rate of CGST is 20%. What is the maximum rate of GST? 40. The highest rate of GST is 40, but the highest rate of CGST 20. Highest rate of SGST 20. Highest rate of IGST 40. Clear? So as may be notified by the government on the recommendations of the council and collected in such a manner as may be prescribed. So 9 subsection 1. 9 subsection 1 is a charging provision or charging section. 9 subsection 1. There shall be levied a tax called CGST, right? So CGST will be levied on all intrastate supplies. On all intrastate supplies. On intrastate supplies, we are liable for payment of CGST and SGST. On interstate supplies, we are liable for payment of IGST, right? So levied on all intrastate supplies except alcohol liquor for human consumption. And what is the value? As determined under section 15. The value as may be determined under section 15. And what is the rate of GST? And the rate of GST will be maximum of 20%. Maximum of 20%. And it will be collected in such a manner as may be prescribed by the government. So this is a charging provision 9 subsection 1 and 9 subsection 2. 9 subsection 2 in relating to the petrol products, that is PAN HM products. PAN HM products will come into the picture or come into the, it will be subsumed in GST with effect from the date as may be notified by the GST Council. So when the GST Council will notify petrol products under the GST, simply GST Council recently, Finance Minister Nirmala Sitharaman announced that if the state governments are willing to subsume petrol products under GST, we are always willing to subsume or include petrol products under the GST. This is the statement which is given by our central finance minister. But still the state governments are not giving consent for subsuming of petrol products into the GST. Reason behind this is one of the biggest source of revenue to the central as well as to the state. So that at my opinion, in upcoming years, that is in a short period, we cannot expect the petrol products will be subsumed in GST, right? So long you are practicing as a chartered accountant or cost accountants, the PAN HM products will be subsumed in GST with effect from the date as may be notified by the government. Okay. So 9 subsection 3. 9 subsection 3 is reverse charge mechanism. So 9 subsection 3 empower the central government to notify few transactions where recipient is liable for payment of GST. Actually, as you know, wherever there is a supply, a person who is the supplier and a person, there will be a recipient, right? Where supplier rendered the services and he has to get the consideration as a value of supply as well as GST amount. The value of supply will goes to supplier own pocket and GST will be remitted to the government, right? Actually, this is called forward charge mechanism. This is the forward charge mechanism. But there are few cases where the recipient no need to make payment of GST to the supplier. Recipient himself is liable for payment of GST to the government. That is called reverse charge mechanism. That is called reverse charge mechanism. Such reverse charge mechanism elements has been notified under section 9 subsection 3 and we will discuss elaborately. That is 9 subsection 3 and 9 subsection 4. Under 9 subsection 4, this is also a reverse charge mechanism, but this is the case where unregistered person making supplies to registered person, their reverse charge mechanism applicable. Who is liable for payment of GST? Recipient who is a registered person. But this provision is not applicable in all the cases, only in notified supplies. only in case of notified supplies. For this purpose, I can give a classic example. Suppose where a person is a composite dealer, where a person is under the composition scheme, right? Enter his inward supplies must be from the registered person. Is it right now? And that too, he has to purchase only from the normal registered person. That is a person who is under the regular scheme. Suppose where a person who is under the composition scheme, if we getting any inward supply of the good or services from the unregistered person, then what will happen? 9 subsection 4 will applicable. By virtue of 9 subsection 4, a person who is under the composition scheme, recipient, he is liable for payment of GST by virtue of 9 subsection 4. Are you clear? So 9 subsection 1, forward charge mechanism. 9.1 forward. 9.1 forward charge mechanism or charging section. 9 subsection 2, PAN HM products. 9 subsection 3, reverse charge mechanism. 9 subsection 4, unregistered to registered, right? Actually 9 subsection 5 is also there. Under 9 subsection 5, there are few cases where the e-commerce operator is liable for payment of GST. Okay, in regular class we discussed elaborately about the 9 subsection 5. Please go through once. But now in this session we are going to cover the cases of 9 subsection 3. So the first case, GTA, where goods transport agency providing services to the any factory, society, cooperative society, person registered under GST or body corporate or partnership firm, whether registered or not, or casual taxable person, then what will happen? Reverse charge mechanism applicable. So supplier is GTA. Who is the supplier? Supplier is a GTA, goods transport agency, if is providing services to the recipient, that is specified persons. Who are those specified persons? These peoples are the specified persons. Then what will happen? Reverse charge mechanism applicable. Recipient is liable for payment of GST. Suppose if recipient is not specified person, what will happen? It is exempt from GST. Please remember, if the recipient is not a specified person, then what will happen? It is exempt from GST, right? And there is a small amendment in GTA services. Let me explain. Suppose GTA services. Actually, goods transport agency, he has two options. Either he can go with the forward charge mechanism or reverse charge mechanism. Right? In case of the reverse charge mechanism, what will happen? In case of the reverse charge mechanism, recipient is liable for payment of GST. Recipient is liable to pay GST at the rate of 5%. At the rate of 5%. In this situation, for GTA, he cannot avail input tax credit. Are you clear? And please remember, under the reverse charge mechanism, the people who are covered as a suppliers, they are not eligible for availment of ITC by virtue of section 17 subsection 3. Are you clear? Under the reverse charge mechanism, now we are discussing different peoples as a suppliers, right? All these suppliers are not eligible for availment of ITC on their inward supplies, being it is a case which is covered under reverse charge mechanism. Are you clear with this? So here the GTA person might be purchasing suppose few amount of lorries or vehicles, etc., or he is receiving few inward supply of the good or services. Even all those situations is not eligible for availment of ITC, being he is chosen reverse charge mechanism. Under reverse charge mechanism, what is the rate of GST? 5%. So in this situation, no ITC. Suppose if the GTA service person, that is a GTA supplier, goods transport agency supplier, if we want to choose forward charge mechanism, again he have two options. Two options, right? He has two options. What are those two options? Pay GST at the rate of 12% or pay GST at the rate of 5%. Again, two options are available. Suppose under the forward charge mechanism, if the GTA intended to choose 5% of GST, then no ITC. Now, in this situation, avail ITC. Are you clear? So, for GTA goods transport agency, there is a one and only the option for availment of ITC, that is pay GST at the rate of 12% on outward supply and claim ITC. but remaining all the situations is not eligible for availment of ITC. Are you clear with this? Any doubt? And the last point, whether it may be a forward charge mechanism or reverse charge mechanism. If recipient is specified person, then only it is taxable. Otherwise it is exempt from GST. Please remember, whether GTA service provider, whether is adopted forward charge mechanism or reverse charge mechanism, irrespective of the fact, if the recipient is a specified person, who is a specified person? As we discussed, factory, society, cooperative society, registered under GST, body corporate, partnership firm, registered or not, right? Casual taxable person. If the recipient is specified person, then only it is taxable. Then only GTA service is taxable. Otherwise, it is fully exempt. So this is the first service. And the second one, where services provided by an advocate, or form of advocate or senior advocate to the business entity located in taxable territory. So services provided by an individual advocate, including senior advocate or form of advocate, to a person, business entity located in taxable territory, then what will happen? Reverse charge mechanism applicable. Recipient is liable for payment of GST. See here, where the legal consultancy services, legal services provided by an individual advocate or firm of advocate or senior advocate, yes, and the recipient is business entity. Again, your answer is yes. Located in taxable territory. Again, your answer is yes. Then RCM applicable. Suppose take an example where Reliance company taking an advocate services from senior advocate. Let us assume. Now, in this situation, legal services provided by the senior advocate and Reliance is the recipient, business entity located in taxable territory, thereby reverse charge mechanism. Reliance company, business entity, is liable for payment of GST. Suppose legal consultancy services might be provided by chartered accountant, cost accountant, or company secretaries, right? When these people are providing legal consultancy services or representational services, reverse charge mechanism not applicable. Reason, such reverse charge mechanism benefit is given only to the advocates, right? Not to the other professionals. And that too, even though advocate providing these services, recipient must be a business entity. Suppose if the recipient is not a business entity, then what will happen? Such service will become an exempt. Are you clear? Okay, recipient is a business entity, and apart from that, if he is liable for registration, if your answer is yes, then only it is taxable. Suppose if the recipient may be business entity, if he is not liable for registration, please remember again it is exempt. Recipient might be a business entity. If he is liable for registration, then only it is taxable under the reverse charge mechanism. Otherwise, it is exempt. Are you clear? Next, recipient located in taxable territory. If all these conditions are satisfied, then only reverse charge mechanism applicable. Please ensure where legal services provided by individual advocate, form of advocate, senior advocate to business entity liable for registration and located in taxable territory. Reverse charge mechanism applicable. Are you clear? And the next one, third one. Yeah. Services supplied by an arbitral tribunal to the business entity located in taxable territory. What will happen? Where services provided by arbitral tribunal to a business entity located in taxable territory, reverse charge mechanism applicable. Sir, we come across the word services of the court or tribunal under the reverse services provided by the court or tribunal. Neither is supply of the good nor is supply of the service. I think we discussed in schedule 3 now. Yes, we discussed in schedule 3, but it is not that case. Here we are discussing about the private courts. These are the courts which are private courts, arbitral tribunals. Instead of making an application to the government courts, we have a separate courts, right? And even in these courts also, there will be a judge and lawyers, and decision will be given in compliance with the law, in compliance with the applicable laws only, and you will get a quick decision provided you have to make the payment of fees. There will be a some amount, percentage amount of the fees. In such a situation, such service will become taxable. In that situation, recipient business entity is liable for payment of GST. The next, fourth one, services provided by way of sponsorship to any body, corporate, or partnership firm. Where sponsorship services provided to any body, corporate, or partnership firm located in taxable territory, thereby reverse charge mechanism applicable. So supplier must be supplier can be any person, right? But recipient must be body, corporate. Who is that? Body, corporate, or partnership firm. And what is the nature of service? Sponsorship. Thereby reverse charge mechanism applicable. Suppose taking an example, IPL sponsored by the Tata. So IPL given an opportunity to sponsor, opportunity to promote their brand, so that IPL is a supplier and Tata company is a recipient. In this situation, Tata company being body corporate, what will happen? Reverse charge mechanism applicable. Now Tata company given 1500 crores to the IPL, on which Tata company is liable for payment of GST under reverse charge mechanism. Are you clear? Sir, suppose if the recipient neither a body corporate nor partnership firm, then what will happen? Forward charge mechanism. Please remember, if any situation is not covered under RCM, you should not presume that that is a prima facie exempt. You have to presume that is prima facie taxable under forward charge mechanism. Then when it will become exempt? When it is specifically provided in section 11. Are you clear? Let me explain again. Where a situation covered under the reverse charge mechanism, recipient is liable. Under if reverse charge mechanism concept is not applicable, under forward charge mechanism, supplier is liable for payment of GST. Second point. And third, when the reverse charge mechanism is not applicable and when clearly specified in section 11 as an exempt, then only we have to refer the provision of exemption. Otherwise, forward charge mechanism applicable, supplier is liable for payment of GST. Next, there are few services where for central government, state government, or union territory, reverse charge mechanism applicable. What are those situations? Where services provided by CG, SG, or local authority to business entity plus located in taxable territory. Then what will happen? Reverse charge mechanism applicable. Reverse charge mechanism. Suppose if these services are, even though central government, state government, or local authority providing services of postal, services to aircraft or vessel. What are the services government can provide? Services to aircraft or vessel. Suppose where aircraft arriving to the airport, the central government authority, that is, as you know, the railway stations, bus stands, and airports are belonging to the central government, right? Now the central government officials will give signals, clearance signals for landing and takeoff. Are you clear? Now in this situation, whatever the services provided by the government to the aircraft, government will charge an amount, or government will collect fees from the airlines companies. In this situation, central government or state government is a supplier and recipient is aircraft or vessel. Now in this situation, reverse charge mechanism not applicable. Supplier is liable for payment of GST. That is, central government has to pay GST. Suppose where the central government providing services to business entity plus located in taxable territory, which is not covered in these three areas, then only reverse charge mechanism applicable. Simply let me explain. In case central government, state government, or local authority providing postal services, aircraft or vessel, and the third one, it is transportation of passengers, that is railway, bus, etc. In these three cases, forward charge mechanism only. Where the government providing other than these three services to business entity located in taxable territory, then what will happen? Reverse charge mechanism. Recipient is liable for payment of GST. Are you clear with this? Any doubt? Done. Okay. Next, 5A, services supplied by the central government to a registered person. What are the nature of services? Here the supplier is central government, CG, SG or local authority. And the nature of service, it is renting of immovable property. And recipient person is registered under GST. Registered under GST. Then what will happen? Reverse charge mechanism applicable. Reverse charge mechanism applicable. Recipient is liable for payment of GST. Suppose where the government having 20 acres of land in a city. Such 20 acres of land has been given to the Adani company on lease basis. Now this is immovable property. Lease rental given by the central government. So central government is the supplier and recipient is Adani company, and the nature of service is renting of immovable property. Then what will happen? Reverse charge mechanism applicable. Recipient is liable for payment of GST. That is, in the given situation, Adani company is liable for payment of GST. Are you clear? Suppose in a local authority, you may come across in your city or town, in a market area, in a vegetable market, shops are belonging to the municipality, local authority. Now, where the local authority providing services of renting of immovable property, that is, shops are rented to the small business vendors, right? In such a situation, if those business vendors are registered persons, reverse charge mechanism applicable, recipient is liable for payment of GST. Suppose those vegetable vendors are unregistered, forward charge mechanism applicable. What is that? Forward charge mechanism is applicable. Are you clear with this? And the next one. This is the important amendment. Services by way of renting of residential dwelling to a registered person. Supplier is any person, recipient is any registered person. Then it is taxable. That is a one amendment. And the second one, it is covered under reverse charge mechanism. Actually, earlier, where a residential dwelling given on rental basis for residential purpose exempt from GST. Suppose this is the house, okay? Let us assume you are the owner. You rented property to any persons, right? For family. That is for residential purpose. And whatever the rental amount you received, it is exempt. No GST, right? Now it became taxable. How it made taxable? Suppose, take an example where a house given on rental basis to a registered person. Suppose, let us assume where a business entity plus registered person, he is taking house on rental basis and it is given to their employees even for residential purpose. Now business entity will make the payment of rent and such amount will be claimed as an expenditure under Income Tax Act. In this situation, what happened? They are taking a residential house property on rental basis and they are not making payment of GST, and without payment of GST, and again they are intended to claim such expenditure in Income Tax Act. So they are getting dual advantage. So that to remove these type of the dual advantages or undue advantage situations, government come up with an amendment that where a registered person getting residential house property on rental basis, it will become taxable. That is an amendment, and that to reverse charge mechanism applicable. The business entity, registered person is liable for payment of GST. Are you clear with this? Only in these type of the situations it is taxable. Suppose, let me convey another situation where a person having a house, a small house, it is rented to a chartered accountant or cost accountant who is a registered person, for his family, for residing his family. Whether it is taxable? No. Again, in this situation, it is not taxable. The legislature is clear where he is getting residential house property on rental basis, and again he is intended to claim such expenditure as an expense under the Income Tax Act. Only in that situation, the legislature want to make it taxable under reverse charge mechanism. But where a person may be a registered person, is taking house property on rental basis for his own residence or for residential purpose. In that situation, still it is exempt. Recipient might be a registered person, but is not intended to use for commercial purpose, right? Still he is intended to use for residential purpose, and he don't want to claim such expenditure as an expense under the Income Tax Act. Are you clear? In that situation, it is an exempt. So actually this is a new amendment. There may be a chance this question may be given for 3 marks to 4 marks, right? Please remember. The next one, entry number 5B. Please pause the video and go through once up to this part. First one we completed with GTS services, and next legal consultancy advocate services, arbitral tribunal services, and services of the central government or state government, right? And the next one, renting of residential dwelling. Please pause the video and go through once. The next one, services supplied by person by way of transfer of development rights. Transfer of development rights or floor space index. Supplier may be any person, but the recipient is promoter. Suppose take an example. This is a vacant land and these people are owners of the land, right? Now, he is the contractor or a person who is intended to construct the building over this land. So on construction of the building, the promoter or the contractor intended to offer, let us assume, 2 flats and 50 lakh rupees worth of 50 lakh rupees of money. In this situation, the person who is the owner of the land is called supplier and the contractor is called recipient. And whatever the value of consideration given, right, that is the value of supply. In this situation, reverse charge mechanism applicable, recipient is liable for payment of GST. Suppose where the supplier is intended to sell the land, it won't be treated as it will be neither a supply of the good nor a supply of the service. But instead of sale of the land, just he transfer development rights. By transfer of the development rights, if he is getting any consideration like this, it will become supply of the service and reverse charge mechanism applicable. Recipient is liable for payment of GST. And the next, long-term lease of land. Long-term lease of land by any person against the consideration. Long-term lease of land concerns 30 years or more. Suppose you may come across at highways or at busy roads, petrol bunks will be there, petrol bunk, right? Actually, suppose HP petrol bunk or Bharat petrol bunk, right? Actually, these companies won't purchase any land. Just they will enter into a contract for leasing of the land, for leasing of land for 30 years, 50 years, 70 years, etc. Now, suppose take an example, you are the owner of land, right? And now Hindustan Petroleum or Bharat Petroleum, they will become recipients and lease of land for 30 years or more. For 30 years or more. In this situation, reverse charge mechanism applicable. Recipient is liable for payment of GST. Now, in this situation, consideration may be paid on periodical basis or lump sum basis or any other basis, irrespective of the fact. Recipient, under reverse charge mechanism, recipient is liable for payment of GST. And the next, services supplied by a director of a company. Where a director of a company providing services to a company or body corporate located in taxable territory, reverse charge mechanism applicable. Recipient is liable for payment of GST. Suppose directorship services. Suppose where a director, he is a whole-time director or managing director or nominee director, sorry, we can say independent director. These people are called executive directors. Executive directors, they will get salary. Executive directors, they will get salary or remuneration, which is covered under Schedule 3. Neither a supply of the good nor a supply of the service. And second side, non-executive directors. Non-executive directors, they will receive sitting fees or any other payments like it is as called remuneration, etc. In this situation, it will become supply of service. It will become supply of service, and this is taxable under reverse charge mechanism. This is taxable under reverse charge mechanism, where director providing services, where the recipient is an executive director, whatever the emoluments or benefits received by the executive director, it is called salary. Neither is supply of the good nor is supply of the service, which is covered under Schedule 3. So no GST, it is not taxable. But however, where any remuneration received by the non-executive directors in the name of remuneration or sitting fees, etc., that will become supply of the service and taxable under reverse charge mechanism. And next one, insurance agent, where an insurance agent providing services to the insurance company or a person carrying insurance business, reverse charge mechanism applicable, recipient is liable for payment of GST. Suppose take an example where an insurance agent, he will render services to the insurance company or a person who carrying insurance business. Actually, he will collect policy premiums or he will book policies from the public, and it will be handed over to the insurance company. Thereby, insurance company may make the payment of commission or any other fees. In this situation, insurance agent is the supplier, insurance company is the recipient. Now, for this commission, reverse charge mechanism applicable, insurance company is liable for payment of GST. And the next one, services supplied by a recovery agent. A recovery agent providing services to the banking company or a financial institution or non-banking financial company located in taxable territory. So where a person is a recovery agent providing services to the banking or NBFC, right? Suppose where a person purchasing vehicle and he is reluctant to make the payment, so that the recovery agent will go for a discussion and he will recover premium or installment amount from the customer, right? And such installment amount will be handed over to the banker or NBFC. In such a situation, NBFC or banker will offer a small amount of commission to him, a small amount of commission. In this situation, recovery agent is the supplier and NBFC, non-banking financial company or banker is the recipient. Reverse charge mechanism applicable, recipient is liable for payment of GST. And the next one, where the services provided by the music composer, photographer, artist or the like, and the recipient might be a producer or music company, reverse charge mechanism applicable, recipient is liable for payment of GST, right? Suppose next, War 2 movie. Let us assume music director is Rahman and producer, suppose let us assume Leica producing company. In this situation, Rahman sir is a music composer, supplier, and Leica producer, Leica production company is a recipient. In such a situation, whatever the payment given by the Leica production company to Rahman sir, reverse charge mechanism applicable, recipient, Leica production company is liable for payment of GST. Like that, any music composer, photographer, artist or the like providing services to the music company, producer or the like, reverse charge mechanism applicable. Supplier is music composer, photographer, artist. Recipient, music company or producer. Thereby reverse charge mechanism applicable. Next, 9A. Services by an author. Where an author providing services to the publisher, reverse charge mechanism applicable. Suppose take an example. After completion of the CA Inter or CMA Inter, you are intended to write a notebook. So handwritten notebook, right, which is an excellent one and which consists flowcharts, short notes, and it is highlighted with the keywords, etc. So where a publisher, let us assume Snow White Publications. Snow White Publications intended to get copyrights with you. So you are intended to hand over copyrights in favor of the Snow White publishers, and thereby you are intended to get 100 rupees of commission for each and every book. 100 rupees for every book. So after selling of the 10,000 books in open market, now Snow White Publications offered commission to you. In that situation, Snow White Publication is the recipient and you are the person who handed over copyrights in favor of the Snow White publishers, right? You are the supplier, Snow White Publication is the recipient, reverse charge mechanism applicable, recipient is liable for payment of GST. And one more thing here, an author have an option to go with either forward charge mechanism or reverse charge mechanism. Any one of the option chosen in a financial year, till the time of completion of such financial year, he has to adopt the same scheme, either forward charge or reverse charge. Such option is available only to the author But whereas music composer, photographer, artist concerned, it is mandatory RCM. Please remember, where a situation which is covered under the reverse charge mechanism, forcibly, definitely they have to comply with the reverse charge mechanism, that is recipient is liable. Supplier should not take any opportunity for payment of GST unless an option has been given. Now, in case of the author, such option has been given in the act itself, so that author can go with the forward charge or reverse charge. But whereas music composer, photographer, artist concerned, they don't have a such type of the option. Next, overseeing committee, where overseeing committee providing services to the Reserve Bank of India. Actually, Reserve Bank of India will make different type of the policies and different type of the decisions. Right, once a policy has been prepared or once a decision has been made, the Reserve Bank of India and their employees may not be in a position to ensure how far it is not overriding the provisions of the some other laws or provisions prevailing in India. For that purpose, RBI may constitute a committee. Now, this committee is called overseeing committee. Right, now these people are the experts in different fields. Different field, they will provide services to the Reserve Bank of India and they will express opinion on the policy or any matter handed over to the overseeing committee, and thereby the persons who are the members of this committee, they will get remuneration or any fees. In this situation, reverse charge mechanism applicable, recipient is liable for payment of GST, that is Reserve Bank of India is liable for payment of GST. And the next one, services supplied by individual direct selling agent. Where a supplier is an individual direct selling agent, recipient is a banking company. What is the nature of services of individual direct selling agent? Simple, he will sell the product on behalf of the banking company. Actually, the product of the banking company, it is loans and advances, right? Suppose we are the individual people or we are the business people. Suppose if you are making an application to the banker for the purpose of the loan, actually we have to wander around the banking company for a period of the 1 week or 10 days, and you don't know that what is the process and how you have to make an application and what is the criteria or which banker is willing to provide loan to you on the basis of our own criteria, right, on the basis of eligibility. In that situation, an individual direct selling agent, he will make an application to the banker on behalf of the customers. He will provide a facility of loan. Otherwise, we can say he will sell the product of the banking company to the customers. He will get the details of the customers, their Aadhaar card, PAN card, accounting details, and what is the eligibility criteria, how much of amount they are required, right? By getting of all such details by the individual direct selling agent, he will search the banker or the financial institution on the basis of the customer criteria, which banker will provide the loan, right? On the basis of which he will make available a loan to the customer from the banker. In that situation, banking company will offer commission to the individual direct selling agent. So the supplier is an individual direct selling agent, recipient is a banking company. Now, whatever the commission given by the banking company to the direct selling agent, reverse charge mechanism applicable, recipient is liable for payment of GST. Suppose where such loan product has been sold by other than individual direct selling agent, what will happen? Forward charge mechanism. In that situation, a person who is a selling agent, he is liable for payment of GST. Supplier, when he is an individual, then only RCM. Where the direct selling agent is an individual, then only forward charge mechanism. Next one, services provided by the business facilitator. Where a business facilitator providing business to the banking company located in taxable territory, reverse charge mechanism applicable, recipient is liable for payment of GST. Suppose where a banker want to start a business in rural areas or in remote areas. So banking company may not be in a position to arrange all the infrastructure for commencement of the business. In such a situation, a person who will provide all the infrastructure and facility for commencement of the business, he is called business facilitator. A person who is a business facilitator providing services to the bank, reverse charge mechanism applicable. In this situation, whatever the payments given by the banker to the business facilitator on periodical basis, reverse charge mechanism applicable, banker recipient is liable for payment of GST. Next, where an agent of business correspondent providing services to the business correspondent, reverse charge mechanism applicable. Suppose in a city we have a different type of the restaurants, and now there is a mediator business correspondent who is called Just Dial. Just Dial is a business correspondent. It will bring leads from the customers and it will be made available to the business people, right? Suppose if you are searching nearby restaurants in Just Dial, automatically your contact number will be forwarded to the restaurant people and restaurant people will make a call. Sir, where you are locating and where the restaurant, we have a restaurant at so and so place and how many people are there. In such a manner, the restaurant people will contact you. Now, in this situation, Just Dial is a business correspondent. They provide leads to the business people. Now, on behalf of the Just Dial, few people works as an agent, right? These people are called agents of business correspondent. In this situation, Just Dial is a business correspondent and the agents of the Just Dial, these people are called agents of business correspondent. Agents of business correspondent. Now, whatever the commission given by the Just Dial to their agent, reverse charge mechanism applicable. And for the services of business correspondent Just Dial to restaurant, this is the forward charge mechanism. Actually, these business people has to register in Just Dial and they have to make the payment also to get the position, to get the leads. For that commission or for that amount, forward charge mechanism. But where a business correspondent making any commission to their agent, that is only covered here as the reverse charge mechanism. Are you clear? And the next one, security services. Security services. Security services provided by way of supply of security personnel provided to a registered person. So supplier is any person other than body corporate. Recipient is a registered person. Who's that? Registered person located in taxable territory. Reverse charge mechanism applicable. Suppose take an example. SBI Bank. Suppose in a city, SBI Bank having different type of the ATMs, right, in different places, and one security guard is required. Now, these security guards are not the employees of the SBI Bank. Actually, SBI Bank will give a contract to a person who can supply security personnel. So simply we can say that this is called security agency. In bracket, other than body corporate, that is other than company. Now, security agency. Security agency will supply security personnel to render the services to the SBI Bank. Thereby, security agency will become supplier and SBI Bank is the recipient. Now, whatever the payment given by the SBI Bank to the security agency, in this situation, reverse charge mechanism applicable. SBI Bank recipient is liable for payment of GST. So after receiving of such payment, now the security agency will make payment to these people in the name of salary. In the name of salary. And this amount is covered under Schedule 3 as a neither a supply of the good nor a supply of the service, so that no GST. Are you clear? Done, done, done. And the next one. Enter number 15. Services provided by way of renting of motor vehicle. Renting of motor vehicle. What is the nature of service? Renting of motor vehicle. But the beauty in this situation, you have to remember supplier and recipient. Supplier should be other than body corporate. Supplier should be other than body corporate and recipient must be a body corporate. And the nature of service it is renting of any motor vehicle. Thereby what will happen? Reverse charge mechanism applicable. Suppose take an example. You are the person, an individual or partnership firm. Simply we can say you are other than body corporate. Other than body corporate. You have a vehicles, cars. Right? Those are rented to a company. Suppose Wipro. Cab services. Not the cab services. You are intended to renting of motor vehicle. Renting of motor vehicle. In this situation, you are the supplier and the software company to whom motor vehicles has been given on rental basis, recipient. And whatever the payment you are getting, reverse charge mechanism. Reverse charge mechanism. Supplier must be other than body corporate, recipient must be a body corporate. Are you clear with this? Only in this situation, reverse charge mechanism applicable. Suppose if you are renting such motor vehicle to other than body corporate, to other business entity, in that situation, forward charge mechanism. In that situation, forward charge mechanism is applicable. This is entry number 15. And the last one, entry number 16, from examination point of view may not be important at the inter level, but still let me explain. Lending of securities, lending of securities, lending of securities, right? Suppose take an example, he is a broker. He entered into a contract with the customer that he will deliver Reliance company shares at the price of 300 at the end of this month. At the end of this month, the broker has to deliver 10,000 shares. That is a contract. But at the end of the month, 3,000 rupees worth of shares became, let us assume, 4,000. How much? 4,000. Now the broker has to lose 1,000 rupees per share. Thereby, 10,000 shares to 1,000, approximately it will become 1 crore near, right? More than 1 crore. 10,000 into, sorry, 1,000, which will be, he has to lose 1 crore. He has to lose 1 crore. Is it? What is the contract? Broker enter into a contract with the customer. He will deliver Reliance company share at the price of 3,000 at the end of this month. But at the end of the month, Reliance company share became 4,000 rupees. In such a situation, suppose if you buy the share in open market and hand it over at the price of 3,000, what will happen? The broker has to lose 1,000 rupees per share. And for entire 10,000 shares, he has to lose 1 crore. In that situation, he has a other option. He can lend the securities from a person who is an approved lender. Who is approved lender authorized by the SEBI. He will deliver the 10,000 shares, Reliance shares, on credit basis, right? So in the near future, when 4,000 rupees worth of share reduced, or 4,000 rupees worth of shares came to 3,700, 3,400, like that, automatically broker purchase and delivered back those shares. So in this situation, broker getting shares on credit basis. In this situation, he is the approved lender. Approved lender will become supplier, and now this broker is recipient. And for this lending activity, he has to make the payment. That is, he has to offer a commission or a fees. For this commission or fees, reverse charge mechanism applicable. A person who is a broker recipient, he is liable for payment of GST. Suppose the approved lender charge, let us assume 5 lakh rupees as a commission. Reason 10,000 Reliance share lend for a period of the 3 months. For these 3 months, he charged 5 lakh rupees of commission. In that situation, reverse charge mechanism applicable. Broker under reverse charge mechanism, he is liable for payment of GST. Are you clear? Sir, then what about this contract? Forget about this contract. This is sale of securities. Sale of securities, neither a supply of the good nor a supply of the service. No GST. Are you clear? So these are the reverse charge mechanism cases. Totally 16 cases reverse charge mechanism covered. Each and every point we discussed elaborately. And again, I'm saying, please pause the video and go through once. So we completed third chapter. First chapter, introduction to GST. Second chapter, supply. And third chapter, charge of GST. And next we are going to start with the topic of composition scheme. So up to this part, we completed basic concepts in relating to the GST, supply, and charge of GST, right? Now in this session, we are going to start with the topic of composition levy or composition scheme. What is the concept of composition scheme? As we know, where a person is registered under GST, he is liable for payment of GST, right? Once a person is registered, he is liable for payment of GST either under regular scheme or composition scheme. Either under the regular scheme or composition scheme. Suppose if you adopt a regular scheme, what will happen? You have to pay tax on monthly basis. On monthly basis, you have to file the return. On monthly basis, you have to avail input tax credit. On monthly basis, you have to ensure what are the inward supplies that are credited or auto-populated in GST 2A or 2B. All these things has to be done when you are in regular scheme, right? Suppose take an example, you are a small business person. Your aggregate turnover, it's not in crores, just a little bit of amount, where you are liable for payment of GST so that you obtain the registration. Is it possible to comply with all these provisions? right? Monthly return, monthly availment of ITC, issue of the tax invoice, and ensure whether all inward supplies has been auto-populated in GST or 2A, 2B. No. So in that situation, to protect the interest of the small business people, composition scheme concept has been introduced under section 10. Now under the composition scheme, such benefit has been given to the both people, the persons who are dealing with goods as well as the persons who are dealing with services. The persons who are dealing with the goods, first of all, the persons who are dealing with the goods, whether he may be a manufacturer, or retailer or wholesaler, he is eligible for composition scheme provided his aggregate turnover in preceding financial year should not exceed 1.5 crores. His aggregate turnover in preceding financial year should not exceed 1.5 crore. Sir, what is the meaning of the aggregate turnover? We discussed elaborately the chapter of the charge of GST, right? So that same definition, if the aggregate turnover in preceding financial year, if his aggregate turnover is less than or equal to 1.5 crore, that is 150 lakhs, then in current financial year, he is eligible for composition scheme. Are you clear with this? Suppose where a business person is located in special category states, in such a situation, instead of the 1.5 crores, we have to consider 75 lakhs. And one more thing you have to remember, suppose you are located in Jammu and Kashmir, Assam, Himachal Pradesh. Even though these three places are located in special category state, instead of the 75 lakhs, we have to adopt 1.5 crores. Actually, for special category state, 75 lakhs only. But where Jammu and Kashmir, Assam and Himachal Pradesh adopted 1.5 crores of turnover limit. Sir, can you say any reason for extension of the threshold limit? Nothing but by extending of such limit, any loss cost to the state government has to bear the risk, not the central government. Are you clear with this? So what is the turnover limit? In preceding financial year, aggregate turnover does not exceed 1.5 crore. You are eligible for composition scheme. Are you clear? Suppose let me give a chart for you. Suppose in the year of the 2020, 21, 22, 23, 23, 24, 24, 25. Suppose in 2021, aggregate turnover it is 120 lakhs. Let us assume 180, 130, 190. Now, these are the turnover of a business person. Now, the first question, in the year of 2020 and 21, whether he is eligible for composition scheme? Yes. Reason, there is no turnover. There is no turnover, or he don't have a business in the preceding financial year. So, automatically he is eligible for composition scheme. But for 22-23, whether he is eligible for composition scheme? Whether he is eligible for composition scheme? Yes, absolutely. Reason, we have to consider preceding financial year turnover. Preceding financial year turnover is less than or equal to 150 lakhs, so that eligible. Then what about the 23 and 24? Not eligible. Sir, in 23-24, his aggregate turnover is less than 150 lakhs, no. But we have to refer preceding financial year turnover. Preceding financial year turnover is more than 150 lakhs, so that he is not eligible for composition scheme in 23-24. And likewise 24-25, he is eligible, being preceding financial year aggregate turnover less than 150 lakhs. Are you clear with this? So, if you are located in any state, the aggregate turnover will be 1.5 crore. Suppose if you are located in special category states, instead of the 1.5 crore, you have to consider 75 lakhs. Suppose take an example, sir, where a person is located in Maharashtra and Mizoram, Nagaland and Tamil Nadu. Let us assume where a person having branches in 4 states, Maharashtra, Mizoram, Nagaland and Tamil Nadu. Then what could be the threshold limit which we have to consider for the purpose of the composition? 75 lakhs or 1.5 crore? Which one is the right answer? For Maharashtra, threshold limit might be 1.5 crore, but for special category states, 75 lakhs. In such a situation, threshold limit will be reduced to the lowest amount, that is 75 lakhs. So you have to ensure whether your aggregate turnover does not exceed 75 lakhs, right? Next. And one more thing, it is an optional scheme. Suppose if your aggregate turnover is less than 1.5 crores or 75 lakhs, only because of that, no need to obtain composition scheme, no need to adopt the composition scheme mandatorily. Just it is an optional scheme. Clear? So this is the concept of manufacturer, retailers and wholesalers. And suppose for service providers, actually first the composition scheme concept has been introduced only for the business people who are dealing with the goods. The persons or people who are dealing with the services, actually there is no concept of the composition scheme, but subsequently on request made by the small business supply service providers, like as suppose photographer, carpenter, mobile shop, repair shop, right? All these peoples also be small business people. They requested the government, sir, actually you are giving an opportunity of composition scheme only to the persons who are dealing with the goods. We are also dealing with the services. We are also small business people. Why you are not providing any beneficial scheme? That is a composition scheme for us. So in such a manner, on request made by the small business peoples, there is suppliers of service. A composition scheme also has been introduced for the purpose of the service providers. But in this situation, the threshold limit will be 50 lakhs. Wherever he may be located across the country, in whatever the state it may be, the threshold limit will be 50 lakhs. Suppose take an example, I am a chartered accountant or a cost accountant. I am eligible for composition scheme. Generally, this is the scheme for goods and this is the for services. Yes, under services, if your aggregate turnover preceding financial year turnover less than or equal to 50 lakhs, then in current financial year you are eligible for composition scheme. This is also be called concessional rate of tax. This is also be called concessional rate of tax. Okay, sir. If my aggregate turnover in the preceding financial year is less than 50 lakhs, then I can adopt composition scheme, even for services. Are you clear with this? And the next one, what could be the rate of tax? What could be the rate of tax? For goods, manufacturer, 1%, 0.5% of CGST, 0.5% of SGST. And for restaurant services, actually, the supplier of services are not eligible for composition scheme except restaurant services. But for the restaurant services, rate of GST will be 2.5, in overall 5%. And for others, retailers, wholesalers, etc., 1%. Are you clear? So manufacturer 1%, retailer, wholesaler 1%, restaurant services 5%. And one more thing you have to remember, where a person dealing with ineligible goods like as tobacco, pan masala, aerated water, ash bricks, etc. These are the ineligible goods. Where a person dealing with ineligible goods, he is not eligible for composition scheme. Suppose if you have 4 businesses, out of which 3 businesses dealing with eligible goods or eligible services, but the one product or one business dealing with ineligible goods, in such a situation, all the businesses together not eligible for composition scheme. Are you clear? Suppose total any number of the business, any one business engaged in ineligible goods, any one business dealing with ineligible goods or ineligible services, then all the segments or all the businesses are ineligible for the composition scheme. The next one, for services. For services, 3% of CGST, 3% of SGST, in total 6%. This is the rate of GST. Are you clear? Composition scheme, where a person aggregate turnover in preceding financial year does not exceed 1.5 crores or 75 lakhs is eligible for composition scheme in this financial year. But for supplier of service, where a person preceding financial year aggregate turnover does not exceed 50 lakhs, he is eligible for composition scheme in this current financial year. And the rate of GST concern for goods only 1%. And for services 3 plus 3, 6%, 3 plus 3, 6%. And for restaurant services 2.5, in total 5. Clear? Clear, sir. And next one, who are not eligible to opt for composition scheme. Who are not eligible? First one, registered persons who is not eligible for composition scheme for goods. Number 1, supplier engaged in making any supply of the good or services which are not leviable to tax. Suppose if you are dealing with the goods which are not leviable to tax, what are the goods which are not leviable to tax? Alcoholic liquor for human consumption, petrol products, these are not leviable to tax. Suppose if you are dealing with these 2 goods, not eligible for composition scheme. Number 1, please remember this is about the goods. This is for goods. Second, supplier engaged in making any interstate outward supplies of goods or services. When he is making outward supplies of interstate, and intrastate concern, as you know that within the state, interstate concern in between 2 states, where a person making supplies in between 2 states ineligible for composition scheme. Third one, person supplying any goods or services through an e-commerce operator. So where a person supplying goods through e-commerce operator not eligible for composition scheme, but now there is a uh, proposal where a person making supply of the goods through e-commerce operator, he will be eligible for composition scheme, but now still it is in drafting stage. Once both houses of the parliament approval given, then a person who making supply of the goods through e-commerce operator, he will be eligible for composition scheme. But till the time, please remember, where a person making supply of the goods or services through e-commerce operator not eligible for composition scheme. Suppose taking an example, this is the one of the gift item. Let us assume I am selling gift items within the state. I am eligible for composition scheme. Point number one. Suppose I am getting orders from other state. Can I accept? It is up to you. If you are accepted an order which is from outside the state, what will happen? It will become an interstate outward supply. If you are making any interstate outward supply, not eligible for composition scheme. That is the second one. And the third one, suppose if you are keeping these goods in online e-commerce operator like as Flipkart and Amazon, again you are not eligible for composition scheme. And the next, when you are dealing with ineligible goods, not eligible for composition scheme. And next, supplier who is either a casual taxable person or non-resident taxable person. If you are a CTP or NRTP, not eligible for composition scheme. Who is CTP? Casual taxable person. Who don't have a permanent place of business in a state, permanent place of the business or residential place, but you want to do the business for a certain period not exceeding 90 days. Such person is called CTP. Actually, as you know that on occasion of Deepavali, the crackers business people will do the business for a period of max of 10 to 15 days, right? They will be called casual taxable persons. And NRTP concern, actually he don't have any residential place or place of business in India. He is coming from outside India and he is intended to do the business for a period not exceeding 90 days. He is called NRTP. So suppose if you are a CTP or NRTP, not eligible for composition scheme. And next, supplier of service. Supplier of service not eligible for composition scheme of 150 lakhs or 75 lakhs, but such benefit has been given only to the restaurant services. So supplier of service is not eligible for composition scheme, but however, the supplier of service is eligible for concessional rate of tax. That is also we call composition scheme, concessional rate of tax, 6%. Okay. So registered person who is not eligible for composition scheme for services. Same concept, first, second, third, and fourth point. And next, supply who is either a casual taxable person or an RTP, same points. So the persons who are ineligible under the composition scheme, the same persons are ineligible for composition scheme of services also. Are you clear? Very, very important question from the examination point of view. The persons who are not eligible for composition scheme. And the next one, marginal supply of service. Now, marginal supply of service. Marginal supply of service. What is the concept of marginal supply of service? Suppose where a person preceding financial year aggregate turnover less than or equal to 150 lakhs, thereby in the current financial year he is under the composition scheme. Suppose take an example, he is dealing with bags. He is dealing with bags. Right, bag is a good, so that is eligible for composition scheme. So apart from the selling of the bags, as you know that few customers request for services. Suppose if the bag is stored or mutilated, then what will happen? They will expect some services from us, no? So when you are able to provide those type of the services, still are you eligible for composition scheme? Only the supplier of the good is eligible for composition scheme. Suppose I'm under the composition scheme, so that up to 150 lakhs, just I am liable for payment of GST at the rate of 1%, but this concept or benefit given only to the goods. But apart from the delivery of the goods, we are under an obligation to provide the service. Suppose you are the mobile shop owner. Apart from the sale of the mobile phones, there may be a chance you have to provide few repair and maintenance services, no? In that situation, whether you are eligible for composition scheme, yes, still you are eligible for composition scheme, but your services should not exceed 10% of preceding financial year turnover and rupees amount of 5 lakhs, whichever is higher. your services amount should not exceed this limit. Suppose your service amount exceeds this limit, what will happen? You are seized from the composition scheme and forcibly you have to shift it to the normal scheme. Suppose take an example, in preceding financial year my turnover is 80 lakhs. How much? 80 lakhs. Now in this year we can provide maximum of services of 10% of the 80 lakhs. 10% of the preceding year turnover, no? That is 8 lakhs or 5 lakhs, whichever is higher. What is the higher amount? 8 lakhs. So in this year you can provide the services for maximum of 8 lakhs. Suppose in the preceding financial year turnover 30 lakhs, then we can provide the services in the financial year maximum of 3 lakhs or 5 lakhs, whichever is higher, that is 5 lakhs. Are you clear with this? This is called marginal supply of service. This is the concept of marginal supply of service. Marginal, a little bit, an additional amount of service, that's it. Okay, and the next concept, this is the concept of marginal supply of the service. Next, option to pay tax at concessional rate, that is composition scheme for service providers. Who are the persons eligible for concessional rate? As we discussed, a person whose aggregate turnover does not exceed 50 lakhs in preceding financial year, and other than restaurant services. Reason, for restaurant service he is eligible for 150 lakhs turnover, no, under 10(1). Next, conditions to be fulfilled. The conditions: supplies are made by a registered person who is not engaged in making any supplies, that is, he should not be engaged in interstate supplies, and he should not be a casual taxable person or NRTP, CTP or NRTP, and he should not make supplies through e-commerce operator. This is the content which is given in this chart. It's enough. Just for reference I given content here, just go through once. Other significant points, where more than one registered persons having the same PAN, tax on supplies by all such registered person is paid at concessional rate under this notification. Suppose on the basis of the same permanent account number, if you have a 10 businesses or 10 branches, even in all those situations you are eligible to pay tax at concessional rate. And while computation of the aggregate turnover also, we have to consider PAN based turnover, permanent account number based turnover. And the second point, very important, while computation of the aggregate turnover, whether 150 lakhs or 75 lakhs or 50 lakhs, where a business person making any deposits, loans and advances, and if he is getting any interest or discount on it, such amount should not be includable. In the definition of the aggregate turnover. The next, the CGST rules 2017 as applicable to person paying tax under the composition scheme shall mutatis mutandis as it is apply to the person paying tax under this notification, that is to the service. For the purpose of the goods, whatever the composition concept has been discussed, the same concept and rules will be applicable to the supplier of service also. Clear? So this is a concept in relating to the composition scheme. Any doubt? Right. Let me explain another concept in relating to the composition scheme. Suppose in composition scheme, where a person having a place of business in Maharashtra, West Bengal, Madhya Pradesh and Kerala. Let us assume in this situation a person aggregate turnover should not exceed 150 lakhs. Now, while computation of the 150 lakhs rupees worth of aggregate turnover, we have to include the turnover of all the business people. We have to include aggregate turnover of all the business people. That is a point number 1. And point number 2, while filing of the return under the composition scheme, we have to pay tax on quarterly basis and we have to file the return on yearly basis. On yearly return, it is nothing but GSTR 4 and quarterly payment CMP 08. On quarterly basis, just disclose your turnover and pay 1% of the tax. Enough. At the end of the year, at the end of the financial year, as you know, 31st March is the end of the financial year. and from that day to 30th April, that is within 30 days, within 1 month, you have to file GSTR 4 and payment of CMP 08 and filing of GSTR 4. It is state-wise return. It is state-wise return. Are you clear? And one more concept. Suppose from the first year, from the April, let us assume I am under the composition scheme. I am under the composition scheme. Suppose in the mid of the financial year, I am intended to switch over to the normal or regular scheme. Can I do so? Can I do so? No. Reason? Once you chosen a composition scheme or regular scheme in a particular financial year, till the end of the that financial year, you must be under the same scheme. That is a general rule. Let me say, suppose at the commencement of the financial year, either you choose a composition scheme or the regular scheme. Till the end of the financial year, you must be under the same scheme. That is a point number 1. An exception to this rule, exception to this concept, it is, suppose at the commencement of the financial year, we are under the composition scheme. In the mid of the financial year, suppose let us assume in the November, my aggregate turnover exceeds 150 lakhs, or we are not satisfying the specified conditions, that is violation of conditions. Violation of conditions. Then what will happen? Forcibly, we have to switch over to the regular scheme. Regular scheme. In that situation, what we have to do? Suppose take an example, and 25th November, this is happened situation. In that situation, for this period, you have to file CMP 08 and GSTR 4. And for 25th November to 30th November, for these 5 days, you have to file GSTR 1 and 3B. And December month onwards, you are under the regular scheme, no? So every month, GSTR 1 and 3B. In such a manner, you have to manage filing of the returns. So this is the concept about the filing of returns. Are you clear? Almost we covered each and every point in relating to the composition scheme. I think for the CA inter or CMA inter, it's more than enough. Right? Please go through once. And the next topic, it is time of supply. What is the concept of time of supply? Why we have to refer this concept? As we know, wherever there is a supply of the good or service, there being a supplier registered person, we are liable for payment of GST. And there are few exceptional cases where the recipient is liable for payment of GST. All those things we discussed elaborately in the previous chapter. Now in this chapter, we are going to learn the concept of time of supply. What is the concept? Time of supply. Simple, in relating to the supply of the good or service, different elements or different transactions like as date of completion, date of payment, date of invoice or date of delivery, like different transactions might be taken place. When these type of the different transactions are taken place in relating to a particular transaction, then what is the date on which the taxable person getting liability for payment of GST? Suppose, simply let me ask a question. Suppose we are booking a function hall, right? And booking date, it is 10th April and function program will be on 20th May, and finally payment has been given, let us assume on 25th June. So when we are booking function hall on 10th April and when the function or program is going on 20th May and when we made payment on 25th June. Now here the function hall owner, who is the supplier, when he is getting liability for payment of GST, whether on the date of the booking or on the date of the event or on the date of the payment. Suppose on receiving of the payment, the supplier, that is the person who is the function hall owner, he given tax invoice, let us assume on 5th July. So in relating to a single transaction, renting of function hall, that's it. in relating to a single transaction, different transactions are taken place or different events are taken place on different days. Then when a taxable person getting liability, whether on date of booking or date of event or date of payment or date of invoice. For all these purposes, to know the time of supply, we have to refer section 12 and 13 of CGST Act. Section 12 and 13 of CGST Act. By referring to section 12 and 13, clearly we can say what is the date or what is the time in which the taxable person getting liability for payment of GST. Are you clear this? What is the date or what is the time in which the taxable person getting liability for payment of GST? We can identify by referring to section 12 and 13 of the CGST Act. Section 12 deals with time of supply of the goods. Section 13 deals with time of supply of the service. So first we are going to start with the topic of time of supply of service, section 13. So time of supply of the service. Now section 13 subsection 1 says the liability to pay tax on services arise at the time of the supply as per this section. Suppose if you want to refer the time of supply for services, you have to refer section 13. These are the words of 13 subsection 1. So 13 subsection 1, it is like as a traffic police. Just it will show the way, right, where you have to go. Next, 13 subsection 2. Determination of time of supply in general or normal situations. In general or normal situations, what is the time of supply? Approximately in India, 95% of the services, 95% to I can say 98% of the services, time of supply will be determined as per 13 subsection 2. Now what is the provision? Is invoice issued within the time limit as specified in section 31? The question it is invoice issued within the time limit as specified in section 31? So what is the time limit for issue of invoice? In the next page, here we will discuss what is the time limit. But till the time, just remember the time limit might be 30 days. Okay. So is invoice issued within 30 days from the date of? Is invoice issued within the time limit as specified in section 31? If your answer is yes, time of supply will be date of payment or date of invoice, whichever is earlier. Suppose if invoice is not issued within 30 days, then the time of supply will be date of payment or date of completion, whichever is earlier. Suppose taking an example, where a person receiving audit services with you, and let us assume you are the supplier, and audit work has been completed. Suppose audit work completed on 10th June and invoice has been issued on 25th June and finally you received the payment on 5th July. This is the transaction. When your work is over on 10th June and when you issued invoice 25th June. So within 15 days you issued an invoice, right? So is invoice issued within the time limit as specified in section 31? Your answer is yes. Generally we have to issue invoice within 30 days from the date of completion of service. So here we issued invoice within 30 days. Then the time of supply will be date of payment or date of invoice, whichever is earlier. Date of payment is 5th July and invoice it is 25th June, whichever is earlier. Which one is earlier? 25th June. That is the time of supply. That is the date on which you are getting liability for payment of GST. Being a taxable person, you done audit work on 10th June. You issued invoice on 25th June and you received payment on 5th July. But irrespective of the fact, you are getting liability for payment of GST on 25th June. Are you clear with this? And suppose what will happen? The same situation, suppose audit work done on 10th June, but we issued invoice, let us assume on 20th August, but payment has been received before issue of the invoice, let us assume on same date, 5th July. Now in this situation, whether invoice issued within the time limit? No. Then the time of supply will be date of payment. What is date of payment? 5th July. And what is the date of completion? 10th June. Whichever is earlier. Which one is earlier? 10th June. That is date of completion became time of supply. Are you clear? If invoice issued within the time limit, payment or invoice, whichever is earlier. If not issued within 30 days, then payment or completion, whichever is earlier. Are you clear with this? And next, and one more thing, date of payment. What is the meaning of the date of payment? Suppose, and nowadays, as you know, Google Pay, Phone Pay, and electronic remittances became quite common. Before making book record, before making any entry in your books of accounts, automatically money is credited into your bank account. Is it right? No. Suppose if you are purchasing a thing, 50 rupees, before he is putting any book entry, automatically we are making payment. No. So earlier, when we don't have a UPI transactions and electronic remittances, first we were supposed to put a book entry, and thereafter we are receiving money in the form of the check or electronic remittances. In such a manner, earlier book entry was earlier and bank entry was taken place later. But nowadays, bank entry taking place earlier and the book entry will be later on. So in that situation, what could be the date of payment? Whether date of book entry or date of bank entry, which one we have to consider as a date of payment? In that situation, date of book entry or date of bank entry, whichever is earlier, that is the date of payment, not the time of supply. Date of payment, book entry, bank entry, whichever is earlier. Are you clear with this? When date of completion, date of invoice, and date of payment, when all these details are available, then we can determine time of supply like this. Suppose where the supplier intended to evade the tax. He didn't maintain any books of accounts, whether date of payment, invoice, completion, all these details are not available in the books of accounts of the taxable person, that is supplier. Then how we can determine time of supply? In that situation, time of supply will be, if the time of supply is not determinable as per above provision, then the time of supply is the day on which the recipient shows the receipt of service in his books of account. So whatever the entry is available in the books of accounts of the recipient, that will become time of supply. And please remember, this second provision has to be referred when we are not in a position to determine time of supply like this. That is, when the completion, invoice, payment details are not available, then only we have to refer this provision. Suppose when these three details are available, we should not refer the books of accounts of the recipient. Clear? So this is a general provision. And the next supplies in respect of the tax paid or payable on reverse charge basis. In case of the reverse charge basis, what is the time of supply? In relating to the few goods, tobacco items, and raw cotton, cashew nuts, for all these goods, reverse charge mechanism applicable in relating to the goods, right? Cashew nuts, BD wrappers, tobacco items. And now as far as services concerned, in the charge of GST, we discuss elaborately, approximately 16 cases where the reverse charge mechanism applicable, recipient is liable for payment of GST, right? When the recipient is liable for payment of GST, then what is the time of supply? What are the situations in which recipient is liable for payment of GST? We discussed elaborately in the previous chapter. But what is the time of supply from the recipient point of view? For that purpose, we have to refer 13 subsection 3. So, supplies in respect of taxes paid or payable on reverse charge basis. The first case it is where importer and exporter both are associated enterprises, and that is an import of service. Please remember, there should be an import of service along with the exporter and importer. Both must be associated enterprises. Associated concern, holding and subsidiary, branch and head office, where one organization depend upon the another organization, all these things. In that situation, the time of supply will be date of book entry or date of payment, whichever is earlier. Simple. In case of the import of service, recipient is liable for payment of GST under RCM. Okay, but it is an import of service plus both importer and exporter both are associated, then only we have to refer this provision, that is book entry or bank entry. No, it should not be the bank entry, date of payment, book entry or actual payment, whichever is earlier. And remaining all reverse charge services, for remaining all reverse charge cases, the time of supply has to be determined like this. You have to ensure is payment made within 60 days from the date of invoice. Is payment made within 60 days from the date of invoice? If your answer is yes, time of supply will be date of payment. If your answer is no, the time of supply will be 61st day from the date of invoice. Suppose taking an example where a director rendering services to the company. In this situation, director is the supplier and company is the recipient. Reverse charge mechanism applicable. Who is liable for payment of GST? Company. Clear? Suppose in this situation, yeah, the directorship services date of completion, let us assume 31st March, and recipient issued invoice. Actually, under reverse charge mechanism, by virtue of section 31, recipient is liable for issue of the tax invoice. So let us assume recipient issued invoice on 10th April, and again recipient made payment on 25th April. In that situation, what is the time of supply? Now, under reverse charge mechanism, just we need two details: date of invoice and date of payment. What's the date of invoice? 10th April. What's the date of payment? 25/4. Is payment made within 60 days? Yes. If payment made within 60 days, then the time of supply will be date of payment. That's it, 25th April. Suppose if the payment is not made within 60 days, then 61st day from the date of invoice. That will become time of supply. Are you clear with this? And this is the case of reverse charge mechanism. This is the case of reverse charge mechanism. And next, 13 subsection 4. Supply of vouchers by the supplier. Supply of vouchers by a supplier. Actually, the voucher concept, it is famous only in these 10 years. Suppose before to 10 years, actually there is no concept of any promo codes, vouchers, discount coupons, etc. Very rare cases. But nowadays, vouchers, sale or supply of the vouchers or coupons, it became quite common. Suppose barbecue nation restaurant is there. If you want to visit the barbecue nation, no need to pay the bill at the restaurant. Even you can buy those coupons or vouchers in Amazon or Flipkart. Are you getting my words? And so that for different type of the services, we can buy the coupons or vouchers. In that situation, first we have to buy the voucher. After purchasing of the voucher, we have to visit the service premises, or we have to consult the concerned supplier of service, and we have to redeem the voucher. So purchase of the voucher, consultancy of the supplier of service, and receiving of such service. In that situation, what could be the time of supply? Suppose barbecue nation voucher 10,000 rupees. Let us assume we bought on 1st April, right? And we are booking. This is date of payment actually. Okay, this is the date of payment. Suppose we visited barbecue nation. This is called date of completion on 25th April. In that situation, what is the time of supply? Actually, we made the payment on 1st April. On 1st April, we purchased barbecue nation coupon, restaurant coupon. But finally, it is redeemed on 25th April. In that situation, what could be the time of supply? What could be the time of supply? So, simply please remember, if the supply of service is identifiable at the time of issue of the voucher, if the nature of supply is identifiable, then the time of supply will be the date of issue of voucher. That is, on 1st April itself, we know the voucher can be redeemed against the restaurant services. So then the time of supply will be date of issue of the voucher. Suppose in the same situation, let us assume in Amazon, I am purchasing 10,000 rupees worth of voucher. Suppose, let us assume, such voucher can be used against any restaurant, either KFC, McDonald's, or Barbecue Nation, or even for movie ticket, or for transportation of the passenger. For any purpose, you can redeem such voucher. Let us assume such option is available. In that situation, can you say the nature of supply at the time of issue of the voucher? No, at the time of the issue of the voucher, we are not in a position to identify the nature of supply. What is the purpose for which clearly we can use? That is not identifiable. In that situation, time of supply will be the date of redemption of voucher. In that particular situation, time of supply will be date of redemption of voucher. So supply of the voucher by the supplier. If the supply of service is identifiable at the time of the issue of the voucher, then the time of supply will be date of issue of the voucher. In all other cases, the time of supply will be date of redemption of voucher. And the next. Actually, this is the concept of 13 subsection 5. When the time of supply is not determinable as per 13.2 general case, 13 RCM, 13.4 vouchers, then we have to refer 13 subsection 5. Actually, this is the, we can say, power has been given to the assessing officer. Where there are situations, assessee is reluctant to pay GST to the government. He is not maintaining any books of accounts and records. And even after exercising of the due care, the assessing officer also not in a position to identify any records. In such a situation, he can use the weapon of 13 subsection 5, and from the examination point of view not relevant, no need to refer. Right? Next, 13 subsection 6. Any addition in the value of supply by way of interest, late fees or penalty for delay payment of any consideration. For delay payment of any consideration. For such delay payment, time of supply will be the day on which the supplier received addition in value. The date on which such amount received in addition in value. Suppose let me give an example. SBI banker, Infosys providing database services to the SBI. In this situation, Infosys is the supplier and SBI is the recipient. Let us assume the project cost, it is 1000 crore. Right? Date of completion 20th June. Date of invoice 10th July. Date of payment, let us assume. Actually, there is a due date. Infosys given a due date that, sir, you have to make the payment. On or before 30th July. If there is any delay, you have to bear an amount of penalty of 10 crore, penalty clause. If the amount is not paid within the due date, the recipient has to bear penalty of 10 crore. And finally, let us assume SBI banker made the payment on date of payment on 16th August. This is the date of payment. So finally, what is the amount made? Payment made 1000 crore plus 10 crore. Totally 1010 crore. In that situation, what is the time of supply? In that situation, date of completion, date of invoice, date of payment for first 1000 crores. This is original consideration. For original consideration, what is the date of completion? 20th June. What is the date of invoice? 10th July. What is the date of payment? 16th August. So, in this situation, we have to apply the provisions of 13 subsection 2. By referring to 13 subsection 2, is invoice issued within the time limit? Yes. In case of the bankers or financial institutions, here the supplier is Infosys company, no? Within 30 days from the date of the completion of service, within 30 days invoice has to be issued. Date of completion 20th June, date of invoice 10th July. So within 30 days invoice has been issued. Then the time of supply will be invoice or payment, whichever is earlier. Which one is earlier? Date of invoice 10th July will become date of invoice will become time of supply by referring to this 13 subsection 2. Now, what about 10 crore? This is penalty or additional payment. It may be a penalty or delay payment charges or any other. For this extra amount, for this additional amount, time of supply has to be determined by referring to 13 subsection 6. By referring to 13 subsection 6, what is the time of supply? Simple. The date on which such additional payment has been received. When such amount has been received? On 16th August. So for this 10 crore, time of supply will be 16th August. That is date of payment. Are you clear with this? So in such a manner, we have to determine time of supply in relating to the services. Clear? Now, let me discuss what is the time limit for issue of the invoice in relating to the services. Very, very important for 1 mark or 2 marks of question, the time limit for issue of the invoice. First, in general or normal situations, invoice has to be issued within 30 days from the date of supply. Once the service is over, within 30 days, invoice has to be issued. In case of the supplier is a bank or financial institution, invoice has to be issued within 45 days. Suppose where the government notified suppliers or where a transaction taken place in between related or distinct persons, then invoice has to be issued. Number one, entry in the books of accounts of the supplier or before expiry of the quarter during which the supply was made. Suppose where a transaction taken place in between related parties, a transaction taken place, let us assume in the month of February, then when invoice has to be issued, entry in the books of accounts of the supplier. Suppose on the day itself, where the supplier made the book entry, then he has to issue the invoice. Suppose he didn't make any book entry, reason both are related person, no? So that supplier is reluctant to make any book entry. In that situation, at least you have to refer before expiry of the relevant quarter. What is the expiry of the relevant quarter? 31st March, no? So at least invoice has to be issued on or before 31st March. So you have to refer entry in the books of account or end of the relevant quarter, whichever is earlier. This is the time limit for issue of the invoice. Suppose there are few services where service is in the nature of continuous supply of the service. So what is a continuous supply of the service? Where a supplier providing services to the recipient on continuous or recurrent basis for a period more than 3 months. For a period more than 3 months. Suppose you are working as a statutory auditor of a company, your services will be more than 3 months. Suppose you are the technical person, you are providing technical services to the company, software services continuously. If there is any bug and you are the consultant, you have to provide the service on continuous basis or recurrent basis. In such a situation, we have to refer time limit for issue of the invoice in case of continuous supply of the service. Okay, if there is a continuous supply of the service, it will be divided into 3 parts. The first part, in relating to the continuous supply of the service, where the due date of payment is ascertainable. Yes, it is a continuous supply of the service. There will be an agreement in between supplier and recipient in relating to the periodical payments, right? For that periodical payments, is there any due date? Yes, if there is a due date, then invoice has to be issued on or before the due date of payment. Invoice has to be issued on or before due date of payment. Suppose there is a continuous supply of the service, but there is no due date. Due date is not ascertainable. Then payment has to be issued on or before, invoice shall be issued before or at the time when the supplier of service receives the date of payment. When the recipient receiving payment on or before to that date, he has to issue a invoice. Suppose take an example, I am the recipient, my electrician is working, my electrician is providing continuous supply of the service. When my AC is not working, my electrical goods are not working, on repetitive basis is continuously providing service. And we don't have any agreement for making any payment, or we don't have any due date of payment. Just on periodical basis, I will make the payment. Suppose if any festival, on occasion of the festival, I will call him and what is the bill amount, then I will settle. In such a manner, on periodical basis, there is no any agreement. Just at the discretion of the recipient and supplier, they are making payment. In that situation, supplier has to issue invoice. That is, my electrician has to issue invoice when he is receiving payment or before to receiving of payment. That is the second case. But suppose the third case, where the payment is linked to the completion of an event. There are continuous supply of the services and the payment will be linked to the completion of an event. Most probably this is the case of construction services. In construction service, what will happen? A builder will construct the house or complex, and the person who is receiving such service, he will make the payment on periodical basis. That is, if you put the foundation, 15% of payment. Once the pillars work is over, 40% of the payment. Like that, payment will be depend upon completion of an event. Then concerned contractor, that is a supplier, has to issue invoice on or before completion of that event. Suppose there is an agreement, once the foundation is over, 15% payment will be given. In that situation, once the foundation is over, the contractor has to issue invoice. That's it. Irrespective of the fact whether the recipient is willing to make the payment or not. Once the foundation is over, issue invoice. Once the pillars is over, issue invoice. Once the slab is over, issue invoice. In such a manner, where the payment is linked to the an event, invoice has to be issued on or before completion of such event. So these are the time limit for issue of invoice. In general situation, 30 days. In case of bank or financial institution, 45 days. In case of related or distinct persons, entry in the books of accounts of the supplier or end of the relevant quarter, whichever is earlier. In case of continuous supply of the service, due date of payment is ascertainable, then invoice has to be issued on or before due date of payment. Suppose where the due date of payment is not ascertainable, invoice has to be issued on or before the date of payment. Third, where the payment is dependent upon the completion of an event, where payment is dependent upon the completion of an event, then invoice has to be issued on or before completion of that event. Are you clear? And the next one. So in such a manner, just we completed time of supply of service. And next we are going to start with the topic of time of supply of goods. Before starting with the concept of time of supply of the good, first of all, let me know what is the time limit for issue of invoice in relating to the goods. Now we discussed about the services. No, please pause the video and go through once. Time of supply of the goods. Time limit for issue of tax invoice in relating to the goods. In normal situations, invoice has to be issued at the time of removal of the goods. In relating to the goods, invoice has to be issued at the time of the removal. Supply involves movement of the goods, invoice has to be issued at the time of the movement, or any other case at the time of the delivery or make available. These things it will be depend upon the situation. Suppose take an example where a manufacturing company getting order from the customer, and at the time of the removal, the manufacturer knows who is the customer and where the goods has to be delivered. In such a situation, invoice will be issued at the time of the movement or at the time of the removal, at the time of the removal of the goods. And suppose where a manufacturer at the time of the removal of the goods, he don't know who is the customer, right? And in the moment of the goods, on the basis of the customer requirement, he has to deliver part of the goods. Suppose you may come across in case of wholesaler or retailers, they will load the goods into the vehicle and they will go around the different cities or villages on the basis of the customer specification, that is on the basis of the requirement of the shopkeepers. They will deliver few amount of the goods at each and every stop. In that situation, whether concerned wholesaler or dealer or manufacturer may not be in a position to ascertain what is the amount of the goods that will be purchased by the shopkeeper or retailer. In that situation, the supplier will come across only at the time of the delivery of the goods only, no. So then invoice has to be issued at the time of the delivery or available. When he made available or when he delivered, at the time he has to issue a tax invoice. Simply speaking, at the time of the removal of the goods, you know the customer, you have to issue the invoice at the time of the removal. At the time of the removal, you don't know the customer. When you reach to the customer premises or customer place, then you will come across what is the amount of the good and what is the nature of the goods that has to be delivered. In that particular situation, invoice has to be issued at the time of the delivery or availment. These are the two simple things. And second, continuous supply of the goods. Even in the goods also, goods might be issued on continuous basis. Suppose electricity, those are measured in units. So through pipeline or cable, wire, goods are supplied on continuous basis. Invoice has to be issued at the time of issue of the periodical statement. Number 2, receipt of the periodical payment, whichever is earlier. Issue of the periodical statement or receipt of the periodical payment. Suppose where a Tata company, Tata Power, supplied to Wipro. Here Tata company is supplying electricity through cable. In that situation, on periodical basis, on monthly basis or on quarterly basis, Tata company may issue a periodical statement, and thereby Wipro company being a recipient will make periodical payment. So issue of the periodical statement or receipt of the periodical payment, whichever is earlier, on or before that day, it is a responsibility of the supplier to issue tax invoice. And the third one, sale or approval basis. When goods are delivered on sale or approval basis, please remember, sale or approval basis concept not applicable to the services. Sale or approval basis will be applicable only to the goods, where a supplier delivered goods to recipient, and there will be a time gap to the recipient. in the time, suppose where the supplier given 2 months of time, within these 2 months, if the recipient is willing to buy, he can convey his willingness and it will be treated as a purchase or sale. Suppose within these 2 months, if the recipient is reluctant to buy those goods can be delivered back without any condition in general. That is called sale on approval basis. In that situation, while these goods are delivered, it is not a supply. Reason, the recipient is not intended to buy. Clear? But in the near future, there may be a chance recipient may accept the goods. But when recipient accepted the goods, it will become supply. Then in that situation, when supplier has to issue tax invoice. Clearly, let me give a clarity about it. Supplier, when he removed goods from his premises, he has to execute a delivery challan. Through the delivery challan, goods has to be delivered. And when recipient accepted, at the time, the supplier has to issue a tax invoice. When the recipient accepted, at the time, the supplier has to issue a tax invoice. Suppose if the recipient accepted within 1 month, tax invoice has to be issued when the recipient accepted. Suppose recipient not accepted even for 1 year, then what will happen? To avoid those type of the ambiguous situation, a provision has been given at the time of the supply. That is when the recipient accepted, or 6 months from the date of removal, whichever is earlier. Within 6 months, if the recipient accepted, invoice has to be issued at the time of acceptance. Suppose within 6 months recipient is not accepted, then at the end of the 6 months, invoice has to be issued. So the intention of the legislature is, the legislature intended to give max of 6 months of time for the seller approval basis. So in general or normal situation, invoice has to be issued at the time of the removal or at the time of the delivery or at the time of availment. Second, suppose in case of continuous supply of the goods, issue of the periodical statement or receipt of the periodical payment, whichever is earlier. Third one, in case of seller approval basis, invoice has to be issued at the time of the supply or 6 months from the date of removal. Now we are going to start with the topic time of supply in relating to the goods. In general or normal situations, in relating to the goods, invoice has to be issued at the time of the date of issue of the invoice or the last date for issue of invoice. My God. So then what about the date of payment? Date of payment is not a time of supply. So the date of issue of invoice by the supplier or the last date for issue of the invoice, whichever is earlier. Suppose taking an example, we bought a big size TV which is a worth of 5 lakhs value of supply. So we are purchasing this product from the Bajaj Electricals. So Bajaj Electricals is the supplier. Suppose we are the recipients. We bought TV on, let us assume, 15th July 2025. 15th July 2025. We bought TV on 15th July 2025. And invoice issued on 20th July 2025. And we made payment, date of payment, let us assume 10th June 2025. Simply we can say this is the advance payment. This is an advance payment, advance booking. So we made payment on 10th June, they delivered on 15th July, and finally invoice has been issued on 20th July. Now in relating to this TV, what is the time of supply? When the Bajaj Electricals is liable for payment of GST. Forget about the logics and everything. Just remember date of issue of invoice. Second, last date for issue of invoice, whichever is earlier. What is the date of issue of invoice? 20th July. And what is the last date for issue of invoice? What is the last date? It is the responsibility of the supplier to issue invoice at the time of the removal. So TV has been delivered on 15th July, no? So that is the last date for issue of invoice. At the time of the removal or delivery, supplier has to issue invoice. So 15th July 2025, whichever is earlier. 15th June will become time of supply. Now the question will arise, sir, whether the date of payment will be treated as a time of supply in any situation. Generally, answer is no. In relating to the goods, date of payment is not the time of supply. In relating to the goods, date of payment is not the decision making factor. The decision making factors are only two. Those are date of issue of invoice, last date for issue of invoice. Are you clear? But now there is an amendment only in relating to the actionable claims. In relating to actionable claims. Actually, in relating to the goods, date of payment is not the decision making factor and it is not the time of supply. But in relating to actionable claims, as you know, few actionable claims are goods. Those are lottery, betting and gambling, horse race, online gaming, casino. All these are goods as we discussed in the chapter of supply. In relating to these goods, time of supply will be simple date of payment. For these goods, no need to refer the date of issue of invoice, no need to refer last date for issue of the invoice. Suppose for the purpose of the lottery, betting, gambling, online gaming, casino, for this purpose, you have to buy might be coupon, ticket, etc., tokens, etc. At the time of purchasing of the tokens or coupons, whatever the amount you paid on the time, that is when you are making payment, that time will become data, that time will become time of supply. That's it. So you may argue, sir, in that situation, the recipient not supplier not issued any invoice, or there is a time limit for issue of the invoice. You may argue any those things, but please remember for actionable claims, this is an amendment. Just the date of payment, whether it may be an advance or a original payment, irrespective of the fact, the date of payment will become time of supply. Are you clear? Suppose you deposited 10 lakh rupees worth. For 10 lakh rupees worth of chips or tickets or coupons you bought, the date on which you bought that will become time of supply. Suppose you bought 10 lakh rupees worth of chips on 20th September 2025. Let us assume, and you own 5 lakh rupees worth of chips also. You own. For this 5 lakh rupees, what is the time of supply? For this amount, no GST. Whatever the additional amount you are getting in the name of the price, or you are getting whatever the coupons or chips, it is not the time of supply. And one more thing, whatever the amount you deposited, that only the supply on which you are liable for payment of GST. Suppose these 10 lakhs and you own 5 lakhs, totally 15 lakh rupees worth of chips redeemed. You redeem total amount, and again please remember, it is not a supply. It is not a supply on which no need to pay any GST. Just at the time of the purchasing of the tokens, coupons, vouchers, or chips, whatever the name it may be called, and whatever the amount you deposited, that will become supply on which you are liable for payment of GST. That too, the date on which you made the payment, that will become time of supply. Clear? Next, 12 subsection 3, reverse charge cases. Reverse charge cases in relating to the cashew nuts, tobacco products, BD wrappers, reverse charge mechanism applicable. Reverse charge mechanism, recipient is liable for payment of GST. And apart from that, where the composite dealer getting any inward supplies from the unregistered person. Composite dealer purchasing inward supplies from the unregistered person. Composite dealer is liable for payment of GST under reverse charge mechanism. Under reverse charge mechanism. In that situation, what is the time of supply? Now the time of supply will be, number 1, date of receipt of goods. Number 2, date of payment made by the recipient. Third, 31st day from the date of invoice. Out of these things, whichever is earlier. Date of receipt of goods, date of payment made by the recipient, and 31st day from the date of invoice. Suppose, let me give a small example. Suppose we are intended to buy cashew nuts. Now, suppose where a farmer supply cashew nuts, and we are the manufacturers. The worth of cashew nuts value of supply, let us assume 10 lakhs. These goods are supplied. Let us assume on delivered on 10th June. And invoice assured, date of invoice, let us assume 25th June. And we made payment on 30th June. In that situation, what we have to refer? 3 things. First one, it is The date of receipt of goods, 10th June. Date of payment made by the recipient. When we made the payment, yeah, 30th June. 30th June. And 31st day from the date of invoice. When the invoice has been issued, 25th June, no? Is it? 25th June, yeah, 25th June is the date of invoice, 25th June, and 31 days, 31st day. So 25th to 25th around it will become 26th July, 26th July. Out of these three things, date of receipt of goods, date of payment made by the recipient, 31st day from the date of invoice, whichever is earlier. So finally 10th July will become time of supply. 10th July will become time of supply. Are you clear? So reverse charge mechanism. In general situation, what is the time of supply? Date of issue of invoice, last date for issue of invoice. In relating to the reverse charge mechanism, date of receipt of goods by the recipient, date of payment made by the recipient, 31st day from the date of the invoice, whichever is earlier. And next, section 12 subsection 4 and 12 subsection 6 as we discussed in relating to the goods, same provision. There is no any change. For vouchers and for additional payment, the provision will be remain same. Are you clear? So in such a manner, just we completed the concept of time of supply. And the next topic it is value of supply. Value of supply. As we know, wherever there is a supply of the good or service, we are liable for payment of GST, right? So what is the sentence? Wherever there is a supply of the good or service, we are liable for payment of GST. Okay, we are liable for payment of GST. On what basis we have to pay? On what basis we have to pay GST? Earlier, under the central excise, if we are manufacturing a product, we were supposed to pay central excise duty on the basis of measurement. That is on the basis of the kgs, units, liters, length of a product, size of a product, on the basis of which we were supposed to pay indirect tax. But under GST, almost 99% of the goods or services, we are liable for payment of GST on value of a product or value of service. Suppose let me give an example. If you are intended to buy a laptop, it may be 32 inches or 42 inches, etc. Earlier, we were liable for payment of central excise duty on manufacture of a product on the basis of the size, quantity, measurements, etc. But now under the GST, we are liable for payment of GST on value. Now we have to ascertain what is the value. What is the value? Again, you may simply give an answer. Sir, value is nothing but the price at which the laptop has been sold. Is it? Suppose let us assume sale price is 1 lakh. Let us assume sale price is 1 lakh. And apart from that, we delivered packing material worth of 2000. And we given accessories worth of 5000. And we given a bag, a laptop bag, which is a worth of 1000 as an additional. So totally it became 8000. Totally we are selling at the price of 1,08,000. Now my question it is whether we have to pay GST on 1 lakh or 1,08,000 or any other amount. Are you clear with this? So we are liable for payment of GST on value. Okay, what is the value on which we have to pay? The laptop worth it is 1 lakh. But apart from the sale of the laptop, we are intended to deliver few packing materials, accessories, etc. In that particular situation, what are the elements that has to be includable in value of supply? For this purpose, we have to refer section 15 of CGST Act as well as chapter 4 of valuation rules. Right? So in this chapter, we are going to learn what is the basis on which we have to determine the value of supply. So as we know, GST is payable on goods or services which are taken place in the course or furtherance of the business. And apart from that, we know where there are supplies, even if there is no consideration, we are liable for payment of GST in relating to the elements which are covered under Schedule 1. Right? Now, value of supply. Supply made to unrelated person and where the price is the sole consideration. where price is the sole consideration. In such a situation, value of supply will be the transaction value under section 15, where the supplier and recipient both are unrelated. Supplier and recipient both are not related persons, number one, and number two, price is the sole consideration. That is that only the consideration, none other than that. Supplier on supply of the good or service just is getting only that consideration, then you can say it is as a sole consideration. Are you clear? If these two conditions are satisfied, value of supply will be transaction value. So what is the meaning of the transaction value? We will discuss. What are the elements that has to be includable or excludable. Suppose where the supplier and recipient both are related and price is not a sole consideration. In that situation, we have to refer chapter 4 of the valuation rules. That means in chapter 4, we will discuss the manner of determination of the value of supply. So the first one, where supplier and recipient both are not related and price is the sole consideration, then the value of supply will be transaction value, we will discuss. Suppose where the supplier and recipient both are related and price is not a sole consideration, or where a supply is a notified supply by the government, in that situation we have to determine value of supply as per chapter 4. Right? Now first we are going to discuss the transaction value. Applicability of the transaction value. When the transaction value provision is applicable, when the supplier and recipient both are not related. They are not related persons. And next, price is the sole consideration. Then transaction value provisions are applicable. If the transaction value provisions are applicable, what are the elements that has to be includable? Number one, price actually paid or payable. That is, it may be paid in cash or credit. Both has to be includable in transaction value. Suppose taking an example, I am intended to buy a camera. Suppose we made a cash payment of 25,000 and the balance of 20,000 rupees has to be paid after 2 months. Now this is the 25,000 rupees actually paid, 20,000 rupees is payable. So now in this situation, what is the transaction value? Paid plus payable, 45,000 rupees will be the transaction value. And the next, taxes other than GST if charged by the supplier. So CGST, SGST, those should not be includable in value of supply, being we are getting input tax credit. Suppose take an example, we bought raw material worth of 10 lakhs on which we paid GST, let us assume 1.8 lakhs, totally 11.8 lakhs. And we incurred processing expenses, let us assume 3 lakhs. And we are intended to get the profit of 2 lakhs. Now, what is the sale price? Tell me. Pause the video and let me know your answer. What is the sale price? Now the sale price, it is value of inward supplies, that is raw material, 10 lakhs. Even though you incurred 11,80,000 rupees, just you have to consider 10 lakh rupees as a cost. Reason, this GST amount you are going to get input tax credit, so that it is not includable. Now, value of raw material 10 lakhs and processing expenses 3 lakhs and a profit margin 2 lakhs, thereby 15 lakhs. So that what is the value of supply? 15 lakhs. Now you have to collect GST from the customers. Let us assume 15 lakhs into 18%, which will be around 2.7 lakhs. Totally you have to say 17.7 lakhs. Now whatever the GST you collected from the customer, it has to be remitted to the government. While remittance of this 2.7 lakhs, GST paid on inward supply. This is inward supply now. It can be used as input tax credit. So 2.7 lakhs GST payable on outward supply minus 1.8 lakhs input tax credit, that is GST paid on inward supply, remaining 90,000 rupees. This is net GST payable. Are you clear? So finally you have to understand whatever the GST paid on inward supply, it is not cost. It is not a cost. Reason, we are eligible to get input tax credit. And the next point. So price actually paid or payable, taxes other than GST includable. Suppose other than GST includable. Suppose municipal taxes, other taxes, octroi, entry tax, purchase tax includable. Next, payment made to third person, partly on behalf of third person or third party on behalf of the supplier. So where the recipient making payment to third party on behalf of the supplier, it is includable in value of supply. Suppose take an example, you are buying my classes for the price of 10,000, right? Actually, you are the student, you are the recipient, I am the supplier. Suppose at my direction, you are making payment of 3,000 rupees to the institution and 7,000 rupees made payment to the stationery shop. At my direction, at the directions of the supplier, you are the recipient, you made 3,000 rupees of payment to institution and you made payment to third party 7,000. Now what is the value of supply for my class? Actually paid and payment made to third party. Totally 10,000 rupees will become value of supply. And the next one, payment made to third person includable. Next, any incidental and ancillary expenditure. Any incidental and ancillary expenditures we discussed elaborately in the regular class. Please go through once. But let me give a few examples. Suppose packing material. If it is not returnable nature, includable. If it is not returnable nature, includable. If it is returnable nature, not includable. Next, transportation and freight. Transportation and freight charges incurred by the supplier up to the place of delivery, that is up to the place of recipient, includable. Suppose after delivery of the goods, any transportation, freight, development, inspection charges incurred by the recipient, not includable in value of supply. Simply please remember, where a supplier supplying good or service, up to what extent supplier getting responsibility, what is the stage, what is the delivery place, up to which supplier getting responsibility, to that extent any expenditure incurred, includable in value of supply. After delivery, supplier does not have any responsibility. So where the recipient incurred any voluntary expenditure, voluntary development charges, those are not includable in value of supply. Next, any interest and late fee penalty for delay payment of consideration. For delay payment of consideration, any amount recovered by the supplier, includable. Suppose simple an example. Suppose we are buying a mobile phone worth of 10,000. Suppose if there is a delay in payment of 10,000 rupees, the mobile shop owner is intended to charge 1,000 rupees as a penalty or interest. Now, suppose we are making payment delay. So 10,000 rupees plus delay payment charges of 1,000. Totally we made 11,000 rupees of payment. Now, what is the value of supply for payment of GST? 10 or 11? We have to pay GST on 11,000. So interest or late fee and penalty includable in value of supply. And next, subsidies provided in any manner. Any subsidies given by any person, includable. Subsidy given by the government, not includable. Suppose take an example. These are the notebooks manufactured by the ITC company. Worth of notebook, it is 40 rupees. Now ITC company supplied notebooks to the students at the price of 15 rupees only. 15 rupees, that is 15 rupees collected from the students, and the balance 25 rupees, let us assume it is given by the Tata company. So Tata company, as you know, Tata is not a government organization, non-government organization. In this situation, ITC company getting 15 rupees from the student and from the Tata company subsidy 25 rupees. Now what is the value of supply? 40 rupees. Consideration received from the recipient and subsidy received from the other than government. Clear? Suppose in this situation, instead of the Tata company, where the central government or state government given 25 rupees of subsidy, what will happen? In that situation, value of supply will be only 15 rupees. Subsidy given by central government or state government, not includable in value of supply. Subsidy given by the central government or state government, not includable in value of supply. So these are the includable items in value of supply. So when the transaction value applicable, where the supplier and recipient both are not related and price is the sole consideration, then transaction value provisions applicable. Once the transaction value provisions are applicable, these are the expenditures which are includable in transaction value. That is, price actually paid or payable. Next, taxes other than GST. Next, payment made to third party. And the fourth one, incidental and ancillary expenditure, interest and late fee or penalty for delay payment of consideration, and subsidy received from the other than government. These are the expenditures which are includable in value of supply as per 15 subsection 2. Even in examination, you may get it is as a theoretical question also. Please remember. And the next 15 subsection 3, exclusions in transaction value. Exclusions in transaction value is nothing but discount. What is that? Discount. Now discount, section 15 subsection 3, discount given at the time of the supply. Where the discount given at the time of the supply or before to the supply. Where the discount given at the time of the supply or before to the supply, there won't be any ambiguity. Just such a discount amount separately shown in invoice. If discount amount separately shown in invoice, then such discount is not includable in value of supply. But the problem will arise where the discount is given after the supply, but still there is an opportunity where the discount given after the supply can be excludable provided three conditions has to be satisfied. First one, in terms of an agreement, discount must be exist at the time of the supply. In terms of an agreement, such discount must be exist. Number one. Number two, discount must be linked to the invoice. Discount should not be like this. Suppose if you are selling 1000 laptops or 1000 pens, we will offer a car, we will offer a 2-trip. It should not be like that. It should be like a percentage over the value. It should be a percentage of discount over the value. And third one, proportionate ITC has been reversed by the recipient. Proportionate ITC must be reversed. So when these three conditions are satisfied, first one, future discount must be exist in terms of an agreement, and the second, discount must be linked to the invoice, and the third one, proportionate ITC has been reversed by the recipient. Reason, supplier might be on the basis of the original value he availed ITC. In the near future, when he is getting discount, an additional discount in the near future, to that proportion he has to reverse ITC. When these three conditions are satisfied, even discount given after the supply can be excludable. So first, discount given at the time of the supply or before to the supply, such discount amount separately shown in invoice, it won't be the matter. It can be excludable from the value of supply. But where the discount is given after the supply, still it can be excludable provided three conditions has to be satisfied. What are those three conditions? Number one, discount must be exist in terms of an agreement. Number two, discount must be linked to the invoice. And the third one, proportionate ITC has been received. When these three conditions are satisfied, future discount also can be excludable from the value of supply. Suppose if any one of these conditions are not satisfied, you cannot exclude. Are you clear? So 15.1, 15.2 and 15.3. And next we are going to start with the topic of valuation rules. When we have to refer valuation rules. When we have to refer valuation rules. Where supplier and recipient both are related. When supplier and recipient both are related. And where the price is not a sole consideration. Not a sole consideration. And the third one, it is a notified supply by the government. When a supply is notified supply. In such a situation, we have to refer valuation rules. Chapter 4. Right? Now, first we are going to start with rule 27. Consideration not wholly in money. When we have to refer valuation rules, first one, where the supplier and recipient both are related or price is not a sole consideration, and the third one, a supply is a notified supply by the government. In that situation, we have to determine value of supply by referring to the valuation rules. Now we are going to start with the topic of valuation rules. That is chapter 4. So the first one, it is rule 27. Rule 27. Consideration not wholly in money. Where the consideration not wholly in money. In that situation, we have to refer rule 27. Suppose where you are intended to buy a mobile phone. On making the payment of 25,000 rupees, if you are buying a mobile phone, the value of supply will be determined as per section 15. No need to refer rule 27. Suppose where you are buying a mobile phone, on making payment of 20,000 rupees of cash, and apart from that you delivered old mobile phone. Right? So for purchasing of the new mobile phone, you are making payment of 20,000 rupees and you delivered old mobile phone. In that situation, consideration not wholly in money. You have to refer rule 27. Now by referring to the rule 27, the value of supply will be, the first you have to consider open market value of supply. Open market value of supply. For purchasing of the mobile phone, for purchasing of the new mobile phone, you delivered old mobile phone and 20,000 rupees of cash, right? In that situation, what is the value of supply? Value of supply will be value of the new mobile phone. Suppose new mobile phone worth it is 40,000, let us assume. Then the value of supply will be 40,000 rupees irrespective of the consideration you paid. So open market value of the supply 40,000 rupees will become value of supply. First one. Second, if total of consideration in money, suppose where the open market value is not available, then you have to go for the next option. In the next option, the consideration will be total of consideration in money plus amount equal to the consideration not in money. Suppose where to the mobile phone open market value is not available. If not available, then value of supply will be 20,000 rupees plus the cost or the price of the old mobile phone. Let us assume the old mobile phone cost is 12,000. In that situation, 32,000 rupees will become value of supply. And one more thing, please remember, if the open market value is not available, then only you have to go for second option. If the open market value is available, then the value of supply will be open market value of supply. If the open market value is not available, second one, total of consideration in money plus amount equal to the consideration not in money. That is consideration of kind. Suppose if it is not available, open market value is not available, then whatever the consideration you paid, it is also be not available. Then you have to go for third one, value of supply of like kind and quality. Sir, what could be the situation? Suppose take an example, you are purchasing a mobile phone on the basis of the specification you given. On the basis of specification given, a person who is engaged in the mobile phone manufacturer, he made a special mobile phone for you. For that, open market value is not available. Number one. Number two, you are providing consideration in the form of the service, a new service. It may be a technical, accounting work, or any other. For that service, there is no specification for determination of the value of supply. That is whatever the nature of service you provided. For that purpose, we are not in a position to determine. The consideration. So, open market value is not available, and for your service consideration is not available. Then you have to go for third one. Value of supply of the like kind and quality. Suppose the same nearest to mobile phone, the nearest to futures. What could be the price? That value has to be considered as a value of supply. So first one is open market value. If it is not available, consideration in money plus consideration in kind. If it is not available, value of supply of like kind and quality. Suppose even the similar, that is value of supply like kind and quality also not available, then what we have to do? Simple, refer rule 30. What is the rule 30? Rule 30 is nothing but 110% of the cost. 110% of the cost. But here, little bit different. How it could be? Please remember, consideration in money. Being a supplier, whatever the consideration received in money plus whatever the non-monetary consideration received. Ascertain the cost of that non-monetary consideration. Money value of non-monetary consideration computed as per rule 30. That is nothing but money received plus 110% of kind which is received in consideration. So first one open market value, second one money plus amount equivalent to the kind, third one value of third one. What is the third one? Value of supply of like kind and quality. Suppose if it is not available, fourth one money received in cash plus 110% of the kind value. In such a manner, we have to determine value of supply in relating to the where the consideration is not wholly in money. Suppose second case, rule 28. When we have to refer rule 28, where the supplier and recipient both are related persons or distinct persons, section 15 is not applicable. Then you have to refer to the rule 28. When we have to refer rule 27, when the consideration is not wholly in money, rule 27. Where the supplier and recipient both are related persons or distinct persons, you have to refer rule 28. Now, by referring to the rule 28, first we have to refer open market value. If the open market value is not available, value of supply of like kind and quality. So you should not consider this one. Directly we have to go for value of supply of like kind and quality. If it is not available, go for rule 30 and 31. Rule 30 and 31. Are you clear? Suppose let me give a chart. Rule 27. Where consideration is not wholly in money. Consideration not wholly in money. First we have to refer open market value. Open market value. Open market value of the supply. Suppose if it is not available, then money plus money value of kind. Suppose if it is not available, value of like, kind and quality. Suppose if it is not available, go with rule 30. What's the rule 30 here? Money plus 110% of cost of kind which is received in consideration. Okay. Suppose if it is not available, suppose it is not computable like that, go for rule 31. That is nothing but best judgment. Assessing officer may determine the value of supply on reasonable basis. This is rule 27. Now suppose come to rule 28. When we have to refer rule 28, where the supply is in between related persons or distinct persons. In such a situation, again, first you have to refer open market value. If the open market value is not available, you should not go with second option. There is no second option. Nil. Directly you have to go for value of like, kind and quality. Are you clear with this? So second option is not available. Directly you have to go for value of like, kind and quality. And suppose if it is not available, then go for rule 30. Suppose rule 30, as per rule 30 also, value is not determinable, then go for best judgment. So rule 27, rule 28. Next we are going to start with rule 29. Rule 29. Rule 29, where the supply made or received through an agent. As you know, as per schedule 1, where goods are supplied through an agent, even for without consideration, it will become supply. Where the principal supplied goods to agent and agent making supplies to third party. In that situation, in between principal to an agent, even if there is no consideration, it will become supply. Okay, even if there is no consideration, it will become supply. Then what is the value? Principal to an agent, goods are supplied without consideration. But it will become supply by virtue of 7(1)(c). When it became a supply, we have to pay GST on value. So when there is no consideration, how we can determine value? In that situation, rule 29 saying that first refer open market value of such goods. Open market value or 90% of the price charged by the recipient to third party. If this option is available, go with this one. Suppose, let me explain. Related person, simple principal to agent, no? In that situation, the principal has to adopt open market value of goods or 90% of price charged by agent, that is recipient, to unrelated customers. Suppose the same goods are like, kind and quality, agent supplying to the third party, no, to the outsiders, consider out of which 90% of value. Principal supplied goods to agent. Agent again supplying goods to unrelated customers. Right? So whatever the price agent supplying goods to unrelated customers, like, kind and quality, whatever the price it may be, consider out of which 90%. That is the second option. Out of these two things, you can choose any one. Open market value of the goods or 90% of the price charged by the agent to unrelated customer. This is the first one. Suppose if it is not available, then go for rule 30. Rule 30, that is nothing but 110% of the cost. 110% of cost of goods. Suppose if it is not available, go with rule 31, best judgment. So rule 27, where the consideration is not wholly in money. Rule 28, where supplies to related person or distinct persons. And rule 29, supplies from principal to an agent. Clear? And rule 30, as we discussed, 110% of the cost. Rule 31, best judgment. So please go through once. And next rule 31A, value of the supply of the goods, lottery and bettings and gambling. Now there is an amendment you have to remember. For lottery tickets, as you know, 100 by 128% of the face value of the tickets, or 100 by 128 of the price as may be notified by the government. That will become value of supply. Suppose where the tickets are sold, 10 lakh rupees worth of tickets sold. In such a situation, value of supply will be 100 divided by 128. Whatever the value we are getting, that will become value of supply. So what is the value of supply here? Suppose 10 lakhs into 100 divided by 128, which will be 80,000, sorry, 8 lakhs. 8 lakh rupees will become value of supply. 8 lakh rupees will become value of supply. The tickets value worth it is 10 lakhs. But we have to pay GST on 8 lakhs. This is the option number 1 and option number 2. Value notified by government. Suppose 10 lakh rupees worth of tickets, the value notified by the government, let us assume 9 lakhs. In that situation, out of these two things, whichever is higher. Which one is higher? 9 lakhs is higher. So that we have to pay GST on 9 lakhs. So where we are intended to sell 10 lakh rupees worth of tickets, then value of supply will be 10 lakhs into 100 by 128, 8 lakhs. Or second, value notified by the government. Any value notified by the government, whichever is higher, that will become value of supply. This is rule 31A. This is rule 31A. Come back. Are you clear with this? Any doubt? So, rule 27. Rule 27. When we have to refer rule 27, where the consideration is not wholly in money. When we have to refer rule 28, where the supply is in between related persons or distinct persons. And when we have to refer rule 29, where supplies in between principal to agent. And rule 30 concern 110% of cost. And rule 31 best judgment case. Best judgment case. Are you clear with this? Done. And the next one. Booking of tickets by 8 travel agent. Where 8 travel agent providing services to the customer. What is the value of supply? Actually, 8 travel agent, whatever the commission he is getting, on which he is liable for payment of GST. But still he has an option. He can choose this one, that is 5% of the basic fare in case of the domestic travels. In case of the domestic travels, pay 5%, offer 5% of the basic fare as a value of supply. Suppose in case of the international travels, 10% of the basic fare as a value of supply. Suppose take an example, he is an air travel agent. In this month, he have a domestic bookings worth 20 lakhs and international bookings 50 lakhs. And please remember, such 20 lakhs or 50 lakhs not belonging to the air travel agent. He has to remit 20 lakhs or 50 lakhs to the airlines companies. It is not the revenue. What is the revenue of the agent? Just commission. Now such commission may be vary from one airlines to another airlines. So to avoid the ambiguous situation, rule 32 saying that, simple, what is the domestic bookings? 20 lakhs. Offer value of supply as a 5% of domestic bookings. That is 20 lakhs into 5%, which will be 1 lakh. That is the value of supply. On 1 lakh, you have to pay GST. Next, what is international bookings? 50 lakhs. Now the value of supply will be 10% of international bookings. Now, what is the value of supply here? 50 lakhs into 10%, which will be 5 lakhs. Are you clear? So this is the air travel agent. Air travel agent has to offer value of supplies like this. And one more thing, this 5% or 10% has to be applied on basic fare. Being an air travel agent, he will collect basic fare and other charges and other taxes also. But such 5% or 10% has to be applied only on basic fare on which he is eligible for commission. Next, insurance services. where an insurance company may offer different type of the policies. In such a situation, what is the value on which we have to pay GST? What is the value on which we have to pay GST? Or what is the value on which we have to pay GST? For that purpose, we have to determine value of supply. Now, insurance service, what will happen? Insurance policy, where the entire policy towards risk, where the total premium is towards risk coverage. That means there is no any investment portion. In such a situation, value of supply will be 100% of premium. 100% of premium. Suppose I am making payment of 2000 rupees per every year for my bike insurance. Bike insurance is only to cover the risk. If any accident occurred, then only I will get any benefit. Otherwise, I won't get any benefit. So here, the total premium is towards the risk. Then value of supply will be 100% of the premium. Suppose where premium towards risk plus investment. Risk plus investment. What is a risk plus investment? Suppose I am making payment of 60,000 rupees to the LIC company every year. Now, by making payment of 60,000 rupees, I am getting two benefits. On attainment of so-and-so age, on attainment of the 60 years, I will get lump sum payment. Suppose before attaining the age of 60 years, any miss happens, my family will get a good amount. So, in that situation, my contribution covers risk plus investment. Then, what could be the value of supply? Risk plus investment separately shown, not shown. Suppose if it is separately shown in invoice, suppose like this, a premium 60,000, out of which investment portion, let us assume 40,000, then 20,000 rupees is risk portion. When separately shown like this in invoice, then value of supply will be 20,000, that is premium towards risk. But where whatever the amount I am making payment, that is 60,000 rupees towards a premium, but the insurance company not shown separately, in such a situation, value of supply will be value of supply for first year 25% of premium. 25% of premium, that is 60,000 into 25%. 15,000 rupees will become value of supply. So first year we have to pay GST on 15,000, and the second year onwards also we have to make the premium payment of 60,000, but the value of supply will be only 12.5%, that is which will be 7,500. Even though we are making the payment of 60,000, we have to pay GST only on 7,500 from second year onwards, but first year we have to pay GST on 15,000. Clear? Towards the risk and towards risk plus investment. And third one, there is another policy which is called single premium annuity policy. Single premium annuity policy. That means on yearly basis or monthly basis, I won't make any payment. In lump sum, I will make a payment, and in the near future, I will get the benefits on periodical basis. That is in annuity. Suppose today I am willing to deposit 20 lakh rupees as a single premium. On attainment of the 60 years, on monthly basis, I will get 50,000 or 60,000 rupees as a pension or any benefit. That is called single premium annuity policy. In that situation, what is the value of supply? In that situation, 10% of lump sum amount. Whatever the amount today I am depositing, out of which 10% will become value of supply. Are you clear with this? So where total premium is towards the risk, total premium will become value of supply. Where the premium towards the risk plus investment, then exclude the investment portion, the remaining risk portion will become value of supply. Suppose in invoice, insurance company not shown separately, then out of the total premium, 25% of the premium will become value of supply in first year, and from the second year onwards, 12.5% of the premium will become value of supply. Suppose in case of the single premium annuity policy, out of the total lump sum amount, 10% of the value will become value of supply. Are you clear? This is the insurance policy. And the next one, value of second-handed goods. Where a person dealing with the second-handed goods. In such a situation, we have to ensure whether such second-handed goods person, he is intended to avail ITC or he is don't want to avail any ITC. Suppose the second case, when ITC is availed, simple, as you know, normal valuation as per the other applicable provisions. When he is intended to avail ITC, whatever the purchase price, pay GST, and whatever the sale price, collect GST, set off. Pay GST, second, outward supply, collect GST, set off. That is the thing. But when he is not intended to avail ITC, then he has to pay GST only on margin price. Now here the value of supply will be the margin price. That is nothing but selling price minus purchase price. Selling price minus purchase price. Suppose where the selling price is less than purchase price, there automatically we will get negative value. Suppose he bought at 20,000 rupees a second hand bike, but he sold at 18,000. There is a negative value, so that here ignore the negative value, no GST. But where he bought at 50,000, he sold at 70,000, purchase price is 50,000, selling price is 70,000, then the margin price 20,000 will become value of supply. You have to pay GST only on 20,000, that's it. Are you clear? So value of the second-handed good. When you don't want to avail ITC, pay GST on margin price. If the margin is negative, ignore. And suppose when you are intended to avail ITC, then it could be the normal provision. Are you clear? And the last one, value in respect of the certain specified supplies, purchase or sale of the foreign currency. In purchase or sale of the foreign currency, what is the value of supply? To a banker or financial institution, the price difference between buying and selling rate. The foreign currency, buying and selling rate, the difference amount will become value of supply. Clear? And he has another opportunity, another option, that is where the currency is up to 1 lakh, 1% of such currency or 250 rupees, whichever is higher. Suppose such value exceeds 1 lakh but less than 10 lakhs. In that situation, 1000 rupees plus 0.5% of over and above 1 lakh. Over and above the 1 lakh. And next, suppose where the exchange value is more than 10 lakhs, in that situation, 5,500 rupees plus 0.1% on over and above the 10 lakhs. This is number one. And number two, 60,000, whichever is lower. Whichever is lower. Are you clear with this? First option, it is selling rate minus buying rate into number of units of foreign currency sold or foreign currency bought. Selling price minus buying price or buying price minus selling price, whatever it may be. But whatever the difference is available, when it's compared with the RBI rate, what is a different rate is available, that is a margin to the banker or financial institution, that will become value of supply. This is option number one. Otherwise, the second option is available. In that second option, where the value, that is a foreign currency exchange, is up to 1 lakh. In that situation, what is the commission? 1% or 250 rupees, whichever is higher. %1 of foreign currency exchanged or rupees 250, whichever is higher. Suppose where it is up to 10 lakhs. Up to 10 lakhs. For first to 1 lakh, 1,000 rupees plus 0.5% on over and above 1 lakh. Are you clear with this? And suppose where it is more than 10 lakhs. When it is more than 10 lakhs, in that situation, 5,500 rupees for first 10 lakhs and next 0.1% on over and above 10 lakhs or rupees 60,000, whichever is lower. So either the first option or second option, which is beneficial to the person who is dealing with the foreign exchange, he can choose the option. But once any one of the options chosen, till the end of the financial year, he has to adopt the same method. Are you clear? So that in such a manner we completed the value of supply chapter. Almost we covered all the provisions in relating to the value of supply. Okay, so first one, section 15, we started with section 15 1 applicability, 15 to includable items, 15.3 discount excludable item, and next rule 27 where the consideration is not wholly in money, and 28 where the transaction is in between related or distinct persons, and 29 where the goods are supplied from or through principal to an agent. So rule 29 is applicable only in relating to the goods, and rule 30 110% of the cost, rule 31 best judgment, and apart from that we discussed rule 32 few items. In rule 32 we discussed about the air travel agent, and next insurance services, second handed goods, and next foreign exchange. All these provisions we discussed elaborately, right? So please pause the video and go through the chapter once. So up to this part we completed chapters number 1 introduction to GST, and the second topic supply, and the third one charge of GST, and next composition scheme, and next time of supply and value of supply. And now we are going to start with the topic of input tax credit. Input tax credit under GST. Actually, there is a concept of matching, reversal, and reclaim of ITC. At the inter level, no need to refer. And even final level also, these provisions has been removed. So just the chapter name, it is input tax credit. So what is the concept of input tax credit? Input tax credit. Simple words. Where a person is a registered person, if a person is a registered person, GST paid on inward supply. What is that? GST paid on inward supply can be set off against GST payable on outward supply. On outward supply. While purchasing of the goods, we pay GST, right? Being a registered person, whether he may be an individual, factory, company, partnership firm, association of the person, whosoever. If a person is a registered person, he may have a inward supplies as well as outward supplies. On inward supplies, whatever the amount of GST paid, and on outward supplies, he will collect GST, that is, collected amount has to be payable to the government, that is GST payable. Suppose on inward supply already GST paid 10 lakhs. On outward supply GST collected which is payable to the government 15 lakhs. Actually this 15 lakhs has to be remitted to the government. But before remittance of this 15 lakhs, now the registered person will ask the government, dear government, while I am purchasing inward supply, while I am getting inward supply of the goods, inward supply of the services, capital goods, while purchasing of the inward supply of the goods and capital goods, while receiving of the inward supply of the services, I paid GST amount of 10 lakhs. Let me allow to avail such amount as a credit. So automatically department will put a few conditions. On satisfying of those conditions, entire 10 lakh rupees can be used as a input tax credit, so that GST payable on outward supply is 15 lakhs less ITC, input tax credit, that is nothing but GST paid on inward supply, which is amount 10 lakhs. The remaining balance 5 lakhs. This is net GST payable. This is the amount of net GST payable. In layman language, this is the simple concept. This is a simple concept. So now in this chapter we are going to learn what type of the inward supplies, eligible for availment of ITC. For availment of input tax credit, what are the conditions that we have to satisfy? That is eligibility and conditions, and any special circumstances, any other special circumstances. What are those special circumstances? Suppose half of the year I'm dealing with taxable supplies so that I'm eligible for availment of ITC. Suppose my taxable supply became exempt supply. In that situation, I'm not eligible for availment of ITC. In that special circumstances, how we have to deal with the input tax credit. All those things we will discuss elaborately in this chapter. Are you clear with this? Input tax credit is nothing but GST paid on inward supply can be set off against GST payable on outward supply. Inward, outward. On inward paid, on outward payable, set off. The remaining balance has to be remitted to the government. That is the concept of input tax credit. So in this chapter, we are going to learn conditions, eligibility, special circumstances, time limit for availment of ITC, right? All those situations. Let me start with section 16, section 16, 17 and 18. As we know, section 1 of the CGST Act. This act applicable to, first of all, this act is known as CGST Act 2017, applicable to whole of India, including Jammu and Kashmir. Section 2, definitions. We discussed various definitions like as a good, service, taxable person, taxable supply, furtherance of the business, exempt supply, zero rated supply, aggregate turnover. All these definitions we learned from section 2. And section 3, 4, 5, 6. Powers of officer. Powers of officer. Powers of officer we will learn at the final stage. So at the interstage, no need to learn. And section 7. Meaning and scope of supply. Meaning and scope of supply. Section 8. Section 8. Composite and mixed supply. Composite and mixed supply. And section 9 deals with charge of GST. Charge of GST. 9 subsection 1 forward charge mechanism, 9 subsection 2 PAN HM, 9 subsection 3 reverse charge mechanism, 9 subsection 4 unregistered to registered, 9 subsection 5 e-commerce operator, and section 10 deals with composition scheme, and section 11 exemptions. Section 11 exemptions. Now, as part of the marathon class, we may not be in a position to discuss all the exemptions, but we will try our best to cover the important aspects of the exemptions. And next, section 12, time of supply of goods. And section 13, time of supply of services. And next, section 14. Section 14 actually, if there is a change in rate of tax, which one we have to consider, whether the old rate of tax or new rate of tax, that is a section 14, but we didn't discuss. Actually, if you refer the regular class, we spent approximately 1.5 hours of session only in relating to the section 14. And this is next to section 15, value of supply. Section 15, value of supply, and apart from that, we discussed chapter 4 of valuation rules. And now we are starting with section 16, 17 and 18, concept of ITC, input tax credit. Are you clear? Yes sir, we are clear. Now section 16, eligibility and conditions for availment of input tax credit. First of all, eligibility. If you want to eligible for availment of ITC, you must be a registered person. If you are a registered person, then only you are eligible for availment of ITC. Are you clear? So, being a registered person, inward supply of the good or service used in the course or furtherance of the business, that amount is eligible for availment of ITC, and such ITC will be credited to electronic credit ledger. Suppose, taking an example, I am a registered person. I am purchasing AC, and which is installed for my class purpose. That is, I am intended to use in the course or furtherance of the business. While purchasing of AC, I provided my GST number and such credited into my electronic credit ledger so that I am eligible for availment of ITC. I am a registered person, purchased an AC in the course or furtherance of the business, and finally such credited into electronic credit ledger. So all these conditions are satisfied so that I am eligible for availment of ITC. And suppose, take another example, suppose we went to D-Mart, and we purchased a grinder, small grinder, which is a worth of 5,000, on which we paid 900 rupees of GST. Whether am I eligible for availment of ITC? I'm a registered person, no doubt. But such grinder not purchased in the course or furtherance of the business. And I'm not intended to provide my GST number for purchasing of the small grinder. Reason? That is for personal use. When you are purchasing an inward supply of the good or inward supply of the capital good or inward supply of the service, which is not for the purpose of the business, we cannot avail ITC, or we are not eligible for availment of ITC. So if you want to claim ITC, first you must be registered, and such inward supply must be for furtherance of the business, and you have to provide the GST number, and such credit will be credited to the electronic credit ledger. Next, conditions for availment of ITC. The first one, any one of the following documents has to be maintained. Any one of these documents has to be maintained for availment of ITC. The first one, it is invoice. You must maintain an invoice. Being a recipient on inward supply, when you are purchasing inward supply, you have to ask a tax invoice from the supplier. Suppose there are few cases under reverse charge mechanism, you have to pay tax. While you have to pay tax, you have to maintain the details of the proof of payment of tax. And one more thing, under the reverse charge mechanism, you have to issue the invoice. And now the new amendment under the reverse charge mechanism, we know recipient has to issue the invoice. Recipient has to pay, and recipient has to issue tax invoice. And again, time limit has been notified, that is 30 days. Actually, this is a new amendment. Actually, we know under section 31, supplier has to issue a tax invoice within 30 days, right? Now under the reverse charge mechanism, recipient also has to issue the tax invoice within 30 days. And next, a debit note issued by the supplier. Debit note issued by the supplier. Suppose while purchasing of the goods, we paid any higher amount. We paid a lower amount of the tax. Then what the supplier will do? Again, he will collect the balance amount. Again, he will collect the balance amount of the tax. In that situation, supplier will issue a debit note. On the basis of debit note, you can avail ITC. So, on the basis of the tax invoice, suppose in case of the RCM, the tax invoice issued by the recipient. The third one, on the basis of the debit note, we can claim ITC. Suppose in case of the import of the goods, we have to present bill of entry for clearance of the goods. Now, whatever the amount GST specified in bill of entry, we can avail ITC. Next, revised tax invoice. On the basis of the revised tax invoice also, we can avail ITC. Suppose we are purchasing inward supply of the goods from a person who made an application for registration. When you are purchasing inward supplies from him, he may not be in a position to issue a tax invoice. Reason? Just he made an application. He has to get the GST number. Once he gets the GST number, in the near future, he will issue a revised tax invoice. At the time of the purchase, just he will issue an invoice. After obtaining of the registration, he will issue a revised tax invoice which consists his GST number, even on the basis of which we can avail ITC. Next, document issued by the input service distributor. Input service distributor. The concept of ISD will be like this. Suppose where a head office is located in Maharashtra and the remaining branches are located in West Bengal, Tamil Nadu, New Delhi. In this situation, let us assume an advertisement has been given by the Maharashtra registered office. Totally the value of supply is 100 crore and GST paid 18 crore. So total ITC 18 crore, no? GST paid on inward supply 18 crore. Now such 18 crores of ITC can be availed by the registered office of Maharashtra or remaining branches. Whether all the branches are eligible to avail this 18 crores of credit? Yes. Reason, when an advertisement given across the country, all the branches are deemed to be received such service. When all the branches receive such service, branches are eligible to claim input tax credit. Now, but such ITC is vested in the hands of the registered office. Then how the Maharashtra registered office can distribute such input tax credit to all the branches without any supply? For that purpose, the Maharashtra head office has to be registered as a input service distributor. It is a separate registration. By obtaining ISD registration, a document has to be issued on proportionate basis. That is nothing but on the basis of the previous year turnover basis. Such 18 crores of ITC has to be distributed to all the branches. Thereby what will happen? the branches also will get an eligibility for availment of ITC. So by maintaining of all these documents, any one of these documents, a recipient can avail ITC. The first one it is tax invoice, revised tax invoice, debit note, bill of entry, revised tax invoice, and document issued by the input service distributor. So first one, any one of the document has to be maintained. Number two, the person taking the ITC must have received the goods or services. Very good. Goods or services must be received, then only they can avail ITC. Suppose take an example, this is the factory. This is the factory. In the month of the June, let us assume in the month of the June, we are filing the return. There is a GST liability. Let us assume there is a GST liability of 20 lakhs. Now, we bought goods from the, let us assume, Surya Sugar Limited. Already they issued tax invoice and we made the payment also. The worth of invoice value of supply, let us assume 100 lakhs and GST at the rate of 12%, which will be 12 lakhs. So we have a 12 lakh rupees worth of the input tax credit. These are the inward supply, no? Inward supply. So can we avail this 12 lakh rupees of input tax credit in the month of the June? Goods are not received. Suppose goods are in transit. Can we avail input tax credit of this 12 lakhs? No, sir. Reason, only on receiving of the goods or services. If it is not received, so that we cannot avail ITC. Once we receive the goods or services, then only we can claim ITC. Suppose, let me give another example. Suppose World Cup matches are going on. In the name of our organization, or company, we book a slot for an advertisement in cricket matches. So already BCCI issued a tax invoice and we made the payment, and entire GST amount also has been paid. It is an advertisement service for our organization. So in the next month, the advertisement will be telecasted. But before to that, we made the payment, we received tax invoice. Now, we paid tax, no? Can we avail input tax credit? No. Reason? Service is not received. We are going to receive such services in the next month. Are you clear? So when the goods or services are received, then only we can avail ITC. You might receive tax invoice. You paid the entire amount of the tax and value of supply, but still the goods or services has to be received. Then only you are eligible for availment of ITC. And the next, tax leviable on supply actually paid to the government. Yeah. If you want to claim ITC, tax must be paid to the government. Suppose where a supplier making made supplies to the recipient. Even the recipient not paid an amount to the supplier, but supplier filed his return GSTR 1 and 3B. And tax paid, then only such tax paid amount will become input tax credit to the recipient. Suppose if the supplier didn't pay such tax amount, recipient cannot claim ITC. If the supplier filed GSTR 1, then only it will be auto-populated in GSTR 2B to the recipient. When supplier not filed GSTR 1 or supplier not made payment of tax to the government, then recipient cannot avail ITC. So the essence of the story it is, tax must be paid to the government, either supplier or recipient. Once the tax paid to the government, then only the recipient can avail ITC, or the registered person can claim ITC. And next, filing of return. Return must be filed. If you want to claim an ITC, you must file your return. If you didn't file the return, you cannot claim ITC. Suppose if you didn't file GSTR 3B, how you can claim input tax credit? Are you clear? All your supplies are filed GSTR 1. You have to take the credit. You have to accept the credit. For that purpose, you have to file the return. Next, goods received in lots or installment. When the goods are received in lots or installments, only on receiving of the last lot or installment, you are eligible for availment of ITC. Suppose take an example, you order 10,000 mobile phone batteries, and for entire 10,000 mobile batteries, single invoice has been issued. Now in the first lot, you received 2,000 batteries. Can you avail ITC? In the second lot, 5,000. The third lot, again 2,000. Even though you received 9,000 mobile phone batteries, still you are not eligible for availment of ITC. Only on receiving of the last lot, you are eligible to claim input tax credit. Clear? And the next one. And in that situation, it is better to suggest, array yaar, when you are delivering 2,000 mobile batteries, issue invoice only for 2,000 batteries. Thereby, it will give a benefit to the recipient. Reason, recipient can avail input tax credit to that extent, no? So when you are issuing an invoice for a bulky amount or for a lot of goods, and when you are delivering goods on installment basis, what will happen? The recipient has to wait for the last installment or for receiving of the last lot. So, but finally, when goods are delivered in lots or installment, recipient can avail ITC only on receiving of the last lot or installment. Next, payment for the invoice to be made within 180 days. Now the recipient, where see, in this example, even though recipient didn't pay any amount to the supplier paid tax from his own pocket. He filed GSTR1 and 3B, and such tax became input tax credit to the recipient. Now, recipient enjoyed the service or good, he enjoyed the input tax credit, but he didn't pay any amount. Even in that situation, the government given an opportunity, you can enjoy for the period of the 180 days. At least you have to make the payment within 180 days. If you didn't pay such amount within 180 days, on 181st day, you have to reverse the credit. Dear recipient, please remember, we given an opportunity for 180 days. Within 180 days, you didn't make the payment to supplier. Whatever the input tax credit you claimed, such amount has to be reversed along with the interest, and such interest will be computed from the first day onwards. Okay. Next, 16 subsection 2, these are the conditions for availment of ITC. Next, 16 subsection 3, if depreciation claimed on tax component, ITC not allowed. If depreciation is claimed on tax component, ITC not allowed. What is that element? Here there is a small example. Suppose we bought a plant and machinery 10 lakhs and GST 18%. In total 1,80,000. Total amount 11,80,000. How much? 11,80,000. See here, the capitalized amount is 10 lakhs. Sorry. Value of the plant and machinery is 10 lakhs and GST paid 1,80,000, 11,80,000. Now the question it is, what is the amount that you are intended to capitalize in your balance sheet? Either 10 lakhs or 11,80,000. What is the amount with you have to capitalize in your books of accounts? 10 lakhs or 11,80,000. You have both options. Either you can capitalize 10 lakhs or capitalize entire 11,80,000. First one, suppose if you capitalize 10 lakhs, what will happen? Here GST amount not capitalized, so you can claim 1,80,000 rupees input tax credit, and on 10 lakh rupees claim depreciation. That's it. Suppose if you capitalize 11,80,000, what will happen? GST amount capitalized, no, so ITC cannot be availed. You cannot claim input tax credit in GST. Now under the Income Tax Act, you can claim depreciation on 11,80,000. So you have to choose which one is beneficial, whether to claim ITC or to claim depreciation. And my opinion, when you are eligible for ITC, it is better to go for input tax credit. Suppose when you are not eligible for availment of ITC, it is better to go for capitalized. Okay. Next. So, and the last one, time limit for availment of ITC, 16 subsection 4. What is the time limit? So why we have to refer the time limit for availment of ITC? Let me give a small example. Suppose this is a situation. We bought inward supplies in the month of the August. Actually, in the month of the August, when we bought inward supply of the good or inward supply of the capital good or services, might be we will avail input tax credit in the month of the August or September, October, right? In these 2-3 months, we can claim input tax credit. Suppose due to clerical mistake, we come across the same situation in next year June. Suppose this is August 2024, and in the June 2025 we come across, in relating to this inward supply of the good or capital good, we didn't claim input tax credit. No ITC. We didn't claim input tax credit due to inadvertence error. Might be clerical mistake. We didn't claim input tax credit. Now in the month of the June 2025, can we claim such amount as ITC? Are we eligible to claim input tax credit? Yes, but there should be a time limit. There should be a time limit. Suppose if there is no time limit, what will happen? Suppose in the year of the 2030, we will say, sir, in the year of the 2020 or 22, my grandfather bought a capital good or inward supply of the good. He don't know about the input tax credit provision, so that in the year of the 2020, he didn't claim any ITC, sir. Now this is the 2030. Now we have a tax invoice. Given an opportunity for availment of ITC. If you ask like this, what will happen? How far it is feasible to depart, how far it is feasible to cross verify whether in the year of the 2020, that is 10 years before, whether he claimed ITC or not, right? Now, so to avoid those type of the ambiguous situations, in GST Act under section 16 subsection 4, time limit has been provided. Now what is the time limit? Let me say, now this is the 2023-24 financial year. Now, yeah, in the 2023-24 financial year, in that financial year itself, you have to claim input tax credit for any inward supply of the good or capital goods. Suppose if you didn't claim any input tax credit, still even after end of the financial year, even after end of the financial year, still you have an opportunity. So what is the last date, sir? From the end of the financial year, identify the 30th November. Next to 30th November. Number one. Number two, actual date for filing of annual return. Actual date for filing of annual return. As you know, we have to file GSTR 9 annual return. Actually, due date for filing of the annual return, it is 31st December. Suppose, as you know that you may not be in a position to wait till the due date of 31st December. You might filing return before to the 31st December. In such a situation, we have to consider actual date for filing of annual return. Out of these two dates, whichever is earlier. 30th November or actual date for filing of the annual return. If you find any inward supply of the good or services, if you find any inward supply of the good or services that is ITC not claimed, that input tax credit can be claimed on or before earlier of these 2 days or earlier of these 2 dates. Suppose if you find any invoice after this date, suppose earlier date, let us assume 30th November became earlier. The reason you filed annual return on 15th December. Thereby, which one is earlier? 30th November will become earlier. No. On or before 30th November, if you find a tax invoice, you can claim ITC. Still, you have an opportunity. Suppose if you find any tax invoice after this date, what will happen? Yeah, you filed, already you pay tax. You have a tax invoice. Everything is genuine. Earlier, you are unable to claim input tax credit. Now you come across that in previous days we didn't claim ITC, but you find such tax invoice after this date, after the last date for availment of ITC. Then what will happen? No ITC. You don't have any argument. That is an importance of section 16, subsection 4, time limit for availment of ITC. So we completed section 16. Any doubt up to this part? Any doubt? Yeah. Let me explain another concept where actually earlier where a registered person getting inward supplies from the different peoples, different registered persons, they will file GSTR 1 and it will be auto populated in GSTR 2B. Thereby registered person is eligible to claim input tax credit. Okay, suppose any few inward supplies not provided in GSTR 1, what will happen? Earlier we were supposed to claim input tax credit on provisional basis. What is a provisional basis? The recipient registered person will show tax invoice to the department. Sir, I bought these goods from the Mr. Jed. He didn't file GSTR 1, sir, but I paid tax to the government. Sorry, I paid tax to him. This is the tax invoice. When you are making available such type of the information, you are eligible to claim 50% of ITC or 20% of ITC or 5% of ITC. In such a manner, earlier on provisional basis you are eligible to claim input tax credit. Now such provisional basis has been removed. Suppose you bought inward supply from the Mr. Z, okay, and you pay tax to him, but Mr. Z didn't file GSTR1. Now you are arguing in front of the government. Government, I paid tax to Mr. Z. He didn't file GSTR1, but I have a tax invoice. Let me allow for availment of input tax credit. Department saying that, no, sir. Sir, on provisional basis, those provisions are gone. Only on actual basis you are eligible for availment of ITC. Sir, then I pay tax to Mr. Z, no? Then the department saying, go and follow up, make a call, and put an email to him for filing of the GSTR1, for uploading of the tax invoice. You have to follow. You have to follow. Department not taking any responsibility in relating to the inward supply of a registered person. It is the responsibility of the registered person to ensure whether all the inward supplies has been properly provided in GSTR1 and properly auto-populated in GSTR2B. Now, no registered person can claim input tax credit on provisional basis. That is, by showing of the tax invoice, you cannot claim any input tax credit. Are you clear with this? Any doubt? So just we completed section 16. Eligibility and conditions to be satisfied for availment of ITC. Please go through once. Now we are going to start with section 17. And the next one, section 17, apportionment of credit and blocked credit. Apportionment of credit. When the concept of apportionment of credit will come into the picture, where an inward supply of the good or inward supply of the service used for taxable supply, we are eligible for 100% of ITC. We are eligible for 100% of ITC. Suppose where inward supply of the good or inward supply of the service used for taxable supply as well as exempt supply, what will happen? We are eligible for availment of ITC in proportion to the taxable supply. We are eligible for availment of ITC in proportion to the taxable supply, right? So now 17 subsection 1. Goods or services used partly for business and partly for others. Then we are eligible for availment of ITC only to the extent of the inward supply of the goods or services for business. That is 17.1. Now the 17.2 will come into the picture. Even though inward supply of the good or services used for business purpose, the outward supply must be taxable supply. That is, goods or services used partly for taxable supplies and partly used for exempt supply. The amount of credit restricted to the extent of taxable supplies. So you have to understand carefully. Inward supply of the good or inward supply of the services used for business and for personal. If you are using for personal, no ITC. These are the words of 17 subsection 1. Suppose if you are using for business, yes, you are eligible for availment of ITC by virtue of 17 subsection 1. Now 17 subsection 2 again saying the words of 17 subsection 2, or suppose even inward supply of the good or inward supply of the services used for business, if your outward supply may be a taxable supply or exempt supply. If outward supply is an exempt supply, then no ITC. If your outward supply is taxable supply, then only you can avail or claim input tax credit. So understand the interpretation of 17.1 and 17.2. Next 17.3. And one more thing here you have to remember, taxable supply include zero rated supply. Taxable supply include zero rated supply. For exempt supply, you cannot claim ITC. What is the meaning of the exempt supply? On outward supply, you are not paying GST. When you are not liable for payment of GST on outward supply, why the government has to give an opportunity for availment of ITC in relating to GST paid on inward supply? So the government saying that when you are not liable for payment of GST on outward supply, you are not eligible to claim any input tax credit in relating to input goods and input services. So when your outward supply is an exempt supply, no ITC. Suppose if your outward supply is zero rated supply, eligible for ITC. Sir, what is the difference between exempt supply and zero rated supply? Exempt supply concern, tax and outward supply is nil. But zero rated supply also, you are not liable for payment of GST on outward supply, but still you are eligible to claim ITC. So what are those zero rated supplies? Zero rated supplies are supplies to special economic zone or special economic zone developer. Number one. Number two, export of goods or services. These two called zero rated supply. These two called zero rated supply. These two called zero rated supply. In relating to this inward supply of the goods or services, you are eligible for availment of ITC. When you are making supply to Sage on outward supply, no GST. When you are doing any export of the good or service on outward supply, no need to pay GST. Even though you are not liable for payment of GST on outward supply, still you are eligible to claim input tax credit, that is called zero rated supply. So actually exempt supply or zero rated, no need to pay GST on outward supply, no need to pay GST. But in case of the exempt supply, you are not eligible for input tax credit, but for zero rated supply you are eligible to claim ITC. So what are the zero rated supplies? Only there are two supplies are there under the zero rated supply. The first one, supplies to Sage or Sage developer. Number two, export of the good or services. Actually 17 subsection 3 deals with apportionment of credit. In relating to the apportionment of credit, we will make a separate video on it and we will provide in our YouTube channel. But one thing you have to understand, the apportionment of credit concept is approximately, it could be a 1.5 hour of session, and we given in regular classes elaborately. So in exempt supply concept we are not going to discuss here, but let me say exempt supply, when outward supply is an exempt supply, you are not eligible for availment of ITC. That's it. Next, 17 subsection 4, special provisions for input tax credit in case of the banking company and financial institution. And don't worry about it, in examination also in previous 4-5 attempts you are not getting any question from 17 subsection 3. Suppose, sir, I'm not in a position to remember or I'm unable to understand the concept of 17 subsection 3, that is apportionment of the credit. Don't worry about it. Just whatever the provisions you are going to learn, have a good picture and focus on practical questions. Understand the provision properly. It's enough. Easily you can score 40 plus in indirect taxes. Once you are able to score 35 to 40 marks in indirect tax, and automatically it will become an exemption paper. Reason, easily you can score 20 to 25 in direct tax paper. So automatically taxation will be an exemption paper, no doubt. And 17 subsection 4, special provisions to the banking company. As you know, banking company providing taxable supply as well as exempt supply. Okay, and the banking company, taxable supplies are, what are the taxable supplies? Banking services. And what are the exempt supplies that are provided by the banker? Banking, maintenance of the saving account, exempt supply. Deposits, exempt supply. Withdrawals, exempt supply. Okay, so like that, banker providing different type of the exempt supplies. And what are the taxable supplies? Demand draft, commission charge. Foreign exchange conversion, commission charge, taxable supply. ATM charges, ATM transaction charges. Those are the taxable supplies. So bankers are providing taxable supplies as well as exempt supplies. In that situation, what will happen? Computation of apportionment of credit will become difficult task for them. Difficult task. Reason, where an AC has been purchased, how we can segregate such AC has been used for taxable supplies and exempt supply, and where a personal computer has been purchased by the banker, how far it is feasible to segregate this computer has been used for taxable supplies as well as exempt supply. So by considering this type of the practical situations, an option has been given under 17 subsection 4. The first option, as we know, the regular one. Dear banker, if you are able to segregate taxable supply and exempt supply, go with that option. That is option number 1. Otherwise, the second option is available. Under the second option, don't think about the taxable supplies and exempt supplies. Any inward supply of the capital good, inward supply of the service, or inward supply of the goods received, and any GST paid on it, claim 50% of ITC and forget about the 50% of ITC. No need to maintain the records about how much of taxable supplies you are making and how much of exempt supplies you are making, and what are the inward supply of the good or services you received, and computation process. No need to think about it. Just suppose if you purchase a personal computer worth 1 lakh, 18,000 GST paid, claim 9,000 credit, 9,000 forget. You have to forgo 9,000 rupees. Suppose you purchased a generator worth of 10 lakhs on which you paid GST amount of 2 lakh 80,000. Claim 1 lakh 40,000 rupees of ITC, forget 1 lakh 40,000 rupees of GST. No need to maintain any books of accounts and records. That is option number 2. Now, it is the discretion power of the banker to go with option 1 or option 2. Option 1 is nothing but regular basis. You have to identify, you have to segregate the inward supplies in relating to taxable supply and exempt supply. But under option 2, what will happen? Just to claim 50% of ITC and forget about the remaining balance of 15% of ITC, 50% of ITC. Suppose if you choose a second option, one more additional benefit is available. What is that one? Suppose where a banker is located in New Delhi and received services from a branch which is located in Maharashtra. Both are distinct persons. Actually, this is the taxable supply. Actually, this is taxable supply. When this is a taxable supply and whatever the GST charged, in this situation, you can claim 100% of ITC. No 50-50. You can take 100% of input tax credit. Reason? You are the same persons. Only for the purpose of GST Act, we segregated you as a distinct persons. So this is a cross-checking mechanism. So even you are under the 50% of ITC concept, where a banker received services from the other branch of the same bank having the same permanent account number, in that situation, 100% of ITC is allowed. These are the provisions of 17.4. And next we are going to start with the topic of 17 subsection 5 blocked credit. Blocked credit. Now under 17 subsection 5, what will happen? You know, any inward supply of the good or service, any inward supply of the good or service used or intended to be used in the course or furtherance of the business eligible for availment of ITC. Okay, done. But the matters, the inward supply of the goods or inward supply of the services or capital goods which are notified under 17 subsection 5, even those supplies used or intended to be used in the course of furtherance of the business, you are not eligible to claim ITC. Please remember, under the blocked credit, whatever the elements, whatever the things, whatever the capital good, whatever the services given, if those things are purchased even for the purpose of the business or even for the purpose of the taxable supply, you cannot claim ITC. That is the concept of blocked credit. Simply ITC is blocked, red mark. Are you clear? So what are the items? What are the items that are covered under 17 subsection 5? Let me discuss. The first one, 17 subsection 5, motor vehicle, vessel, aircraft. First one, blocked credit, motor vehicle. Motor vehicle for transportation of passengers not exceeding 13. Not exceeding 13. This is blocked credit. Motor vehicle for transportation of the passengers not exceeding 13. It is blocked credit. Suppose if you are purchasing car, bikes for the purpose of the business, you cannot claim input tax credit. Reason, this is the motor vehicle for transportation of the passengers not exceeding 13. Suppose if you are purchasing a bus which is for carrying passengers more than 13. Suppose where a software company purchases a bus to pick up and drop off their employees. Now such software company is eligible to claim ITC on bus. Reason, that is meant for transportation of the passengers exceeding 13. Suppose such software company bought few cars for transportation of the employees, input tax credit is blocked. So what is blocked here? Only motor vehicle for transportation of the passengers not exceeding 13. Suppose lorries, eligible. Company can claim ITC. Please remember, whatever the element here specified, that only is blocked. Motor vehicle for transportation of the passenger not exceeding 13, block. Number 1. And number 2, aircraft is blocked. Vessel is blocked. In relating to these items, input tax credit not allowed. Suppose where Reliance company purchased 3 aircrafts for transportation of the directors and officers. ITC not allowed. Suppose where ONGC company, let us assume, purchasing 2 vessels, or suppose to visit their oil rigs near to the Indian territory vessels, they cannot claim ITC. Sir, we are purchasing aircraft or vessels or motor vehicle for the purpose of the business only. No, even then, the department, the government is not intended to provide any input tax credit. So what is blocked here? Motor vehicle for transportation of the passengers not exceeding 13. Aircraft, vessel blocked. But for these 3 vehicles, there are exceptions. Okay, ITC is not allowed, but the motor vehicle, aircraft and vessel will be allowed as a ITC only for few people. Who are they? Number 1, a person who is engaged in further supply of motor vehicle, vessel or aircraft. Suppose I am the car dealer. I am purchasing cars and again selling the same cars to the customers. So I am engaged in further supply of the motor vehicle. You are eligible to credit. Exception number 1. Number 2. Suppose you are engaged in transportation of passengers. Suppose Indigo Airlines purchased 2 flights. They are engaged in transportation of the passengers. They are eligible for ITC. Suppose vessel, where a company engaged in transportation of the passengers from one country to another country or one place to another place. Now, that is their services are transportation of the passengers, eligible for ITC. And the third one, imparting skills on driving, flying, navigating. Suppose where you are running a driving school for driving, that is for motor vehicle, aircraft and vessel. In that situation, you are eligible for ITC. First of all, these 3 things are blocked credit. These 3 things are blocked. No person can claim ITC. But in these 3 cases, motor vehicle, aircraft or vessel allowed for to claim input tax credit. Only these 3 people. Simply you can remember, it is like as a fit. Only for fit services. Only for fit services. Only for fit services, motor vehicle, aircraft and vessel, ITC allowed. For other than fit, no ITC. No ITC. And the second one, suppose where a business person purchased motor vehicle, aircraft or vessel, he is not eligible for claiming of any ITC. Is it clear now? Suppose I am the manufacturer, I bought 2 cars, no ITC. I bought helicopter, no ITC. I bought vessel, no ITC. Suppose after purchasing of those things, okay, I'm not eligible for ITC, okay, but I'm incurring an expenditure relating to repair and maintenance. Can I claim ITC in relating to repair and maintenance? So repair and maintenance of motor vehicle, vessel and aircraft. Simple. For fit, ITC allowed. For others, no ITC. Hurry yaar. If you purchase any motor vehicle, vessel or aircraft, no ITC. Suppose you are not eligible for ITC, but you bought. After purchasing of the motor vehicle, aircraft and vessel, if you are getting any repair and maintenance services, you cannot claim ITC. Suppose a person who is very smart guy, instead of purchasing of the motor vehicle, vessel and aircraft, he is taking such motor vehicles on rental basis. He don't want to buy motor vehicle, but he want to take the motor vehicle on rental basis. He don't want to buy aircraft or vessel, but he want to get aircraft or vessel on rental basis. Thereby it will become inward supply of the service, no? So that, can I claim ITC? No. If it is not a capital good to you, when a motor vehicle, aircraft or vessel is not a capital good, then if you are getting such motor vehicle, vessel or aircraft on rental basis, even in that situation, ITC not allowed. If it is not a capital good, and when you are getting such capital good on rental basis, it won't be treated as inward supply of the service. So no ITC. If you bought, no ITC. If you are taking on rental basis, no ITC. Are you clear? So what is the block? Motor vehicle, vessel and aircraft. And the next one. And the next one. Next one, food and beverages, outdoor catering, beauty treatment. These are the personal nature, so you cannot claim any ITC. Food and beverages, outdoor catering, beauty treatment services. All these services might be received in the course or furtherance of the business. You cannot claim ITC. Suppose movie production is going on. In that process, the producer has to offer food item to the all the actors and all the people who are participating in the movie production. Even it may be for the purpose of the business, but they cannot claim ITC. So, where a company conducting annual general meeting and the people or the shareholders who are attending for the meeting, for them, a company has to get outdoor catering services for the purpose of the business, but they cannot claim ITC being it is blocked. Are you clear with this? But one thing you have to remember, where two people are engaged in same line of the business, they can claim ITC. Suppose, let me give an example, where Geeta restaurant providing services to the Tata company, outdoor catering services. In this situation, no ITC. Tata company getting these outdoor catering services for the purpose of the business, but cannot claim ITC. But let me say another example. Now Geeta restaurant taking services of the suppose tomato restaurant. Now the services of tomato restaurant will become inward supplies to the Geeta restaurant. These inward supply now ITC allowed. Sir, why in this situation ITC allowed? Being they are engaged in same line of the business. If they are engaged in same line of the business, they can claim ITC. Otherwise, if any person getting these type of the services, food and beverages, outdoor catering or beauty treatment, ITC not allowed. And next, apart from that, where an organization getting any services for employees, for personal consumption of the employees, ITC not allowed. But one thing you have to remember, any inward supply of the good or inward supply of the service received by the employer in compliance with any law for the time being in force, then ITC allowed. Suppose where an employer purchasing fridge or cooler for the employees, for personal consumption of the employees, ITC not allowed. But by referring to the Factories Act, where in an organization the number of employees are greater than or equal to 250, it is a responsibility of the employer to provide chill water in summer season. For that purpose, employer purchase a cooler or a fridge. In that situation, what will happen? He can claim ITC. Even though it may be for personal consumption of the employees, he is intended to buy or he is intended to receive the service in compliance with any law prevailing or any law for the time being in force. In that situation, the employer is eligible for availment of ITC. Are you clear? And the next, works contract and construction services. Works contract or construction services, ITC not allowed. Suppose where a manufacturer constructing a factory building or office building, even it may be for the purpose of the business, ITC is blocked. But there are few cases where you can claim ITC. Suppose the works contract or construction services are not capitalized as per accounting standard. Not capitalized, number one, or which are in revenue nature, temporary nature. In that situation, they can claim ITC. Suppose I am the manufacturer, I built a building for office or for manufacturing purpose, I cannot claim ITC. Suppose there is a small repair, I am getting works contract or construction service. Such repair services won't be capitalized, and any GST paid on it, which is in revenue nature, I can claim ITC. And next, for installation of plant and machinery. If you are receiving any works contract or construction services, yes, you can claim ITC. Suppose while installation of the plant and machinery or generator, we have to receive works contract or construction services for supporting structure. And any amount paid for it, you can claim ITC. Reason, for installation of the plant and machinery, ITC allowed. Next, inputs under the composition scheme. A person who is under the composition scheme, he cannot claim ITC. And a person who is purchasing from the composite dealer, he cannot claim ITC. Reason, where a person purchasing goods from the composite dealer, he won't pay tax. And the composite dealer also won't issue any tax invoice. So, composite dealer cannot claim ITC, as well as a person who purchasing goods or services from the composite dealer also, no ITC. Next, inputs by the non-resident taxable person. It is not the non-resident taxable person. A person who is an NRTP, he bought goods to India, let us assume. And who is a non-resident taxable person? A person who don't have a permanent place of the business or residential place in India, but he want to do the business for a temporary period not exceeding 90 days. He is called NRTP. Suppose where an NRTP bought diamonds or jewelry into India, and in India he received different type of the services, suppose security, hotel, accommodation, food, advertisement, all the services might be received. But what about the services received by the NRTP in India? No ITC. Sir, he receiving all those services for his business only? No. Even where a non-resident taxable person, NRTP, he receiving any inward supplies in India, he cannot claim ITC. He can claim input tax credit only in relating to one element, that is any IGST paid at the time of clearance of the goods with the custom department. After unloading of the goods will be with the customs department. At the time of the clearance of the goods from the customs department, he has to pay basic customs duty and IGST. Basic customs duty, no input tax credit. But whatever the amount of IGST paid while clearance of the goods, only that amount he can claim input tax credit. And any inward supply of the goods or inward supply of the services received in India, no ITC, even those received for the purpose of the business. And next, for personal consumption, if you are receiving any goods or services for personal consumption, ITC blocked. Next, lost or stolen goods. Suppose any inward supply of the goods received or capital goods received and kept separately for the purpose of the use, and if those goods are stolen or destroyed or lost, we cannot claim ITC. Reason? Where inward supply of the good or services or capital goods used for the purpose of the final product, then only you are eligible to claim ITC. There may be a genuine reason at the part of you, sir, my inward supply of the goods are stolen, destroyed, any reason, but you cannot claim ITC. One and only the reason it is those inward supplies are not used for outward supply. Such ITC is blocked. And next, evasion of tax or confiscation of the goods by department. Suppose where you are getting inward supply of the goods, you pay tax and you are maintaining tax invoice, and there is a genuinity at the part of you, then only you are eligible to claim ITC. Suppose on inward supply you are intended to evade the tax. So you made a call to the supplier, array yeah, transfer the goods at midnight and no person can catch you and no need to pay tax, and I'm also be use those inward supply for outward supply and I won't charge GST to the customer, and finally we are intended to evade the tax. So when he given instruction, when you given this type of the instruction to a supplier, he transported goods in a lorry, and in the meanwhile such information has been given to the, suppose any one of the employee, genuine person like you, given an intimation to the department and department caught those goods, confiscated. What is the meaning of the confiscation? Confiscation, taking into the custody. Where the department taking into the custody, now you are saying, being a recipient or registered person, sir, actually such lorry driver don't have a knowledge about the e-way bill, he don't have a knowledge about the tax invoice. When you are arguing like this, department simply will say, array yaar, you are intended to evade the tax and we caught the goods, we confiscated the goods. Now, if you are willing to pay tax and penalty and interest, anything under section 73 or 74, these goods will be cleared, otherwise we cannot clear. So what will happen? You have to pay tax, no? But when you are making payment of tax under section 74, that is under the fraud situation, you cannot claim ITC. You may argue, sir, those are inward supplies for me, I paid tax, I paid in a penalty, but those may be inward supply. There is no genuinity at the part of you. You are intended to evade the tax. In the process of evasion of the tax, the department caught you and the department collected tax from you. In that situation, you are not eligible to claim input tax credit. Clear? So 17 subsection 1. When your inward supplies are for business, you can claim ITC. 17 subsection 2. Even the inward supplies used for business purpose, when your outward supply is taxable, then only you are eligible to claim ITC. 17 subsection 3. In relating to exempt supply, you cannot claim ITC. And for taxable and exempt supply, we have to claim ITC on proportionate basis. 17 subsection 4, an option given to the banker. 17 subsection 5, blocked credit. Are you clear with this? So we completed section 17. Please pause the video and go through once. And the next one, section 18, availment of ITC in special circumstances. So 18 subsection 1 deals with availment of ITC in special circumstances. 18.2, time limit to take ITC, that is in relating to 18.1. And 18.3, transfer of ITC on account of change in constitution, that is merger, demerger, amalgamation, death of the registered person, etc. Next, 18 subsection 4, ITC reversal on switching over from switching over to composition scheme or taxable supply became exempt supply. And 18.5, just it is a miscellaneous provision. And 18.6, supply of the plant and machinery, supply of a plant and machinery after tax application. Supply of plant and machinery. Okay. So first of all, let me start with section 18 subsection 1, availment of ITC in special circumstances. 18.1a. So what is the concept of 18.1a? Where a person is liable for registration, he has to make an application for registration. And once he made an application on providing of the sufficient details, registration will be granted. Now the question will arise, what is the date from which he is liable for payment of GST? Question number 1. And question number 2, what are the inward supply of the goods or inward supply of the services or capital goods in relating to which he can avail ITC? These are the two big questions in relating to the availment of ITC. Suppose let me give a clear picture about it. Suppose take an example where a person commenced the business in the month of June. Up to the date of September, no registration, no GST. Reason, his aggregate turnover is less than threshold limit. Now let us assume on 10th September, his aggregate turnover exceeds threshold limits. Aggregate turnover exceeds threshold limit or exemption limit. Thereby, he made an application to the department on 25th September. And finally, registration granted on 5th October. Now, the first question, date of liable for, date for liable to pay GST. What is the date on which he is liable for payment of GST? Number 1. Number 2, base date for availment of ITC. So, what is the date on which the goods held as a stock, in relating to those goods he can avail ITC? The first one, what is the date for liable for payment of GST? What is the date? Simple. 10th September his aggregate turnover crossed. So that from the 10th September onwards, he is liable to pay GST. And base date for availment of ITC. To consider base date for availment of ITC, you have to ensure what is the date he is getting liability for payment of GST, 10th September. Now we have to ensure whether he made an application within 30 days. He liable on 10th September and he made an application on 25th September. So that he made an application within 30 days. In that situation, the base date will be 9th September. He is getting liability on 10th September, no? So whatever the goods held as a stock on 9th September, 9th September closing stock, in relating to that, he can avail ITC. So simple, you have to remember what is the date of liable for payment of GST. Before to that date, whatever the goods held as a stock, those goods may be held as a input goods or input goods in work in progress or input goods held in finished goods. In relating to all these things, we can claim input tax credit. So we have to count on the day, that is the day before for liable for payment of GST. The day before to liable for payment of GST. It became liable for payment of GST on 10th September. So before to that day, 9th September. In relating to the closing stock on 9th September, we can claim input tax credit. And on the day, input goods may be held as it is, input goods held in work in progress, input goods held in finished goods, all those things we have to be reckoned for availment of ITC. So actually this is the concept of 18 subsection 1 clause 8. 18(1)(a). So where a person became liable for registration and he made an application within 30 days, then he can claim ITC in relating to the goods held as a stock before to the date of liable for payment of GST. But the condition is he has to make an application within 30 days. Now the question will arise, suppose he didn't make an application within 30 days, then what will happen, sir? In that situation, the liability will be same day, but for the purpose of the ITC will be the date on which registration granted. On the date whatever the goods held as a stock, in relating to those goods, he can claim ITC. Let me explain. Suppose same example, on 10th September, he became liable for registration. Suppose he made an application on 25th November, finally 5th December registration granted. In that situation, what will happen? Let me explain. Now, when he became liable for registration 10th September, so that from this day onwards, he has to pay GST. Now the second question, whether he made an application within 30 days? No, he didn't make an application within 30 days. In that situation, the effective date of registration will be 5th December. So you can claim ITC only in relating to the goods which are held as a stock on 5th December. Now from 10th September to 5th December, pay GST and no input tax credit. Reason, you didn't make an application within 30 days. That is the impact. Suppose if you made an application within 30 days, what will happen? Even though you obtained registration in this example 5th October, but you are eligible to get the credit in relating to the goods held as a stock before to the date of liable for registration. That is the benefit which is available if you made an application within 30 days. Suppose if you made an application after 30 days, what will happen? For this belated period, you have to pay tax, but you cannot claim ITC. That is a drawback. Are you clear with this? 18(1)(a). And the next 18(1)(b). 18(1)(b) is nothing but voluntary registration. 18(1)(b), 18 subsection 1 clause B, voluntary registration. Suppose where a person commences the business April, and in the month of the July, even though his aggregate turnover is less than threshold limit, but he made an application in the month of August, let us assume, he obtained the registration in the month of September. Now, the question it is, when he is getting liability for payment of GST? In September month, he obtained registration. In August end, he made an application. And in the month of the July, he decided to obtain registration. Now the question it is, when he is getting liability for payment of GST? When he obtained the registration, on the day he is getting liability to pay GST. Reason, his aggregate turnover does not exceed threshold limit, no, so that he is not getting any liability. But when he will get liability, even though his aggregate turnover not exceeding threshold limit, but once he obtained the registration, on the date onwards he is liable for payment of GST. Thereby, before to that day, whatever the goods held as a stock in relating to those goods, he can avail ITC. And one more thing you have to remember, once you obtain the voluntary registration, there is no difference between a person who obtained the registration mandatorily and voluntarily. So once you obtain the registration by the whatever the reason, just you are the registered person, that's it. You don't have any separate provisions or separate exceptions. Once you obtain the registration, pay tax, avail ITC. 18(1)(b). Next, 18(1)(c). 18(1)(c). What is the concept of 18(1)(c)? Earlier you were under the composition scheme. Now you are intended to switch over to the normal or regular scheme. This is the case of 18(1)(c). Earlier you are under the composition scheme, so that you are not eligible to claim input tax credit. But once you switch over to the normal or regular scheme, what will happen? You are eligible to claim ITC. Are you clear? So now in that situation, how we have to deal with this situation? Suppose from April to 15th July, you are under the composition scheme and your aggregate turnover cross 150 lakhs, that is 1.5 crores. Let us assume on 16th July onwards. Then what will happen? From the 16th July onwards, you have to pay GST at the regular rates and you can claim ITC. You can claim ITC. And now what will happen? Suppose on 16th July onwards, you are liable for payment of GST at the regular rates. But before to that day, that is 15th July, you have a stock. You have a stock. You have a huge amount of the inward supply of the goods and inward supply of the services. What will happen? You can claim input tax credit in relating to the goods held as a stock on the day. Reason, when you are under the composition scheme, all your inward supplies are from the regular registered person, but you didn't claim ITC earlier. Reason, when you are under the composition scheme, your inward supplies must be from the regular registered person and you have to forgo ITC. So you forgo input tax credit earlier. Reason, why you forgot? Why you waived your input tax credit? Reason, under the composition scheme, by virtue of section 10, it is disallowed. And apart from that, 17 subsection 5, blocked credit also clearly specified. If you are under the composition scheme, we cannot claim ITC. But your inward supplies from the registered person, regular registered person. And once you started to pay tax under the normal scheme, what will happen on the day? That is, when you are getting liability before to that date, whatever the goods held as a stock, you can claim ITC in relating to those goods. That is the concept of 18(1)(c). And one thing, please remember, under 18(1)(a) and 18(1)(b), capital goods purchased in unregistered period, no ITC. You cannot claim input tax credit in relating to the capital goods under section 18(1)(a), 1(b). But under 18(1)(c), when you are under the composition scheme, whatever the capital goods purchased, you can claim ITC. But the thing it is, in composition scheme, how many quarters you used? Per quarter, 5% of ITC has to be reduced. Suppose, take an example. When we are under the composition scheme, we bought a capital good worth of 10 lakhs, on which we paid GST at the rate of 18%, 1.8 lakhs. We didn't claim ITC. Reason, we were under the composition scheme, so that we didn't claim. Now, this capital good used 6 quarters in composition scheme. And next we switch over to the normal scheme. Then what will happen? Now we are eligible to claim ITC. Sir, we purchase capital goods when we are under the composition scheme, no. So that we use 6 quarters in composition scheme, no. Then what will happen? 6 quarters into 5%. That is 30% of ITC has to be forgo. 1.8 lakhs into 30%, which will be around 54,000. We have to forgo 54,000 rupees of ITC, and the balance of 1,80,000 into 70%, which will be 1,26,000. Now you are eligible to claim credit. Now you are eligible to claim credit. That is a beauty under 18(1)(c). 18(1)(a), 1(b), in relating to the capital goods, you cannot claim ITC, but under 18(1)(c), you are eligible to claim ITC in relating to the capital goods, but subject to condition. Capital good used in the composition scheme period, you have to forgo on the basis of 5% per quarter. Next, 18(1)(d). What is the concept of 18(1)(d)? Earlier, your supplies were exempt supply. Now it became taxable supply. Suppose, as you know, earlier, suppose you are running a hospital services are exempt supply, you are not eligible for claiming of ITC. But with the new amendment, when you are charged a room rent exceeds 7,500, apart from the room rent, healthcare services became taxable. That is a new amendment. Suppose you have a hospital. When you have a hospital, your outward supply is exempt supply, so you are not eligible to claim any ITC. It's okay. But once this amendment came into the picture, what is the amendment? If your room rent is more than 7,500, then apart from the room rent, healthcare services become taxable. When your services become taxable, being a registered person, what you will do? You will take an opportunity to claim input tax credit. Is it? In that situation, 18(1)D will be useful. So 18(1)D is nothing but, as we discussed, same in 18(1)C. Suppose from the April onwards, you didn't claim any ITC, but 25th August, a notification came into the picture. Your outward supply became taxable. So for this period, no tax, no ITC. And from this day onwards, pay tax, claim ITC. And one more thing, whatever the goods held as a stock on 24th, in relating to the input goods, claim ITC. Even in relating to the capital goods, yes, you are eligible to claim ITC, but the manner of availability of ITC in relating to the capital goods will be as we discussed. Now, as we discussed in the composition scheme, the same concept applicable under 18(1)D. So finally, 18(1)A, where a person is liable for registration and he made an application within 30 days. That is a normal situation. 18(1)B, voluntary registration. 18(1)C, where a person under the composition scheme switch over to the regular scheme. Next, 18(1)D, where a person exempt supplies became taxable supplies. Are you clear? This is the concept of 18(1). So please go through this chart. 18 subsection 2, time limit for availment of ITC. Here, in the given example, we discussed about we are eligible to claim input tax credit in relating to the previous day. Okay, those stock must be purchased within 1 year. Whatever the goods bought within 1 year and held as a stock, only in relating to those input goods we can claim ITC. Suppose any goods bought before to 1 year and those goods are held as a stock, you cannot claim ITC in any situation under 18(1). In any situation under 18(1). And that concept is applicable only for input goods and not to the capital goods. That is the concept of 18(2). And 18(3), transfer of ITC on account of change in constitution. Suppose there may be a change in constitution of the business. What is that? Suppose where a person is a registered person, he is a old age person, senior citizen. Suppose on attainment of the age of 75 years or 80 years, suppose he died. Suppose let us assume any unforeseen situation, he died. Now such business is taken over by his grandson or granddaughter. Now the question it is, whatever the input tax credit vested in the hands of the grandfather can be transferred in favor of the grandson or granddaughter. Yes, by virtue of 18(3), yes, they can claim. Point number 1. Suppose point number 2, where Vodafone and Idea, both companies are merged as a Vodafone and Idea. In the hands of the Vodafone, there is some amount of input tax credit, and again in the hands of the Idea, there is some amount of the input tax credit. Now, when the Vodafone and Idea merged, what will happen? The both credits will be coming to the one single electronic credit ledger by virtue of 18 subsection 3. That is merger. Suppose in the same way demerger also, where one organization divided into say two parts or two divisions or two organizations, what will happen? The single input tax credit will be transferred to the two businesses in proportion to the assets transfer. That is the provision of 18 subsection 3. Next, 18 subsection 4, reversal of ITC. It is quite opposites to 18(1)C and 18(1)D. In 18 subsection 1, we did computation about what is the amount of ITC I am eligible. What is the amount of input tax credit that I can claim. But 18 subsection 4 discuss about what is the amount of ITC that has to be reversed. So why? What is the situation? In 18 subsection 4, where a person were under the normal scheme, he is willing to switch over to the composition scheme. So then what will happen? When he was under the normal scheme, whatever the inward supply of the goods and capital goods he bought, already he claimed input tax credit. After claiming of input tax credit, those input goods and those capital goods can bring as it is into the composition scheme? No. Reason? The inward supply of the goods are capital goods on which already ITC availed. It has to be reversed. Then only those input goods and capital goods can be brought into the composition scheme. Reason? Under the composition scheme, whatever the inward or capital goods bought, you cannot claim ITC. That is blocked, no? So, suppose where a person was under the normal scheme for financial year 2024 and 25, and for financial year 2025 and 26 he want to go with the composition scheme, and that too previous year aggregate turnover less than 1.5 crore. So being he was under the normal scheme in the previous year, he claimed ITC on input good and capital good. Okay, so whatever the input good and capital goods as a stock, those goods as it is transferred or brought forwarded to the next financial year. Carried forward to next financial year. Now the department asking, sir, how much of input goods do you have? I have input goods worth of 8 lakhs. I have a capital good worth of suppose 10 lakhs. Reverse the amount of input tax credit. The same computation what we did in 18.1c and 18.1d has to be done here for the purpose of reversal of ITC. For the purpose of reversal of ITC. So this is the concept of 18 subsection 4. Earlier you are under the normal scheme, eligible for ITC. Now you are intended to go for composition scheme. Now you have to reverse the ITC in relating to the input goods or capital goods brought into the composition scheme. That is the concept of 18.4. Clear? So 18.5 is nothing, and 18.6 very important from the exam point of view. Supply of the plant and machinery after use and credit implication. And this is a situation. Suppose we bought plant and machinery 20 lakhs and we paid GST at the rate of 18%, 3.6 lakhs, totally 23.6. Okay. We are eligible to claim 3.6 lakh rupees worth of ITC. We claim, okay, after 2 years, suppose after 8 quarters, we are selling the same plant and machinery in open market at the price of 12 lakhs. Now, what is the credit implication? This is a situation which will be dealt by the section 18 subsection 6. Once a capital good has been purchased for the purpose of the business and you avail input tax credit on it, it will become business asset. Once it became business asset, till the end of life of the capital asset, you have to use only for the purpose of the business. But when you are intended to use, it is for personal use, or when you are intended to dispose as a scrap, or when you are intended to give it is as a free of cost to any other person, you have to reverse proportionate amount of ITC on the basis of value prevailing on the date of sale. Now, what is the manner of computation of reversal of ITC? Let me explain with this example. Now, suppose taking an example, we purchase a business asset 20 lakhs and 3.6 lakh rupees worth of GST and ITC claim. After 8 quarters, we are selling the same plant and machinery in open market at the price of 12 lakhs. In that situation, what is the amount of ITC has to be reversed? First one, amount of input tax credit taken, how much? 3,60,000. What is the eligible ITC? What is eligible ITC? We used 8 quarters for the purpose of the business now. So we are eligible to claim 8 quarters of ITC. Per quarter 5%. We are eligible, totally 8 quarters. So we are eligible to claim 40% of ITC. We are eligible 40% of ITC. So that 3,60,000 into 40%, which will be 1,44,000 rupees ITC is we are eligible. And what is the ineligible amount? 2,16,000 rupees is ineligible ITC. This is point A. At the time of purchase of the capital asset, we paid 3,60,000. We claimed. And what is the amount of ITC we are eligible? We used capital good for the purpose of the business only 8 quarters. So per quarter 5%. Thereby 40% of ITC is eligible. 1,44,000. So what is the amount of ITC that has to be reversed? 2,16,000. Point number 1. And point number 2. GST on transaction value. What is the transaction value? 12 lakhs. So 12 lakhs into 18%. 12 lakhs into 18%, which will be 2,16,000. Arey yaar, it became same amount. So instead of that, let me make it is as a 10 lakhs. 10 lakh. Okay. Thereby what will happen? 10 lakhs into 18%. 1,80,000. This is amount B. Now A or B, whichever is higher. Which one is higher? 2,16,000. Now this is the amount of ITC we have to reverse. Actually, this is an examination problem. Simple. We bought so-and-so plant and machinery on so-and-so date and we avail input tax credit. And in the near future, such property has been sold at so-and-so price. Now, what is the credit implication? That is a question in your examination. The answer will be simple like this. So, the first aspect it is we have to compute ineligible ITC. And the second one, GST and transaction value. Whichever is higher, that is the amount which we have to be reversed. So in such a manner, we completed the chapter of input tax credit. Section 16 deals with eligibility and conditions to be satisfied for availment of ITC. Section 17 deals with apportionment of credit and blocked credit. And section 18 deals with availment of ITC in special circumstances. Are you clear? So please pause the video and go through the chapter once. Thank you. And the next topic it is registration. Registration. Section 22 to 30. Section 22 to 30 deals with registration topic. So why a person has to obtain registration? As we know, where a person making supply of the good or service liable for payment of GST. So only because of the reason a person making supply of the good or service, whether he is liable for payment of GST. Suppose auto wala, he is providing service, and small size of the tiffin shops and small size of the chai wala business, their aggregate turnover, irrespective of the aggregate turnover, they are supplying good or services right now. So are they liable for payment of GST? Suppose we are getting small services from the mechanic shop, repair shop, photographer, outdoor catering services, restaurant, etc. Are they liable for payment of GST? No. So that is an essence of the registration. Under the registration, we have to know who is liable for registration and who is liable for payment of GST. Where a person is liable for payment of GST, he has to obtain registration. What is the point number 1? A person who is liable for payment of GST, he has to obtain registration. Then who is liable for obtaining of the registration? A person whose aggregate turnover exceeds the threshold limit. Where a person aggregate turnover exceeds the threshold limit. That is the point number 1. And number 2, a person who is liable for registration has to pay tax. The second point, you have to understand properly. First, where a person is liable to pay GST, he has to obtain registration. And apart from that, a person who is liable to registration, he has to pay GST. In both ways, you have to understand. Okay. So now in this chapter, we are going to understand the concept when a person is liable and where he has to obtain registration and what is the procedure for obtaining of the registration. Suppose if there is a change in registration, how he has to make an application, and the next cancellation of registration. All those things we will discuss elaborately in this chapter. So registration, person liable for registration, the person whose aggregate turnover exceed the threshold limit, they are liable for registration, and those people are here. So where a person engaged in supply of the good or service in the state of Manipur, Mizoram, Nagaland, Tripura, that is M square NT. In the states of M square NT, if his aggregate turnover exceeds 10 lakhs, he has to obtain registration, whether he is dealing with goods or services. And suppose where a person engaged in supply of the good or services in the states of Arunachal Pradesh, Meghalaya, Sikkim, Uttarakhand, Puducherry, Telangana. In that situation, the applicable threshold limit will be 20 lakhs, whether he is dealing with the goods or services. You can remember like this. Suma PT. Sikkim, Uttarakhand, Meghalaya, Arunachal Pradesh, Puducherry, Telangana. Where a person is engaged in these states, that is carrying taxable supply of the goods or services in these states, applicable threshold limit will be 20 lakhs. And suppose where a person having place of business or he is doing supply of the goods or services in any other states, that is Jammu and Kashmir, Assam, Himachal Pradesh and all other states, simply you can remember like this, Jaho. For goods 40 lakhs and for services 20 lakhs. That is the threshold limit. If the aggregate turnover of the goods exceeds 40 lakhs or aggregate turnover in relation to the services exceeds 20 lakhs, he has to obtain registration. And one more thing you have to remember here, the enhanced limit of 40 lakhs is applicable when he is dealing with eligible goods. When he is dealing with ineligible goods, he won't get this additional threshold limit. What are the ineligible goods? Ineligible goods concern pan masala, tobacco, chewing tobacco, aerated water, fly ash bricks and roofing tiles, fossil mills, right? These are the things where he is dealing with this type of the ineligible goods. Again the threshold limit will be 20 lakhs. So when he is not dealing with this type of the negative type of the goods, then only the enhanced limit of the 40 lakhs is applicable. Are you clear? In case of M square NT 10 lakhs. In case of Suma PT 20 lakhs. In case of Jaho, for goods 40, for services 20. That is the threshold limit. And next, in case of transfer of business on account of the succession, what will happen? The transferee has to obtain registration. By the succession of the business, who is getting such business? The transferee is liable for obtaining of registration. And again, in case of amalgamation, demerger, etc. also, the transferee or resulted company has to obtain registration. So first, where a person aggregate turnover exceed threshold limit, he has to obtain registration. In case of the transfer or amalgamation, the resulted company, the resulted person, the transferee has to obtain registration. And while computation of aggregate turnover, we have to include taxable supplies, exempt supplies, exports, interstate supplies having same permanent account number. All such turnover has to be considered while computation of aggregate turnover. And the next, compulsory registration. In section 22, we learn person who is liable for registration. That is, where a person threshold limit exceeds, then only he has to obtain registration. Suppose, being a teacher or a faculty, if I am providing service to the various educational institution, let us assume my aggregate turnover is less than 20 lakhs. Suppose I am located in Tamil Nadu. My aggregate turnover less than or equal to 20 lakhs. Whether I am liable for payment of GST? No. Suppose take another example. I am practicing chartered accountant in Gujarat. My aggregate turnover does not exceed 20 lakhs. Am I liable for registration? No. I am not liable for registration as well as I am not liable for payment of GST also. Like that, where a person is a small business person, that is the person whose aggregate turnover does not exceed threshold limits as we discussed, they are not liable for registration as well as they are not liable for payment of the tax. Next, now section 24, compulsory registration. Now the compulsory registration concern the persons who are covered in this provision, irrespective of their turnover, irrespective of their aggregate turnover, mandatorily, compulsorily they have to obtain registration. That means simply we can say section 24 override the provisions of the section 22. Section 24 override the provisions of section 22. So irrespective of the turnover limit of 22, these people has to obtain mandatory registration. The first one, Interstate supply. A person who is making an interstate supply, he has to obtain mandatory registration. But one thing you have to remember, this benefit, that is the mandatory registration provision, not applicable in case of supply of service. In case of supply of service, no mandatory registration. In case of you are the supplier of goods and you are making any interstate supply, if you are making any interstate supply, mandatory registration provisions applicable. Are you clear with this? So where a person having an interstate supplier of service, interstate supplier of the good. In case of the interstate supply of the service, no mandatory registration. In case of interstate supply of the goods, mandatory registration. And again one more, there is an exception. Suppose if you are dealing with handicrafted goods. What is that? Handicrafted goods in between two states, again you can enjoy with the threshold limit. And for remaining all the goods, if you are making any interstate supply, you have to go for a mandatory registration. Number 2, casual taxable person. As you know, a person in a state does not have a permanent place of the business or residential place, and he don't want to continue the business for a period not exceeding 90 days. He has to obtain CTP registration. So suppose crackers business, they will do for a period of the 5 days or 7 days, right? They don't want to carry the business throughout the year. In such a situation, they are not eligible for threshold limit. They have to go for a mandatory registration. Second one. And third one, person receive, and apart from the CTP, you can remember NRTP also. As you know, NRTP, a person who is coming from outside India and he don't have a residential place or place of business in India, and apart from that, he is intended to do the business for a period not exceeding 90 days. He is called NRTP, and he also has to obtain mandatory registration. Threshold limit is not applicable. First one, a person who is making interstate supply of the goods. Number 2, casual taxable person. Number 3, non-resident taxable persons, mandatory registration. And now here, person receiving supplies on which tax payable by the recipient on reverse charge basis. Where a person is liable for payment of GST under reverse charge mechanism, the recipient has to obtain mandatory registration. Suppose take an example where director services are received by the company. Who is liable for payment of GST here? Under reverse charge mechanism, company is liable to pay. Now, the company aggregate turnover, let us assume less than or equal to 20 lakhs. Actually, company is not liable for registration. Now, company arguing that we won't pay tax any tax to the government. Reason? We are not liable for registration. Why should we have to pay tax? So, automatically the department will say, okay, as per section 22, you are not liable for registration and not liable for payment of tax. But by virtue of section 24, you are receiving reverse charge mechanism services. Then you have to go for a mandatory registration. Then what about the threshold limit? It is not applicable to you. Are you clear? And next, fifth one, a person making taxable supplies on behalf of the some other taxable person. Where a person making taxable supplies on behalf of the other. Suppose KFC is there. KFC making supplies on behalf of the other. MI showrooms are there. MI service centers are there. They are providing services in the name of the principal. They are acting as an agent on behalf of the other people. In that situation, they are not eligible for threshold limit. If you want to get any threshold limit, start business in your own name or any other name, in a new name. You are the principal and you are the agent. Suppose when you are acting as an agent, when you are acting on behalf of the other person and such principal is liable for registration, then being an agent, irrespective of the turnover, you have to go for a mandatory registration. And next, sixth one, person are the class of persons notified by the central and state government. And apart from that, the people who are notified by the central and state government, they have to go for a mandatory registration. Are you clear with this? And apart from that, please remember, a person who is liable for reducing of TDS. A person who is liable for reducing of TDS under section 52, he is liable for obtaining of the registration. And apart from that, a person who is liable for payment of TCS, that is e-commerce operator. When we are making supplies through e-commerce operator collect revenue from the recipient and it will be remitted to the concerned supplier. While remittance of proceeds to the supplier, it is a responsibility of the e-commerce operator to reduce TCS. In that particular situation, he has to obtain mandatory registration. And in the same time, let me cover one more point, very important point at this situation. Where a person making supplies through e-commerce operator, earlier he has to obtain mandatory registration. Now, a person who making supply of the goods through e-commerce operator, he is eligible for threshold limit. Let me explain again. A person who is making supply of the goods through e-commerce operator, earlier he has to obtain mandatory registration. Now relaxation has been given, that is, he is eligible for threshold limit. And apart from that, OIDAR, online information database access and retrieval services. Suppose where a person maintaining any app or website and he is located outside India and he is providing services in India, and the people who are the recipients in India, they are unregistered. Then who will pay tax? The recipients are unregistered, they are the common public. They may not be in a position to comply with the process of the GST Act. In that situation, the person who is a OIDAR, online information database access and retrieval services, like as Gmail services, Facebook, Instagram, we will get paid promotions. No, in relation to that paid promotions, the person who is a supplier located outside India, he has to obtain mandatory registration in India. So this is the concept of section 24, mandatory registration. 22, persons liable for registration. 24, compulsory registration. Then what about the 23? 23, persons not liable for registration. Now these people are not liable for registration. Who are they? Number 1, person engaged exclusively in supply of the good or service, both are not liable to or wholly exempt from tax. Where a person exclusively dealing with exempt supply, no need to obtain registration. Suppose I have a petrol bunk, just I am selling petrol and diesel, that's it. No need to obtain registration. Suppose if you are intended to sell lubricants, any oil, gear oil, vehicle oils, etc., then what will happen? There you have to obtain registration. Reason, you are not engaged exclusively in exempt supplies. So when you are exclusively engaged in exempt supply, irrespective of the turnover, whether your turnover may be crores of rupees, no need to obtain registration. Same like as a liquor shop. And liquor also, as you know, it is outside the ambit of GST, non-taxable supply. Irrespective of the turnover, no need to obtain registration. So when you are exclusively dealing with exempt supply, no need to obtain registration. Number 1, agriculturist, a person who is dealing with an activity of cultivation of land at his own or with his labor or with his family members or directly or indirectly with the family members. Where a person doing an agricultural activity, he is called an agriculturist, no need to obtain registration. Here the agriculturist activity means cultivation of land. And the third one, persons making only reverse charge supplies. A person who is a supplier under the reverse charge mechanism, no need to obtain registration. See here, where a director rendering services to the company. In this situation, company has to obtain mandatory registration by virtue of section 24. Threshold limit is not applicable. And the person who is a supplier, he is covered under section 23. Dear supplier, no need to obtain registration. Sir, I am getting 5 crores, 10 crores, whatever the amount you are getting. Actually, you are not the person liable for payment of tax, no? Yes, sir, I am exclusively engaged in reverse charge mechanism supplies and I am the supplier. Then don't go for registration. Entire your responsibility will be taken over or fulfilled by the recipient. Are you clear with this? So recipient, mandatory registration under section 24, and the supplier not liable for registration under section 23. And next, person making interstate supply of taxable of services up to 20 lakhs, and as we discussed in the first point, yeah, this is the point, supplier of service. A person who is making interstate taxable supply of the service, no need to obtain registration up to 20 lakhs. And the next, person making interstate supply of the goods, notified handicrafted goods, not liable for registration. And casual taxable person dealing with handicrafted goods. Actually CTP mandatory registration, but where a casual taxable person dealing with handicrafted goods, in such a situation, not liable for registration. Are you clear with this? So the persons who are not liable for registration. Number 1, a person exclusively engaged in exempt supplies or non-taxable supplies. Number 2, agriculturist. Number 3, the person who is engaged in RCM supplies, that is a supplier. Fourth one, a person who is making interstate supply of the services up to 20 lakhs. Fifth one, person who is a casual taxable person dealing with handicrafted goods and making interstate taxable supplies, no mandatory registration. And next, any person, and generally a person who is dealing with handicrafted goods up to 20 lakhs, no mandatory registration. So till the time we completed section 22, 23, 24. 22, persons liable for registration. 23, persons not liable for registration. 24, compulsory registration. Are you clear with this? So once he became liable for registration by virtue of 22 or 24, he has to make an application to the department and he has to comply with the registration procedure as specified in section 25. Now let me start with section 25. Persons who are liable for registration, they have to comply with section 25. Number 1, where and by when to apply for registration. Person who is liable to be registered under section 22 or 24 in every state or union territory in which he is so liable within 30 days from the date on which he become liable to registration, just he has to make an application. I'm not saying that within 30 days he has to obtain registration. I'm saying he has to make an application within 30 days. It's enough. Once you became liable for registration, you have to make an application to the department within 30 days. So this is liable date and this is application date. You have to make an application within 30 days. It won't be the matter. You may obtain registration even after 30 days. And next, in case of CTP or NRTP, they have to make an application at least 5 days prior to the commencement of the business. At least 5 days prior to the commencement of the business. And apart from that, they have to obtain registration also on making payment of advance tax. To the CTP and NRTP, advance tax provisions applicable. In normal registration, there is no concept of an advance tax. In case of the CTP or NRTP, you have to provide your provisional turnover or expected turnover on the basis of which you have to ascertain the liability, and such tax liability has to be discharged in advance while making an application for registration. There itself you have to make the payment of tax. That is a provision applicable to the CTP and NRTP, and we have a special provisions to the CTP and NRTP we will discuss elaborately in section 27. And next, voluntary registration. Even though where a person is not liable for registration under section 22 or 24, voluntarily he can make an application to the department and he can obtain registration. Once he obtains the registration, he won't get any relaxation. Every month he has to file return and he has to pay tax. That's it. Even though you obtain registration voluntarily, simply we can say whatever the provisions applicable for a person who obtained the registration under section 22, 24, same provisions applicable to a person who obtained the voluntary registration. And next, unique identification number. What is the concept of UIN? Such UIN number is granted to the persons who are the persons notified by the government in respect of supplies to some notified persons to United Nations organizations, multinational financial institutions and other organizations as may be notified by the government. Actually, the Ministry of External Affairs notify the persons who are eligible for UIN. So actually, if you obtain registration, GST IN number will be granted, Goods and Service Tax Identification Number. It is a 15 digits coding. But if you are a person who are eligible for registration and eligible to get UIN, Unique Identification Number, it is also a 15 digits coding system. But UIN is used only to get refund. Only to get refund. Suppose where World Trade Organization or World Health Organization, they visited India. In India, they receive different type of the services, hotel accommodation, cab, restaurant, air travel agencies, etc. And the government don't want to collect tax from those type of the people. Reason, there is a foreign treaty, or the government want to give a respect, or any other else. The government don't want to collect tax. Suppose where the government collected any tax, such amount will be given as a refund to them. But how the government will know how much of tax they paid in India? For that purpose, a UIN number will be granted to them, and wherever they are purchasing good or service, they have to get the invoice. They have to take invoice by providing UIN number. And while they are leaving India, they have to produce all the documents to the department. Thereby, whatever the tax amount they paid, it will be granted as a refund. And one more thing, there is a small amendment. In relation to UIN, there is a central unique identification number. Across the country, one UIN number. But in GST registration, what will happen? Suppose if you have a place of business in 4 states, we have to go for a 4 registrations now. Automatically, we will get 4 GST numbers. But for UIN, there is a central unique identification number. But in GST concept, in goods and service tax identification number concept, there is no central registration. Only for UIN there is a central registration. Next, effective date of registration, very important. Actually, this is the concept we discussed in 18 subsection 1A, input tax credit chapter. But let me explain again. What is an effective date of registration? Suppose where a person commenced the business in the month of May and his aggregate turnover exceeds, let us assume, on 20th July. Thereby, he made an application on 5th August. Okay, and finally registration granted on 10th August. So on 20th July, he became liable for registration. And 5th August, application. 10th August, he obtained registration. So these are the cases. In that situation, what is the effective date of registration? Actually, on 20th July, his aggregate turnover exceeds threshold limit. So on the day, he became liable for registration. Is it? Now you have to ensure whether he made an application within 30 days. From July to 5th August. Yes, he made an application within 30 days. In that situation, even though registration obtained on 10th August, the effective date of registration will be 20th July. Being you made an application within 30 days, so effective date of registration will be 20th July. Thereby what will happen? If the effective date of registration is 20th July, whatever the stock held before to that day, that is 19th day, whatever the 19th July, whatever the goods held as a stock, you can claim input tax credit. In relating to all such stock, you can claim input tax credit. That is an essence. So then what will happen? Suppose if I didn't make an application within 30 days. Let me explain. Suppose the same concept. May month you commence the business. On 20th July, you became liable for registration. Okay. And you made an application to the department on 5th October and registration granted on 10th October. So this is an application and this is registration. Now, what is the effective date of registration? Again, apply same concept. Whether you made an application within 30 days, no. Reason, you became liable for registration on July, but you made an application on 5th October. So you didn't make an application within 30 days. In such a situation, the effective date of registration will be 10th October. That is date of obtaining of the registration. Thereby what will happen, sir? Thereby, you are liable for payment of GST from 20th July to 10th October. You have to pay GST up to 10th October, but you are not eligible for ITC. Reason, you didn't make an application within 30 days. Now, you are eligible for availment of ITC only in relating to the goods held as a stock on 9th October. So, for this period, approximately for these 2 months, what happened? You have to pay tax and no ITC. That is the impact. Very important from examination point of view. Are you clear with this? And next one. Now we are going to start with the topic of procedure for registration. How we have to make an application for registration. The procedural aspect. So now we are going to start with the topic of procedure for registration. Where a person liable for registration under section 22 or 24, he has to make an application to the department as per section 25. For obtaining of the registration, you have to log into the website portal that is called www.gst.government.in. So with the details of PAN number, mobile number and email ID, you can log into the part 1. That is in part 1, first you have to provide these 3 details. PAN number, mobile number and email ID. And PAN number. On the basis of the PAN number, as you know that permanent account number details maintained by the Central Board of Direct Taxes, so that you will get OTP on the basis of the PAN number, and on the basis of the mobile number or email ID, you will get another OTP. And when you validate these 2 OTPs, temporary reference number will be generated. Now, up to this part A is over. In part 1, there are 2 parts, that is part A and part B. In part A, first we have to provide these 3 details. On providing of these 3 details, you will get a temporary reference number. With the assistance of the temporary reference number, we have to log into the part B. In part B, we have to provide all the details about the business. That is, what is the legal status of the business, whether the partnership, in case of the partnership firm, We have to upload the partnership deed in case of the company. We have to provide MOA and MOA along with who is the active partner, who is the director, who is the authorized representative. All such particulars has to be provided in part B. And apart from that, suppose if you are an individual, you have to provide your Aadhaar number, property tax details or rental agreement, etc. Apart from that, you have to provide HSN details of the goods or services which you are intended to deal. And apart from that, you have to provide jurisdictional officer details also. What's that? Jurisdictional officers details also. Suppose if you are a CTP or an RTP, you have to make the payment of advance tax by using temporary reference number. Actually, for the purpose of payment of the tax, you need GSTN number, goods and service tax identification number. Actually, such number will be granted after registration. But for CTP and NRTP, they have to make the payment of tax before obtaining of the registration. Actually, before to the registration, they don't have any GSTN number, so that by referring to the TRN number, they can make the payment of tax and such amount will be credited into the electronic cash ledger. Electronic cash ledger. So when you provide all these details, application will be forwarded to the proper officer. Now, once an application forwarded to the proper officer, now the proper officer will ensure. Now the proper officer will examine the application and accompanied document is same or found in order, whether all the details are properly provided. If all the details are provided and apart from that, Aadhaar authentication has been done, then your registration will be done within 7 working days from the date of an application. At the time of making an application, there is a procedure for an Aadhaar authentication. That is nothing but you have to provide Aadhaar details, and for the purpose of the validating of the Aadhaar card, you will get OTP. Suppose if you done so, your registration will be granted within 7 working days. Are you clear? Suppose even even after providing of all these details, if the proper officer deems fit to carry out site verification, proper officer want to go for a site verification, there may be any reason, or where the system itself it generated that on the basis of the predefined content or any other information, it is suggested to go for a site verification. That is number 2. Or number 3, even after Aadhaar authentication, the proper officer, he is willing to go for site verification, or where the system suggested for site verification. Or third, suppose if the Aadhaar authentication is not done, in such a situation, he may go for a site verification. In these 3 cases, your registration will be done within 30 days from the date of application. Are you clear? At the time of making an application, Aadhaar authentication is done and the proper officer don't want to go for a site verification, then within 7 working days registration will be granted. Suppose even after Aadhaar authentication, if the proper officer intended to go for a site verification, or Aadhaar authentication is not done, or where the system suggested to go for a site verification, in these 3 cases, your registration will be done within 30 days from the date of an application. 30 days from the date of application, provided if you provided all sufficient information. Suppose if there is any deficiency of an information, the proper officer will give a communication to provide such information or explanation or document, and such information will be given within 7 working days if Aadhaar authentication is not done. If Aadhaar authentication is done within 7 working days, such explanation statement will be, such show cause notice will be served. Suppose in these 3 cases, the proper officer will request or proper officer will suggest to provide the document within 30 days from the date of an application. Are you clear with this? Now, suppose within these 7 days or 30 days, where the proper officer asked to provide any explanation or information, such information has to be provided by the an applicant. If such information is sufficient or satisfactory, then what will happen? If the proper officer is satisfied with, then again within 7 working days your registration will be granted. Right? Suppose if you are not responded, point number 1, or the explanation given by you is not satisfactory. In such a situation, your application may be rejected, and reasons for rejection will be clearly communicated through email. Are you clear? So this is the procedure for obtaining of registration under section 25 and section 26. 25 is the registration process now. 26, it is about the deemed registration. Deemed registration. Actually, we will make an application for registration on the basis of the state SGST Act or UTGST Act. Suppose if you obtain the registration as per section 25 of the SGST Act or UTGST Act, deemed to be registration obtained under CGST Act or IGST Act. So no need to make a separate application for SGST, UTGST, CGST and IGST, etc. If you are making an application as per SGST or UTGST Act, deemed to be an application made under CGST Act or IGST Act. That is the content of section 26, deemed registration. Now we are going to start with the content of section 27, special provisions applicable to CTP and NRTP. Casual taxable person. He is a person, a taxable person is one who is registered business some state in India but wants to effect supplies from some other state in which he is not having any fixed place of the business. Suppose I have a place of business in Gujarat. Now I am intended to do the business for a period not exceeding 30 days or 50 days in Madhya Pradesh. Now in Madhya Pradesh I have to obtain registration as a CTP. Suppose if I want to go for a permanent establishment in Madhya Pradesh, there I can go with the regular registration. But just I want to carry the business for temporary period, and again in that state I don't have any permanent place of the business. In such a situation I have to go for a CTP. And NRTP concern, you are coming from outside India and you don't have any fixed place of business in India. In such a situation your registration will be NRTP. Simple, CTP person is an Indian but NRTP person is a non-resident. Are you clear? And next, CTP and NRTP. GST law prescribes special procedure for registration as also for extension of the operation period. Now they have to apply for registration at least 5 days in advance before making any supply. They have to make an application for registration at least 5 days before to the commencement of the business, as well as they have to make the payment of tax by using temporary reference number, and registration is granted to them or period for operation is extended only after making an advance deposit of the tax. And the validity of the registration will be 90 days from the date of registration or days specified in application, whichever is lower or whichever is earlier. That is the validity period of registration for CTP and NRTP. Suppose before expiry of the 90 days, if such business person want to go for an extension, again he can make an application for extension further period of 90 days. That is a maximum tenure. So that simply we can say the maximum days of business will be 90 plus 90, 180 days. If you want to do the business for a period more than 180 days, he has to go for a regular registration. So these are the special provisions applicable to the CTP and NRTP. Section 27. Next to section 28. Section 28 deals with amendment of registration. What is it called? Amendment of registration. What is the concept of amendment of registration? Once you made an application as per section 25 or 27 and you obtain the registration. After obtaining of the registration, there may be a chance there is a change in name of the business, change in nature of the business, and you are intended to change mobile number, email ID, partners, designated partners, legal name of the organization. In all those situations, we have to refer section 21. So section 28. Now again, as per section 28, whenever a situation warrants for modification or change, you have to make an application to the department within 30 days from the date of such change. So once you made an application to the department, it will be divided into two parts, whether it is a core field, non-core field. That is important field or other than important field. If it is other than important field, suppose change in mobile number and email ID. In such a situation, by validating of OTP, automatically your mobile number or email ID can be altered. Suppose in case of change in legal name, change in designated partners, change in huge amount of the shareholding. In those type of the situations, such application will be forwarded to the assessing officer. there is no automatic amendment. Such application will be forwarded to the proper officer. If everything is fine, proper document has been supported with an application, then within 7 working days, your amendment will be done and it will be communicated through email. Suppose if there is any deficiency of the document or if any explanation required or any evidence required, and again proper officer will serve a notice to the department, to the an applicant, and applicant has to respond and has to provide an evidence or information or explanation. And if it is satisfactory, and again within 7 working days, such amendment will be done by the department. But where an applicant is reluctant to give any explanation or to produce an evidence, the proper officer may reject an application. Are you clear with this? So the same concept as we discussed in section 25, the concept is applicable in section 28, but the content of section 28, it is amendment of registration. And the next provision, section 29, cancellation for registration. Next, procedure for cancellation. First of all, what are the situations led for cancellation of registration? Suppose the first one, genuine reason, discontinuation of business. When you are intended to discontinue the business, it is better to surrender your registration certificate. Otherwise, every month you have to file nil return. Why that burden? When you don't want to continue the business, it is suggestible to surrender your registration certificate. Or suppose in case of the transfer, succession of the business, okay, or merger, demerger, amalgamation, in all those situations, the transferor, the person who is a transferor, he has to surrender the registration certificate and the transferee has to apply new registration. Are you clear? So where voluntarily a registered person made an application for cancellation and such application will be suspended. Such registration will be suspended, that is kept in abeyance, kept in pending. So in that period, the applicant has to file all the returns. Whatever the returns are due or has to be filed till that time, all the returns has to be filed and all the tax liability has to be discharged. And apart from that, he has to disclose all the stock details, whatever the goods held as a stock and input tax credit availed on it. And such entire input tax credit has to be reversed. Reason, once a business is closed, all such input goods and capital assets will be cleared for personal purpose. No? So he should not avail ITC on it. But already he availed, so that the registered person has to reverse the ITC and such details has to be provided to the department. Are you clear? Once all such information has been provided, then the order of cancellation will be given within 30 days of submission of application for the same. This is the situation number 1. That is voluntarily a registered person made an application to the department. But the second side, where the proper officer cancelled the registration. What are the circumstances in which the proper officer on his suo motu power, he will cancel the registration? Simple, where the registered person not filing the returns properly. Here the properly means for a period exceeding 6 months. Or where a person providing fake documents or without any supply, he issued tax invoice. He is carrying the business from the place other than principal place of the business or additional place of the business. Are you clear? Suppose where he is intended to evade the tax. He is doing any fraudulent activities. Where he is intended to convert black money into white money, etc. Even he don't have any supplies, he issued a tax invoice. That is a case where he don't have a turnover, he is intended to create the turnover. Clear now? So in all those situations, the proper officer may serve a notice, show cause notice, show cause why I should not cancel your registration. In such a manner, notice will be served to the registered person and the registered person has to give a response to that show cause notice within 7 days. Now, when an explanation given by the applicant is satisfactory, if reply to the show cause notice is satisfactory, then proceedings shall be dropped. Automatically, the proper officer will be stopped his further proceedings. Or the second one, where instead of replying to the show cause notice, person furnishes all pending returns and make all full payment of the tax along with the interest and late fee. So where the department officer serve the show cause notice, the registered person come across or the registered person thinking like this, "Arey yaar, Actually, no person know about all these details, but how the department officer come across? Okay, no need to think about it. Let me file all the returns and let me discharge all the taxes, so that he filed all the returns and he discharged all the tax liability. Then why the department officer has to go for further proceedings? Automatically further proceedings will be dropped. The first case, explanation is satisfactory, or the second case, where a registered person furnished all the returns and he discharged the liability along with the interest, and if there is any penalty, then further proceedings will be dropped. And the next one, suppose where he didn't give any reply or his reply is not satisfactory. In such a situation, cancellation order shall be issued within 30 days of reply to the show cause notice when the registration is liable to be cancelled. So the registered person is reluctant to provide the details, reluctant to file the return, reluctant to give an explanation to the show cause notice. Then what will happen? Registration will be cancelled. That is section 29, cancellation of registration. And the last provision, section 30, revocation of cancellation. Section 30 deals with revocation of cancellation. Revocation of cancellation in case where the registration is cancelled by suo motu by the proper officer. That is, in this case, where the proper officer cancel the registration and automatically the registered person may not be in a position to continue the business. Suppose if he continued the business, it will be like as where a person doing business without payment of GST. It could be the fraud case. So in that situation, the registered person again he will make an application to the department. Sir, please excuse me. Earlier, when you served the notice as per section 29, I'm unable to give a communication to you, or I didn't respond to the show cause notice. So hereby I'm requesting to your honor, please revoke whatever the cancellation order passed by you. While you are making such application, whatever the returns are pending till the time of cancellation of registration, all the returns has to be filed and your tax liability has to be discharged. And such revocation application has to be filed within 30 days from the date of cancellation. Within 90 days, this is the new amendment. Within 90 days, and it can be further extended for a period of 180 days. 180 days by additional or joint commissioner, additional and joint commissioner, any person who is authorized by the commissioner. So revocation of cancellation of registration can be made by the registered person within 90 days from the date of cancellation, and again it can be further extended for a period of 180 days. How many days? 180 days by an officer authorized by the commissioner. Are you clear with this? And for that purpose, the registered person has to file all the returns, and he has to discharge his tax liability. And once the revocation of cancellation of registration order passed, then again the registered person has to file the returns in relating to date of cancellation to revocation of order within 30 days. Suppose, let me explain. This is the cancellation order date, and now you are making an application for, suppose take an example, on 30th April, let us assume a cancellation order has been issued. Cancellation order. Reason, you didn't respond to the department. After few days, suppose on 10th May, you are making an application for revocation of cancellation of registration. This is an application, just this is an application. So before making an application, you have to file all returns. You have to file all returns. Yeah, you have to file all the returns and you have to make an application to the department for revocation of cancellation of registration. And once you made an application, the department, if there is any genuine reason, and if you discharged all the tax liabilities, then the department may pass an order for revocation of cancellation of registration. Suppose such order passed, let us assume in 10th June. Now, for this period, you have to file the return within 30 days from the date of revocation order. You have to file all these returns within 30 days from the date of passing of revocation order. Are you clear? So, this is the concept of section 30, revocation of cancellation of registration. So, section 22, person liable for registration. 23, persons not liable for registration. 24, compulsory registration. 25, procedure for registration. 26, amendment of registration. 27, special provisions applicable to CTP and NRTP. Section 28, amendment of registration. 29, cancellation of registration. 30, revocation of cancellation of registration. Are you clear? So please pause the video and go through once. And one more thing, please remember, this is the marathon class, so that to the extent possible we covered all the important aspects of the provisions. There may be a chance one or two provisions may not be covered, but I hope you can understand. This is the marathon class. Within the given period of time, within 1 hour, I have to cover the entire chapter, so that we covered the essence of the topic, essence of the each and every provision. So please pause the video and complete from section 22 to section 30. Okay, now we are going to start with the topic of tax invoice, credit and debit notes. Tax invoice. Who has to issue a tax invoice? In general, as we know, where a person is a registered person, when he is making taxable supplies, when he make taxable supplies as an evidence of a transaction, he has to issue a document which is called tax invoice. It will consist the details of quantity, value, any discount, invoice reference number or invoice number, etc. So, where a registered person issued tax invoice like this, it will work as an evidence. It will work as an evidence of the transaction. And one more thing, it is the compliance requirement under section 31. By virtue of section 31, it is the responsibility of the registered person to issue a tax invoice. And by complying with this provision, it will make easy while filing of the return. While filing of the return, all these tax invoices will be uploaded. And as you know that filing of return under the GST is invoice based return. What is that? Invoice based return. For every transaction, you have to upload the invoice. Suppose under the earlier indirect tax system, actually we don't have all these type of the invoices. Just we were supposed to discuss a tax invoice, an invoice, credit note, debit note. That's it. It's over. And at the end of the month or quarter, the return will be filed. Just it will be given as a lump sum figure. It will be given as a lump sum figure. On invoice wise details, no need to be provide in while filing of the return. But under the GST, if you want to file the return, you have to upload invoice wise details. And when these different type of the invoices or documents has been notified under GST, it will become easy to understand nature of transaction. Earlier, for any purpose, just invoice, that's it. Whether it may be a receipt, advance, refund, for anything, we were supposed to use the word of invoice, that's it. But now under the GST, different documents has been notified. By virtue of these type of the different documents, we can identify the nature of the transaction, and it will become easy while filing of the return. So let us start with section 31. Section 31 is tax invoice. 32, prohibition of unauthorized collection of tax. 33, amount of tax to be indicated in tax invoice. And 34, credit and debit note. First of all, tax invoice. An invoice is a commercial instrument document issued by the supplier of the good or services to the recipient, and it will consist the details of items sold, quantity, date of shipment, mode of transportation, price and discount, delivery and payment. And in certain cases, an invoice serves as a demand for the payment and become document of title when paid in full. Suppose when you are selling goods to other, instead of asking to pay money, when you raise an invoice, it will work as a you are demanding payment. Is it right now? Without using any words, suppose if you are issued tax invoice, automatically it will give an indication to the others, just you are demanding to make payment. And the second one, For the purpose of claiming of the input tax credit, the invoice matching needs to be done. So as you know that there will be a cross-checking mechanism. For all that purpose, invoice is needed. So time limit for issue of the invoice. Already we discussed elaborately in the chapter of time of supply. Time limit for issue of invoice. Time limit for issue of the invoice we discussed elaborately in the chapter of the time of supply. Next, HSN digits. As you know, for every product across the world, 6 digits coding systems are followed. But in India, we are following 8 digits coding system. We are following 8 digits coding system. So whenever we are issuing a tax invoice, where our aggregate turnover is less than or equal to 5 crores, in case of the B2B supplies, it is suggested to provide at least 4 digits in tax invoice. In case of the B2C supplies, it is an optional, but once you feed into the system enter HSN codes, automatically it will consider whether it may be B2B supply or B2C supplies. So now it became quite common to provide HSN details in tax invoice. Suppose where your aggregate turnover exceed 5 crores, you have to go for more specification, and you have to give a clear clarification or classification of the good or service. For that purpose, you have to provide 6 digits coding system. 6 digits coding system. Suppose let me provide how the 6 digit coding system will work. See here, 6 digits coding system for teaching services. Suppose specialized educational services, 4 digits HSN code, it is 9992. Suppose if I am a teacher for a pre-primary educational services, then my service name might be a pre-primary educational services, but my activity is 999210. Suppose primary educational services, 999220. These are the 6 digits coding system. So while I'm issuing a tax invoice to the educational institution, suppose I'm providing service to the educational institution, and when I'm demanded payment, for that purpose I have to issue a tax invoice. In that tax invoice, I have to provide this 6 digits coding system. Are you clear? So where a person aggregate turnover is less than 5 crores, less than or equal to 5 crores, providing a 4 digits HSN code is enough. Where your aggregate turnover exceeds 5 crores, you have to provide 6 digits coding system. 6 digits code has to be provided. And as you know that across the world, those 4 digits or 6 digits are quite common. Suppose this is the calculator. In India, we are calling it as a calculator. In other country, it may be called as a mini computer, computer or calculating machine, any word or sentence. But whatever the HSN code assigned to this product will be remain same across the world. That is the basic necessity or purpose of the assigning of HSN code to the goods or services. And next, e-invoice. Now e-invoice became mandatory. E-invoice became mandatory where a person aggregate turnover exceeds 5 crores. Where a person aggregate turnover exceeds 5 crores from the 2017 and 18 onwards, it became mandatory. E-invoice, it is not like as a electronic invoice. It is a e-invoice. We have a separate website portal like as a eBay bill. If you want to generate eBay bill, how we are logging into the eBay website, in the same manner we have a separate website to generate invoice reference number. In that website, you have to upload the invoice, and once you upload invoice into the government website for e-invoice, one coding system will be generated that is called invoice reference number. Such invoice reference number will be affixed to the invoice and it will be given back or delivered back, and such invoice has to be made available to the recipients. So simply speaking, the invoice has to be uploaded into the government website, and the government website will assign invoice reference number, and such invoice has to be issued to the customers. And this procedure is mandatory to the persons or the registered persons whose aggregate turnover exceeds 5 crores. Earlier it was 500 crores, and again gradually it is reduced to 200, 100, 20 crores. Now the new amendment, it is 5 crores. Remember, it is important for 1 mark or 2 marks question. And the next one, manner of issue of the tax invoice. In case of the supplier of the goods, he has to issue a tax invoice in triplicate. One original for recipient, duplicate for transporter, and triplicate for supplier. In case of supplier of the goods, he has to issue a tax invoice, 3 copies. Suppose if you visit the best price, they will issue 2 tax invoices for you. One for transporter and one for you. and they will keep the triplicate for themselves. So for supplier of the good, he has to issue a tax invoice and triplicate. In case of the supplier of service, duplicate. Original for recipient and duplicate for supplier. This is the manner of issue of tax invoice. Now we are going to discuss the concept of revised tax invoice. Revised tax invoice. Revised tax invoice. Why the revised tax invoice will come into the picture? Let me explain. Suppose where a person became liable for registration on 20th June. He made an application to the department on 30th June. Application. And finally, he obtained the registration on 10th July. Registration obtained. Now, he will get GSTN number, Goods and Service Tax Identification number on 10th July. Actually, when he became liable for registration, that is liable for payment of tax, from that day onwards, he will collect tax from the customers. But for this period, he don't have a GST number. Then how he can issue a tax invoice? So in that situation, for this period, he will issue a normal invoice, and after obtaining of the registration within 1 month, for this period, revised tax invoice shall be issued. Revised tax invoice. So the supplies taken place from 20th June to 10th July. He is liable for payment of tax, but he is not in a position to issue a tax invoice. So that first he will issue a normal invoice, and thereafter he will issue a revised tax invoice for B2B supplies. For B2B supplies, that is business to business supplies. Suppose for this period, any B2C supplies taken place, no need to issue a revised tax invoice, just prepare a consolidated tax invoice, and no need to issue this document to the customers, and this will be useful while filing of the return. So we discussed about the 3 documents. First one, we discussed about the tax invoice and revised tax invoice and consolidated revised tax invoice. Consolidated revised tax invoice. Consolidated revised tax invoice. Revised tax invoice, consolidated revised tax invoice. And it has to be issued within 1 month from the date of obtaining of the registration. Are you clear? Once you obtain the registration, what will happen? Automatically you will issue a tax invoice. Once you obtain the registration, you have a GST number, so that automatically you will issue a tax invoice. Any doubt? And let me explain another invoice which is called consolidated tax invoice. Here it is about the consolidated revised tax invoice. It is consolidated tax invoice. Once you obtain the registration, for each and every supply, you will issue a tax invoice. Is it clear? Tax invoice. Suppose take an example. You are the registered person. You have a small shop where one person purchasing 5 rupees worth of Cadbury chocolate. A person want to get 10 rupees ka kurkure. Right? Now, how far it is feasible to issue a tax invoice for the 10 rupees, 5 rupees, 20 rupees, etc. Clear? Suppose if you are giving a printed tax invoice, the printing cost will be the waste of matter. It is a cost effective, So to overcome this type of the situation, a small relaxation has been given, that is after obtaining of the registration where value of supply is less than 200. Less than, again it is not the less than or equal to, less than 200, and the second, recipient is unregistered person, and the third, recipient does not require tax invoice. Does not require tax invoice. In these 3 cases, no need to issue a tax invoice. At the end of the day, you can prepare a consolidated tax invoice. Suppose from morning onwards you sold 20 rupees, 10 rupees, 5 rupees, like that. You have to note it down. At the end of the day, just prepare a consolidated tax invoice. Such document no need to issue to the any customer, just it will be useful for filing of the return. Clear? So first document it is tax invoice. Second one, revised tax invoice. Third one, consolidated revised tax invoice. And fourth one, consolidated tax invoice. Clear? Now come back. So just we completed revised tax invoice, consolidated revised, consolidated tax invoice. And the next, bill of supply. Now we are going to discuss the concept of bill of supply. Where a person dealing with exempted supply or where a person is under the composition scheme, they won't collect any tax from the customers. In such a situation, instead of the tax invoice, they have to issue bill of supply. They have to issue a bill of supply. Suppose when we are visited any supermarket or super bazaar or best price DMart etc., there we will purchase taxable supplies as well as exempt supplies. Then what will happen? For taxable supplies, he has to issue a tax invoice, and for exempt supplies, he has to issue a bill of supply. Is it? And tax invoice triplicate 3 copies and bill of supply 3 copies. Is it possible? No. So to overcome this type of the situations, government notified a document which is called invoice cum bill of supply, where a supplier making taxable supplies as well as exempt supplies. Taxable supplies as well as exempt supplies. In that situation, he can issue a document, a hybrid version of the invoice, that is called invoice cum bill of supply. And the next, receipt voucher. Receipt voucher will come into the picture where supplier of the good or service received any advance. So where a supplier, a registered person received any advance, no need to issue a tax invoice. Issue of the receipt voucher is enough. Then what is the rate of GST? Simple. Whatever the rate of GST applicable to that particular service or good, the same amount of GST has to be specified in the receipt voucher. Suppose, sir, at the time of receiving of an advance, I am receiving an advance for more than one product or more than one service, and we are not in a position to identify for which I am receiving this advance. In such a case, you have to charge the rate of GST of 18%. Charge 18%. And while issue of the tax invoice, you can adjust with appropriate rates of GST. Okay, that is the first issue. And the second issue, sir, I received an advance and I'm not in a position to identify whether it is an enter or inter. Reason, the recipient want to get delivery those goods. Few goods are in this state and few goods are in another state. In such a situation, we may not be in a position to identify whether we have to charge a CGST or SGST or IGST. So, right, in that situation, we have to charge IGST. Simple, we can say, where you are not in a position to identify whether it is an intra or inter, simple, please consider it is as an interstate supply and charge IGST accordingly. Clear? Receipt voucher. And next, refund voucher. Once you received an advance, you will issue a receipt voucher. After issue of the receipt voucher, you received, is the supplier, is the recipient. Recipient gave an advance, okay, and you issued receipt voucher. What? Receipt voucher. And next, there is no tax invoice and no supply. You didn't make any supply and you didn't issue any tax invoice. In the meanwhile, recipient want to get refund. Suppose there may be a chance, in few cases, the registered persons will receive an advance, and in the near future, the recipients will come and ask, sir, I don't want to receive those goods. I don't want to get services. Please give my amount as a refund. Whatever the advance given, please give it a refund. When the recipient asking like this and the supplier, the registered person given such amount as a refund, in that situation he has to issue refund voucher. What he has to issue? Refund voucher. Such refund voucher will be charged against receipt voucher. So refund voucher has to be issued. First, there must be an advance. and the supplier issued the receipt voucher, and there is no tax invoice, no supply. In the meanwhile, recipient asked any refund. In that situation, supplier has to issue a refund voucher. Refund voucher will be charged against a receipt voucher. Clear? The next, invoice and payment voucher to be issued by the recipient of supply liable to pay tax under reverse charge mechanism. This is the one of the beauty. Under the reverse charge cases, it is a responsibility of the recipient to issue tax invoice and payment voucher. And one more thing, recently a new amendment has been given. The recipient has to issue such invoice within 30 days. Actually, under the earlier provisions, there is an absence of the provision in relating to the time limit for issue of the invoice by the recipient under reverse charge mechanism. But now it is notified as a 30 days. Are you clear? Under reverse charge mechanism, who has to pay tax? Recipient. Who has to issue a tax invoice? Recipient. Who has to issue a payment voucher? Recipient. Are you clear? Supplier, no need to pay tax, no need to obtain registration, no need to issue a tax invoice. Are you clear? But one small exception, suppose even it may be a reverse charge case. Supplier, recipient. If supplier is unregistered, recipient issue tax invoice, recipient will issue payment voucher. Alright. So recipient will make payment of tax under RCM. This is the case. Suppose where the supplier is registered, in such a situation, what will happen? Supplier has to issue a tax invoice. Reason, supplier is registered? No. So for RCM services, supplier has to issue a tax invoice and recipient has to issue a payment voucher, and recipient has to pay tax, being it is RCM. Are you clear the difference? Next. So these are the provisions under section 31, time limit for issue of the invoice. Any doubt? So till the time we discussed about tax invoice, revisor tax invoice, and third one consolidated revisor tax invoice, fourth one consolidated tax invoice, fifth one bill of supply, and even in that case invoice come bill of supply, next receipt voucher, and next refund voucher, next invoice and payment voucher to be issued by recipient. Any doubt? And the next one. The next one, section 32. Just we completed section 31, 32. Section 32, prohibition on unauthorized collection of tax. So, as per section 32, an unregistered person is prohibited to collect any tax from the customers. Point number 1. And point number 2. So, where a person dealing with exempt supplies or nil rate of supplies or non-taxable supplies, it is prohibited to collect any tax or collect tax in the name of the GST from the customers. That is a requirement of the section 32. And in examination, you won't get any question from section 32 or 33. But just it is a provision, that's it, just you have to remember. From examination point of view, may not be important. 32, prohibition on unauthorized collection of tax. And section 33, amount of tax to be indicated in tax invoice and other documents. Wherever a registered person issuing a tax invoice or a document, the tax element must be separately shown in invoice. That is a requirement of section 33. Tax element must be separately shown, whether it may be a tax invoice, receipt voucher, advance, refund voucher, whatever it may be. The tax element must be separately shown. That is the requirement of section 33. And the last provision in this chapter, 34. Issue of debit and credit note. Debit and credit note. Remember, what are the situations or circumstances in which the credit note or debit note has to be issued. Please remember. First one, let me talk about debit note. Debit note. Debit note, where a tax invoice has been issued for supply of any goods or services or both, taxable value in invoice is less than taxable value in respect of such supply, or tax charged in invoice is less than tax payable in respect of such supply. In that situation, we have to issue a debit note. Suppose, let me give an explanation about it. Suppose we are intended to buy a fan or a bicycle. It is a value of supply, let us assume 10,000 rupees. What is the value of supply? 10,000 rupees, and GST at the rate of 18%, which will be 1800, 11,800. Actually, in this way, supplier has to issue a tax invoice, but without the knowledge or the clerical mistake, he charged value of supply 6,000 only and GST 18%, 1080. So after issue of the tax invoice like this, the registered person, supplier, he come across, arey yaar, we issue tax invoice only for the price of 6,000. That means we have to recover again 4,000. Now the registered person contacted the recipient. Sir, mistakenly or clerical mistake, sir. Actually, that is the worth of the 10,000 rupees, but we issue tax invoice only for 6,000. Hereby, we are requesting to your honor, please pay an additional amount of 4,000 rupees along with the GST. Now the recipient is satisfied with the supplier of the good or service, so recipient is willing to pay. When the recipient is willing to pay, the registered person has to collect an additional amount of 4,000. No, additional amount of 4,000 and GST. How much it is? 720 rupees. 4,720. Again, for this purpose, a supplier can issue a tax invoice? No. If there is any mistake in original tax invoice, it has to be adjusted with debit note or credit note. In this situation, the actual value has to be charged is 10,000, but it is charged in tax invoice is less amount. In that situation, registered person has to issue a debit note. Are you clear? Where the value charged is less amount or the tax charged is lesser rate of tax. Suppose instead of 18%, he charged 12%. In the near future, he has to collect an additional amount of 6%. In these two cases, the registered person has to issue a debit note. Are you clear? So invoice value is less than actual value. That's it. Invoice value is less than actual value, or the rate charged in rate of GST charged in invoice is less than actual rate of GST. In these two cases, registered person has to issue a debit note, and credit note will be reverse case. That is where the invoice value is greater than actual value, or the rate of GST charged in invoice is greater than actual rate of GST. In that situation, credit note has to be issued, and the last date for issue of the debit note or credit note is 30th November or actual date for filing of the return, whichever is earlier. On or before this date, a debit note or credit note has to be issued. Are you clear with this? In such a manner, we completed the chapter of tax invoice, credit and debit note. Now we are going to start with the topic of payment of tax. Payment of tax. As we know, registered person has to file the return on monthly or quarterly basis, and while filing of the return, his liability has to be discharged through electronic credit ledger or cash ledger. So before starting with the topic of the payment of tax, we have to know three elements, three registers. The first one, it is electronic cash ledger. Second one, electronic credit ledger. And third one, electronic liability register. First, electronic credit ledger concern, we know whatever the inward supply of the goods or services we received, all such inward supply of the goods or services will be auto-populated in GST R2B, and whenever it is validated or accepted, such amount will be credited into the electronic credit ledger. Such amount we can avail as ITC. And next, suppose that is the electronic credit ledger and the electronic liability register concern. On filing of the return, on filing of the GST R1, Such liability will be shown in a separate register that is called electronic liability register. So the liability in electronic liability register will be discharged through electronic credit ledger. Point number 1. Still, if you have any excess liability, such excess liability will be discharged through electronic cash ledger. And to the electronic cash ledger, we have to add cash balance from our bank account or debit card, credit card, etc. Clear? So just this is the basic information about the electronic cash, credit and liability register. And now we are going to discuss elaborately. Electronic ledgers and registers. First one, electronic cash ledger. It will reflect all deposits made in cash and TDS, TCS made an account of the taxpayer. How the TDS and TCS amount will be credited into the electronic cash ledger, we will discuss elaborately at the final level. But at the inter level, just remember the TDS and TCS amount deducted will be credited into the electronic cash ledger. Point number 1. And any cash amount added. And second, the amounts credited in the electronic cash ledger can be used against any payment of tax, interest, penalty, fees or any other amount on account of GST. The amount in electronic cash ledger can be used for any purpose. There is no any restriction. It is like as your cash balance, your bank balance. And the next, electronic credit ledger. It will reflect input tax credit as self-assessed in monthly return. So whatever the inward supply of the goods or services or capital goods we are getting, all such credit will be credited into the electronic credit ledger. Now the balance in electronic credit ledger can be used only for making payment of tax. You cannot use the balance in electronic credit ledger to discharge interest, penalty, fees. You cannot. The balance in electronic credit ledger can be used only to discharge the liability of tax. That's it. And the last one, electronic liability register. Electronic liability register will reflect the total tax liability of the taxpayer for the particular month. That is on the basis of the filing of the return, whatever the liability shown in GSTR 1, whatever the outward supply you shown in GSTR 1, respective tax liability will be shown in electronic liability register. And apart from that, suppose if there is any evasion of the tax on the basis of notice given by the department under section 73 or 74 of the CGST Act, such liability also be shown in electronic liability register on chronological order. That is on date wise order. And the second one, mode of deposit in electronic cash ledger. How we can deposit cash in electronic cash ledger. Electronic cash ledger is nothing but it is like as a Paytm wallet or Amazon wallet. Why we will add balance to the Paytm cash or Amazon cash? For easy purchase or quick purchase, right? In the same way, in GST, for making the payment of the GST, first we have to add our cash balance into the electronic cash ledger, and from the electronic cash ledger, we will discharge the liability in electronic liability register. And suppose if you want to deposit money into the electronic cash ledger through internet banking, credit card or debit card, UPI payment, NEFT and RTGS, there is no limit. Any amount, we can deposit any amount through internet bank account, credit card, debit card, UPI, NEFT, RTGS or IMPS. There is no limit on it. Suppose if you want to deposit money through bank cash counter, the maximum amount will be 10,000 rupees per challan, that too per tax period. Suppose if you take an example, suppose if you are working in remote areas, there you don't have any internet facility, you are not in a position to maintain an internet bank account. In that situation, you can make an application to the commissioner, and commissioner may extend this 10,000 rupees limit also. But suppose if you want to make the payment of GST through challan, that is over the bank counter, the maximum amount for tax period will be 10,000. Next, electronic cash ledger, credit ledger and a liability register. That is the thing as we discussed. Now, payment of tax via electronic ledger. First one, electronic cash ledger. Electronic cash ledger. You know, electronic cash ledger, money can be deposited through credit card, debit card, internet banking as we discussed. And TDS, TCS amount also be created into the electronic cash ledger. Such amount can be used to make the payment of tax, interest, late fee, and remaining credit balance amount after payment of about tax etc. can be claimed as a refund by tax person. Suppose if you have an excess balance in cash ledger, you can claim such amount as a refund or you can carry forward to the next tax period. So the balance in electronic cash ledger can be used to discharge the liability of the tax, interest, late fee, penalty, etc. Still, if you have an excess cash balance, it can be carried forward to the next tax period or you can claim such amount as a refund. Next, electronic credit ledger. GST paid on inward supply. GST paid on inward supply can be credited into the electronic credit ledger. Such amount can be used only to discharge the liability of GST. Are you clear? Next, electronic liability register. Electronic liability register. The tax amount, interest, fees, or tax or interest payable on due to mismatch. And next, any other dues concern, we can say a notice given by the department officers. Suppose where in relating to the previous tax period, there is evasion of the tax or excess availment of ITC. In relating to that, the department officer may issue show cause notice under section 73 or 74, and such liability may be debited in the electronic liability register. And such liability, all this liability can be discharged through electronic credit ledger or electronic cash ledger. Through electronic cash credit ledger, we can discharge only tax liability, and the remaining dues has to be discharged only through electronic cash ledger, like as interest, late fee, penalty, even tax also. Suppose taking an example, we have a 50 lakh rupees of tax liability, GST tax liability, and in credit ledger only we have a 40 lakhs. So the remaining 10 lakh rupees of GST has to be discharged through electronic cash ledger. Clear? And one more thing, in the first chapter itself we discussed about the manner of availment of ITC. Are you clear? The manner of availment of ITC. Suppose IGST, CGST, SGST or UTGST. Number one, GST payable. Suppose let us assume we have a liability of IGST, CGST and SGST. Then the manner of availment of ITC will be like this. First, IGST credit. IGST credit can be used against IGST liability. Still, if you have any excess balance, such excess balance can be used against CGST or SGST in any proportion. In any proportion. And the second one, CGST credit. CGST credit can be used against the CGST liability. Still, if you have any excess credit, such credit can be used to discharge the liability of IGST. Are you clear? And CGST credit cannot be used against SGST. And the same way, SGST credit. SGST credit can be used against SGST liability. And still, if you have any excess credit, such credit can be used against IGST liability. And SGST credit cannot be used against CGST liability. And the remaining balance will be net GST payable. Such net GST payable has to be discharged through electronic cash ledger, and this is electronic credit ledger. And this liability, net GST liability, has to be discharged through electronic cash ledger. Are you clear with this? Done. Right. Suppose in electronic cash ledger, we will deposit money for IGST, CGST, SGST or UTGST and compensation cess, and we may deposit towards a tax, interest, late fee, penalty and other amount. In this situation, in electronic cash ledger, these four elements will be called as major heads, and these 5 elements are called minor heads. Suppose we are depositing cash in electronic cash ledger for IGST tax, let us assume 10 lakhs, for interest 1 lakh, and for CGST tax, let us assume 5 lakhs, interest no. So when we depositing like this, an amount deposited for a particular purpose, it has to be used only for same particular purpose. Suppose we deposited IGST tax 10 lakh rupees. Such 10 lakhs has to be used only to discharge the liability of IGST tax only. And the amount deposited for IGST tax cannot be used for CGST tax or for SGST tax. Reason? It is electronic cash ledger, not the electronic credit ledger. Please remember. It is electronic cash ledger. The purpose for which you deposited, only for that purpose we have to use. Are you clear? Now the new amendment it is. Suppose let us assume this is you are considering it is as a lakhs of rupees. No, imagine these are the crores of rupees. 10 lakh crores. Suppose we are dealing with telecommunication business, infrastructure, construction, etc. And for a particular month, let us assume our tax liability is 10 lakhs crores. Let us assume. Actually, we have to deposit money for compensation cess. Instead of that, we deposited 10 lakh crores for IGST. Now, what will happen? You paid amount into the IGST tax purpose. That is, you deposited money with the government, but you are not in a position to use such amount for any other purpose. Then what will happen? Your amount will be blocked. No, the working capital will be blocked. By considering this type of the ambiguous situation, government given an opportunity to the registered persons. Okay, suppose in electronic cash ledger, if you deposited any money like this mistakenly, or if you have any excess cash balance in any account, whether in any major head or in any minor head, such amount can be transferred to any account. That is from IGST tax to CGST tax, or IGST tax to CGST interest, or IGST tax to IGST penalty, to any account you can transfer, provided you have to file a document which is called GST PMT09. By filing this document, you can transfer from any account to any account. From any account to any account. Provided you have to file GST PMT09. This is a new amendment in electronic cash ledger. Are you clear with this? And next, electronic liability register concern. Electronic liability register. In electronic liability register, we may have a liabilities, and such liabilities has to be discharged on order basis. What is an order? The first priority is for self-assessment tax of previous tax periods. First, we have to discharge the liability of self-assessment tax of previous tax periods, and the second priority will be self-assessment tax of current tax period, and the third priority, any order issued under section 73 or 74 of CGST Act. So this is the order of discharge of liability in electronic liability register. Are you clear? So to the extent possible, we covered all the aspects of electronic credit ledger, cash ledger and liability register. In such a manner, we have to discharge the liability, and such liability has to be discharged on or before the due date. Suppose if you are not in a position to discharge the liability on or before the due date, what will happen? You have to bear interest. You have to bear interest. Now the manner of computation of interest will be like this. Interest on delay payment of tax. If a person pays any unpaid amount on his own, interest rate is 18% per annum. Suppose taking an example, July month return has to be filed on or before August 20th. August 20th. Suppose if you didn't file the return on August 20th, suppose let us assume you are filing such return on September 15th. August, September 15th. Now, you have to discharge your liability by making payment of interest, that is along with the GST liability. Suppose taking an example, your tax liability is 10 lakhs. Your tax liability will be 10 lakhs. In that situation, for July month, due date is August 20th, and finally you are filing return or making payment of tax on September 15th. Now, the interest will be computed from the date of due date of filing of return to actual date of filing, actual date of payment of tax. That is from August 21st to September 15th. In August month, we have 11 days, August 31st. and again in September 15, totally 26 days. So we have to pay interest for only delay period, and such interest should not be counted from the August 1st. You should not compute interest from the August 1st. We have to compute interest from the due date, that is August 21st to September 15. Finally, we have to discharge the interest liability for 26 days, that is 10 lakh rupees into 18% into 26 divided by 365 days. 18% interest for 365 days, no, so that there is a delay only for 26 days. 10 lakhs into 18% into 26 divided by 365, which will be around 12,822 rupees. That is an interest amount. So 10 lakh rupees of GST and 12,822 is interest. Clear? In such a manner, we have to compute interest. And the second one, suppose if there is a delay in filing of the return, and apart from that, you have a balance in electronic credit ledger as well as cash ledger. Now you have to pay tax only, you have to bear interest only the liability which you discharged through electronic cash ledger. Let me explain the concept with a practical situation. Suppose, let us assume for the month of the May, you have to file return on 20th June. On 20th June, your liability is 10 lakhs. How much your liability? 10 lakhs. And finally, you are intended to discharge your liability on 15th August. 15th August. Sir, 15th August national holiday, no. When you are making online payment, there is no concept of public holiday or national holiday. Okay. So still you can make payment on 15th August. No doubt. So for the month of the May, you are filing return belatedly on 15th August. 15th August. Now the interest will be computed from 21st June to 15th August. Now in this situation, in electronic credit ledger, you have a balance of 4 lakhs. So your GST liability is 10 lakhs. Electronic credit ledger balance 4 lakhs. Now that 6 lakhs has to be discharged through electronic cash ledger. Now 18% of interest has to be computed only on 10 or 4 or 6. Good. So such 18% of interest has to be paid only on 6 lakhs. That is the liability discharged through electronic cash ledger. This is the recent clarification given by the department. Are you clear? Any doubt up to this part? If there is a delay in filing of the return, okay, while you are filing of the return, you are liable for payment of interest on tax amount. But such interest amount will be calculated only the balance which is discharged through electronic cash ledger. So that is, you have to pay interest on net tax liability, not on the gross tax liability, only on net tax liability. Are you clear? Let me explain other situation. Suppose May month return has to be filed on 20th June. Okay, you filed return, no doubt. You filed return on 20th June. You filed return on 20th June. But in the month of the August, department come across assessee is liable for payment of tax. Still there is a due amount of 5 lakhs in relating to the May month. Already you filed the return. Finally the department come across you didn't discharge your tax liability. In such a case, you have to pay interest. On gross tax liability. This is not the case of delay in filing of the return. This is not the case of the belated return. Already you filed the return, there is a tax liability. In such a situation, you have to pay interest on gross tax liability. Suppose if there is a delay in filing of the return, in that situation, you have to pay interest only on net tax liability. Are you clear with this? Good. Actually, in regular class, we discussed these two situations elaborately with the two practical questions. I hope even within a span of 10 minutes, I given a good knowledge about the manner of computation of the interest. I hope. So any doubts up to this part? We completed the topic of payment of tax also, the manner of computation of interest and etc. So please remember the purpose of electronic cash ledger, electronic credit ledger, and electronic liability register. And the next, interest amount. Only these two aspects. Section 49 deals with manner of availment of ITC, and section 50 deals with interest on delay payment of tax. These two sections we completed in this chapter, that is payment of tax. Hello everyone. Good morning, good afternoon, good evening. What is the topic today? Returns. So up to this part we completed the chapter of the payment of tax. Now we are going to start with the topic of returns. Actually the chapter returns deals with section 36 to section 37 to 48. Section 37 to 48 deals with returns. I think up to this part we completed section 7 meaning and scope of supply, section 8 taxability of the composite and mixed supply, section 9 levy of GST, levy or charge of GST, section 10 composition scheme, section 11 exemptions. In the next session we are going to start with the topic of the exemption, and section 12, 13, 14 of the GST Act deals with time of supply, and section 15 and the valuation rules deals with value of supply, and section 16, 17, 18 deals with input tax credit, and the section 19 is the job work, and the section 20, 21 deals with input service distributor. Are you clear? And the section 22 to 30 deals with registration, that is section 22 persons liable for registration, section 23 persons not liable for registration, section 24 mandatory registration, section 25 procedure to be followed for obtaining of the registration, and section 26 deemed registration, section 27 special provisions applicable to the CTP and NRTP, section 28 amendment of registration, right? And section 29 cancellation of registration. Cancellation of registrations are two types. Voluntarily registered person can make an application, or the department by sheer motor power may cancel the registration. And section 30 revocation of cancellation of registration. Are you clear? And section 31 deals with tax invoice. Section 32 prohibition on unauthorized collection of tax. 33 amount of tax to be separately shown in tax invoice. So registered person, whatever the amount of tax collected, it must be separately shown in tax invoice. That is the content of the section 33. Next, section 34 debit note and credit note. Debit and credit note. Are you clear? Actually section 35 and 36 deals with accounts and records. We don't have at CMA interlevel, no need to go with the section 35 and 36, so that we are going to start with section 37 to 48 returns topic. And one more thing before starting the session, let me give an explanation about it. The returns chapter, only the basic concepts has been covered. Earlier the indirect tax was for 100 marks, so that we were supposed to discuss every chapter and all the sections, rules and regulations, etc. in depth. But now under the new syllabus, the indirect taxation is only for 50 marks. That is the reason. So only few sections are covered under the returns chapter. Are you clear? So let me start with the topic of returns. So where a transaction became a supply as per section 7, and the person liable for payment of GST we have to identify by referring to section 9. and thereafter the liability has to be determined as per section 12, 13, 14. That is the time of liability. And once you identify the time of liability, you have to ensure what is the value on which we are liable for payment of GST. Such value will be determined as per section 15 and the relevant valuation rules. And once you identified the liability, you have to ensure how much of input tax credit I'm eligible. For that purpose, you have to refer section 16, 17 and 18, the manner of availment of ITC, and suppose if there is any chance 19, 20, 21 also. Are you clear? And before doing of all these activities, you have to obtain the registration. Such registration proceedings you have to comply by referring to section 22 to 30. So once you obtain the registration and ascertain the tax liability, once you ascertain the tax liability, you have to pay tax. Such payment of tax we discussed elaborately in the previous session, section 49 and 50. Now, if you want to pay tax, you have to file the return. Now, that is the concept we are going to discuss. Returns. What is the concept of return? Why a registered person? Why a registered person has to file the return? Why a registered person has to file the return? Simple, sir. Where a person obtains the registration, he has to discharge the tax liability. If he has to discharge the tax liability, he has to provide the details. What is my outward supply? What is my inward supply? Is it? What is my outward supply? What is my inward supply? What is my tax liability? All those details has to be provided to the department on periodical basis. Such period is called tax period. So for every tax period, it is the responsibility of the registered person to file a return which shows the details of inward supply, outward supply and the tax liability, etc. Are you clear? So every registered person has to file the return to discharge his liability. Sir, then what is the due date for filing of the return? Actually, under the GST, we have 11 returns. Totally 11 returns. But out of which you have to remember only GSTR 1 and GSTR 3B. GSTR 1 and GSTR 3B. Suppose he is the registered person, where a person is liable for obtaining of the registration under section 22 or 24, or voluntarily where a person obtained the registration, he is called registered person. Once a person became a registered person, on periodical basis he has to file the two returns, GSTR 1, GSTR 3B. GSTR 1, GSTR 1 for the purpose of outward supply. Generally we can say that sales. Okay. So the outward supplies has to be provided in GSTR 1. The due date for filing of the GSTR 1, it is 10th of the following month. 10th of the following month. But however, now it is extended to the 11th of the following month. 11th of the following month. So every registered person, suppose for the month of the April, he has to file the return of 11th May. For the month of the May, he has to file the return on 11th June. In such a manner, every month GSTR 1 has to be filed. So GSTR 1 will consist outward supply. Sir, suppose my outward supplies are there. Suppose in the April month, April 1st to April 30, we transacted, let us assume 400 to 500 transactions. How I have to provide all my outward supply details? Such outward supply details has to be provided on invoice basis. That is, invoice level information has to be given. Sir, so that you are saying that I have to provide all the details on invoice basis? Yes. So each and every invoice has to be uploaded. Then I have to think whether all the invoices has to be uploaded. No, there is a small exception. So then what are the invoices we have to provide it in GSTR 1? Divided into two parts. B2B supplies and the second one B2C supplies. In case of B2B supplies, that is the recipient also be a business person, registered person. In such a situation, whether it may be an intra or interstate, whatever it may be, invoice level details has to be provided. Invoice wise details has to be provided. Sir, I have a huge amount of the transactions, sir. Forget about it. Whatever the amount of transactions it may be, the recipient is a business person or the registered person. Now being a supplier, being a registered person, you have to provide invoice wise details. Why, sir? Reason, for the purpose of availment of ITC by the recipient, you have to provide invoice wise details. Now the invoice wise details concern, need not to provide the scanned copies. You have to provide each and every invoice serial number. What is the value of supply and what is the place of supply? What is the rate of GST and the recipient GST number? In such a manner, you have to upload every invoice. Suppose this is the first invoice. Let us assume this is invoice number 1. It's invoice number 1. Invoice number 1. First, recipient details and invoice number, value of supply, place of supply, rate of GST. Enter button. Invoice 1 uploaded. Now invoice 2. Again, recipient details. What is the value of supply, place of supply, rate of GST, GST recipient GST number. Entered. Invoice number 2 is over. In such a manner, all the invoices has to be uploaded. In case of B2B supplies. Reason, if you are providing invoice wise details, then only it will be auto populated in GSTR 2B to the recipient. In such a manner, while filing of the GSTR 1, you have to provide invoice wise details. B2B. In case of B2C supplies, B2C supplies concern business to customer. So the recipient not required any tax invoice and no need to auto populate. Reason, recipient is not intended to avail any input tax credit. In such a situation, we have to classify into two parts. It may be a intrastate and interstate. In case of intrastate, consolidated details, rate of GST wise has to be uploaded. So when it is a B2C supply, you can upload a single document, a consolidated details. That is on the 5% supplies, 12% supplies, 18% supplies, 28% supplies. On consolidated basis, you can upload. No need to upload each and every invoice wise. Being it is B2C supply as well as intrastate within the state. Suppose in case of the interstate, divided into two parts. Invoice value exceeds 2.5 lakhs or invoice value less than or equal to 2.5 lakhs. Again, if invoice value is less than 2.5 lakhs, providing consolidated details is enough. Consolidated state-wise details has to be provided. In consolidated, total in a particular month, what is the amount of supplies made to a different states, Tamil Nadu, Telangana, West Bengal, Maharashtra, Gujarat, in such a manner. So on state-wise basis, we have to upload. Are you clear? And suppose where the invoice exceeds 2.5 lakhs, where the invoice value exceeds 2.5 lakhs, in such a situation, invoice wise details. Invoice wise details has to be provided. Are you getting my word? So filing of GSTR1 is nothing but uploading of invoices. Are you able to understand? Filing of GSTR1 is nothing but uploading invoices. If it is a B2B supplies, upload invoice wise details. In case of B2C supplies, in case of intro, all consolidated details on rate base. That is 1%, 5%, 12, 18, 28, like that. And suppose interstate, where the value of supply invoice value exceeds 2.5 lakhs, then only invoice wise, otherwise consolidated state wise details. Otherwise, consolidated state wise details has to be uploaded. Are you clear with this? So filing of GSTR1 is over. What is the due date for filing of the return? 10th of the following month. But however, it is extended to 11th of the following month. So in such a manner, every registered person has to be filed. Okay, sir, I filed the GSTR1. Once you file the GSTR1, automatically liability will be created in electronic liability register. And we discussed the concept of the electronic liability register in the previous class. Now, thereafter, GSTR 3B has to be provided. What are the details has to be provided in GSTR 3B? In GSTR 3B, inward supplies. Inward supplies which are auto-populated in GSTR 2B. Inward supply which are auto-populated in GSTR 2B, if those are eligible, just click the button. Just validate it. If you validate it, automatically such credit will be added to the electronic credit ledger. Is it clear? In such a manner, ensure whatever the amount of the credit you are eligible, right? And pay tax to the government. So actually earlier there is a concept of the GSTR2 just theoretically. Now all those things are removed, only GSTR1 and 3B only. I think in the input tax credit chapter, I given an explanation about the GSTR1, GSTR2, GSTR3B and how it could be auto-populated. All those things I given elaborate an explanation. Are you clear? But still again I am saying that just remember GSTR1 and 3B. Forget about the GSTR2, 3A also. GSTR2, 3 no. And again as per new amendment, the government don't want to bring GSTR2 and 3 also. The reason, when the input tax credit you are eligible for availment of ITC only on auto populated basis, why you have to provide inward supply? Actually GSTR2 means for GSTR2 is for filing of the inward supply. Are you getting my word? Why we have to provide the inward supply details? For availment of ITC. Now you are eligible for availment of ITC on auto populated basis. That is, when your supplier provide the details in his return, then only you can avail ITC. So why again you have to provide GSTR2 inward supply details? So there is no concept of GSTR2. Simply we can say that GSTR2 plus GSTR3 equal to GSTR3B. Inward supply is auto populated in GSTR2B. So with the electronic credit ledger, discharge your liability. Sir, how the liability will arise? On filing of the GSTR1. Sir, after using of the electronic credit ledger, still there is a balance. Still there is a liability. Discharge through electronic cash ledger. Sir, how I can add the cash balance into the electronic cash ledger? Go and refer payment of tax chapter. Are you clear? Any doubt? So just this is the concept. GSTR1 and GSTR3B. What is the due date for filing of the GSTR3B? 20th of the following month. 20th of the following month. So every month GSTR1, GSTR3B, every GSTR1, GSTR3B. And once you are filing like this, after the end of the financial year, we have to file annual return. annual return on yearly basis. And what is the due date for filing of the annual return? 31st December. Following the end of the financial year. 31st December of following the end of the financial year. Suppose the financial year is over on 31st March 2023. Then this is the financial year of 2022-23. Now the due date for filing of the annual return will be 31st December 2023. Are you clear? In such a manner, annual return has to be provided in GSTR 9. So what is the return for annual return? GSTR 9 annual return. What is the due date? 31st December 2023. So all the business persons has to file the returns like this. GSTR 1, GSTR 3B. GSTR 1, GSTR 3B. Are you clear? Any doubt? And sir, you said there are 11 returns, but you are giving an explanation about 1 and 3B. Yes, we will discuss all the returns and what are the due dates for filing of the returns, etc. Okay, but first of all, please remember this is the main concept, GSTR 1 and 3B. Are you clear? And the next another concept is there. It is called QRMP. QRMP. In QRMP. Quarterly return, monthly payment. Quarterly return, monthly payment concept has been introduced by considering of the small business person's interest. Suppose for the purpose of the QRMP, the person whose aggregate turnover in preceding financial year does not exceeds 5 crore. Does not exceeds 5 crores. He is eligible for quarterly return, monthly payment scheme. Suppose if he is eligible for QRMP scheme, pay on monthly basis. Pay on monthly basis. File return on quarterly. Pay on monthly basis and file return on quarterly basis. And on quarterly basis concern nothing but GSTR 3B. GSTR 3B. What is the due date for filing of the return? GSTR 3B 20th of the following month. No? Are you clear? 20th of the following month. But the persons who adopted the QRMP, to those persons, the due date for filing of the return will be 22nd or 24th. Below India, that is off of the part in India, above the part of India, Delhi, Maharashtra, and Haryana, Madhya Pradesh, for all these states, 24th, and the remaining states, suppose Telangana, Tamil Nadu, Kerala, Karnataka, for all these states, 22nd of the following month. That is nothing but to avoid the burden on the GST and common portal, different due dates has been prescribed. That's it, right? So above part of India 24th, below part of India 22nd. GSTR 3B. Suppose QRMP scheme also be one of the scheme, but the benefit is pay on monthly basis, file the return on quarterly basis. Thereby what will happen? The compliance burden will be reduced. On every month basis, no need to file invoices like this. Just we have to upload like these invoices only on quarterly basis. Are you getting my word? So that thereby administration cost will be reduced. But there is a practical problem. What is that, sir? Suppose take an example, you are the registered person. You are the registered person. You are under the normal scheme. You are under the normal scheme. You bought the goods from another registered person who was under the QRMP scheme. Suppose if you bought the goods in the month of the April, it could be an inward supply to you. It could be an inward supply. When you are buying these goods or services, when you are getting these goods or services in the month of April. Now, when he is under the QRMP scheme, when he is going to file the return? April, May, June. So that for this quarter, July 22nd or 24th. Are you clear? Are you clear now? July 22nd or 24th. Suppose GSTR1 might be 13th of the following month. So that automatically it could be a, okay, July 13th. So now you have to wait till the date of July 14th. Reason, it will be auto populated on July 14th. So you bought the goods in the month of the April. Can you wait for the period of 2 to 3 months for availment of input tax credit? No way. What will happen? You will stop to do any purchase activity with this type of the persons, that is who adopted the QRMP scheme. Is it clear? Please understand the situation conceptually. You are the registered person. You bought the goods from the person who adopted the quarterly return monthly payment scheme. You bought in the month of the April. Now on quarterly return he is going to file on July 13th, so that it will be auto populated in July 14th. Reason, he has to file the return on quarterly basis. Then what we have to do? Now we have to wait 3 months for availment of input tax credit. Then what will you do in the near future? You will stop to buy these goods from the QRMP scheme person. Now again QRMP person saying that, sir, you given a big opportunity for us, quarterly payment, but there is a problem like this. Nobody is willing to buy goods or services with us. Reason, we are filing the return on quarterly basis. No. Please give any opportunity for transfer of input tax credit to the recipients. Yes, by considering of the practical situation. And another concept has been introduced. Otherwise, actually it is a quarterly return concept, right? But it became QRMP, monthly payment. How it could be? Suppose now once you choose an QRMP scheme, pay on monthly basis. And for this purpose, suppose April, May, June, you have to file GSTR1 in relating to the April month. Due date will be 13th May. In relating to the May, 13th June. In relating to the June, 13th July. In such a manner, GSTR1 has to be filed. So when they are liable for filing of the return on monthly basis, then what is the special in this scheme, sir? Actually, the previous, that is the normal persons, they are filing the return on monthly basis and they are paying taxes on monthly. But under the QRMP scheme also, when they are liable for filing of the return on monthly basis and filing of the return again on quarterly basis, then what could be the difference here? Please understand the situation. This GSTR1 on 13th month, that is 13th of the following month, filing of these details are voluntary. If the QRMP registered person want to transfer ITC to the recipient, he has to upload the invoices on or before 13th. That is for April month. Relating to the April month supplies, he has to provide the details from 1st May to 13th May. 1st May to 13th May. In relating to the May month, 1st to 13th June. And no need to provide all the outward supplies. That is a beauty. No need to provide all outward supplies. Only outward supplies of ITC need to be transferred. What are the outward supplies in relating to which input tax credit has to be transferred? Only those details has to be uploaded. And totally all the details has to be provided in the month of July. That is while filing of the return of June month. 13th July. It's enough. Now it is clear now. So that where a person is under the QRMP scheme And if any normal registered person bought goods from the QRMP scheme persons in the month of the April, automatically it will be auto populated in the next month. Reason, no need to wait for a period of the 3 months, no. Right? This is the solution. So where a person who is under the quarterly return monthly payment scheme, still there is an option on monthly basis, few invoices can be uploaded. Those few invoices generally B2B supplies where he is intended to transfer input tax credit in favor of the recipients. Only those invoices can be uploaded. Thereby he can retain the customer. The person who is under the QRMP scheme, to retain the customer, only the B2B supplies will be uploaded on monthly basis. Thereby recipient can avail ITC on monthly basis. And one more thing he has to remember, in a month the turnover, the uploaded should not exceed 50 lakhs. Clear? In such a manner, monthly basis he has to file the return. Pay on monthly basis, here GSTR 1. But the GSTR 3B quarterly. GSTR 3B quarterly. Sir, what is the due date? 22nd or 24th? Are you clear with this? So this option is available only to the persons whose aggregate turnover in the previous financial year does not exceed 5 crore. Those persons, quarterly return monthly payment scheme can be adopted. Are you clear? And one more thing, suppose in a financial year, suppose this is April to June, this is July to September. Suppose in the July to September tax period, the aggregate turnover exceeds 5 crore, then what he has to do? Till the end of the September, he can enjoy with the QRMP scheme. No need to forcibly convert to the normal scheme. Till the end of the such tax period, he can enjoy with the QRMP scheme. And the next tax period onwards, he can go with the normal scheme. Such type of the benefit is available. Are you clear? So filing of the return, GSTR 1 3B. Still I am talking only from the GSTR 1 3B point of view. GSTR 1 3B. First of all, GSTR 1, 10th of the following month. GSTR 3B, 20th of the following month. This is the normal returns. That's it. Now the 10th of the following month has been extended to 11th. That's it. Suppose you are a small business person. Your aggregate turnover does not exceed 5 crores. Now you have an option. That is QRMP scheme. Pay monthly and file the return on quarterly basis. Are you clear? The next one. Suppose if you are clear with this concept, it's enough. Only few points are left. Actually, the returns chapter is a big chapter. Approximately we have to spend 8 to 10 hours. But at the CMA interlevel, again I am saying that only few concepts are covered. So by considering of the new syllabus, up to what extent I have to give an explanation, I am restricting my explanation only to that extent. Are you clear now? Otherwise, we can spend 8 to 10 hours to learn the returns chapter. Suppose, what are the due dates for filing of the return we discussed. Suppose if there is delay in filing of the return, what will happen? If there is delay in filing of the return, what we have to pay? Penalty. No, late fees. Good. So late fees provisions are not covered at CMA level. Actually, with the new amendment, we have to learn the huge concept, the late fee computation. But at the CMA level, not required. Late fee provisions not covered. Goods and service tax provisions not covered. Practitioners. Are you clear? Good. So the material, it is opt for CMA inter students. Definitely this is the 10th chapter, returns. The basic features of the returns mechanism in GST includes electronic filing returns, uploading of invoice level information, and auto population of the information relating to the input tax credit. Invoice level information, B2B, B2C, what is the manner? We discussed. Is it? Next, a return is required to be filed for the following purposes. What is those purposes? Mode for transfer of information to the tax administrators. You have to say, what is my turnover? What is my tax liability to the department? Next, compliance verification program of the tax administration. And you have to say that, sir, I'm complying with all the provisions of the act. These are the things, or these are the invoices which I'm eligible for ITC. These are the invoices not eligible. I'm properly availing ITC and I'm properly making payment of tax. So that to say all these things, how we can convey? Just only by filing of the return. Next, finalization of the tax liability of the taxpayer within the stipulated period of limitation to declare tax liability for a given period and provide necessary inputs for taking policy decision and management of the audit and anti-evasion programs of the administration. Suppose whether a person paying the tax or not, to ensure such fact, the government also will conduct an audit. Special audit provisions are there. So such audit activities can be done by the department only if you file the return. Clear? Next, under the GST, a regular taxpayer need to furnish monthly return and one annual return. And monthly returns concern monthly GSTR1 and 3B. And one annual return. What's that? GSTR 9. What's the due date for filing of the GSTR 9? 31st December of the following the end of the financial year. There are separate returns for taxpayer registered under the composition scheme. What is the return for composite dealer? GSTR 4. And what is the return for NRTP? Non-resident taxable person, GSTR 5. And for input service distributor, GSTR 6. And person liable to deduct or collect the tax. For TDS, GSTR 7. For TCS, GSTR 8. And a person granted unique identification number, GSTR 11. Are you clear? So in fact, taxpayers are required to file the returns depending on the activity they are undertake. Clear now? Normal registered persons, GSTR 1 and 3B. Composite dealer 4. NRTP 5. Input service distributor, GSTR 6. TDS person 7. TCS person 8. Annual return, GSTR 9. Last return, final return, goodbye return, GSTR 10. And the 11th one concern, it is for UIN, the persons who granted, to whom unique identification number has been granted. To get the refund, they have to file GSTR 11. And the GST Council has, however, recommended to ease the compliance of requirement for small taxpayer by allowing taxpayers to file the details of outward supplies in form GSTR 1 on a quarterly basis. Let me discuss what is that concept. Next, all the returns to be filed online. Returns can be filed using any of the following methods. That is www.gst.government.in. What is the due date for filing of the GSTR 3B? 20th of the following month. Are you clear? So, due date for filing of the GSTR 3B it is 20th of the next month. And to the QRMP schemes, 22nd or 24th. And the next one, applicable to all the registered person other than every registered person has to file GSTR 3B on monthly basis. In case of the QRMP scheme, quarterly basis. In case of the monthly scheme, due date for filing of the return will be 20th of the following month. Under the QRMP scheme, 22nd or 24th. But however, the following persons no need to file GSTR 3B. Those persons are input service distributor. He is liable for filing of the return of GSTR 6. NRTP 5. Person paying tax under section 10 composition levy, GSTR 4. And person who is liable for reducing of the TDS, GSTR 7. Person who is liable for reducing of the TCS, GSTR 8. So they are liable for filing of the separate return, so that they are not liable for filing of GSTR 3B. Are you clear? And one more thing, please, you have to remember. Suppose now the person who is liable for reducing of the TDS, as well as he is liable for payment of the GST on outward supply. When he is liable for payment of GST on outward supply, he has to file 1 and 3B. Only for the purpose of the TDS, just he has to file GSTR 7. So I can say, suppose TDS provisions applicable to the government, where a person providing services to the government and the value of supply exceeds 2.5 lakhs, it is a responsibility of the recipient, that is government, to reduce TDS. So for that purpose, government has to file GSTR 7, and the government have any outward supplies, GSTR 1 and 3B has to be filed. Thereby, there may be a chance 1, 3B and 7. 3 returns has to be filed. The next one, pay the tax due in each of the first 2 months of the quarter by depositing the due amount in form payment 06 by 25th of the month succeeding such month under the head of monthly payment. Okay. So under the monthly payment, these are the time limits for uploading of the invoices. No. And on monthly basis, what could be the due date for payment of the tax? For April month, 25th May. Monthly payment. For June, 25th. For May month, 25th June. For June, it is an end of the quarter. In such a situation, 22nd or 24th. Are you clear? And again, this is the due date for filing of the quarterly return also. Okay. And GSTR1 or invoice furnishing facility. Normally registered person who are not under the QRMP scheme, 11th of the next month, GSTR1. And the registered person who have opted QRMP scheme, 13th of the subsequent quarter. Okay, that is every month 13th. For April, 13th May. For May, 13th June, like this. And the maximum value should not exceed 50 lakhs in a tax period. So second month of a quarter, first month of a quarter, while uploading of the invoices, the such value should not exceed 50 lakhs. And invoice furnished using the said facility in the first 2 months are not required to be furnished again inform GSTR1. Suppose while you are filing of the return in quarterly, that is in the quarterly return, again no need to provide the details which are provided under invoice furnishing facility. Next, GSTR4, return by the composite taxpayer. First, he has to file CMP08 by 18th of the month succeeding the quarter. So on quarterly basis, he has to file a quarterly return that is called CMP08, and thereafter GSTR4 is annually by 30th April following the end of the financial year. So for the composite dealer, GSTR4 quarterly CMP08 and yearly GSTR4, and apart from that he has to file annual return GSTR9A. Okay, and the next one, GSTR5, return by the NRTP 13th of the following the next month or within 7 days after the expiry of the registration, whichever is earlier. Suppose NRTP, non-resident taxable person, he obtained the registration, let us assume, in the month of the May. Now the registration validity is there for May, June and July also. In such a situation, May month return has to be filed on 13th June and the June month return has to be filed on 13th July. And the last period, what is the due date for filing of the July month return? In July month, registration is going to be expired, so that 7 days from the date of expiry of registration and again 13th of the following month, whichever is earlier. Suppose the registration is over on 20th, let us assume on 25th July. If the 25th July is over, what will happen? 7 days from the date of expiry of the registration, it could be 1st August or 13th August, whichever is earlier. Automatically 1st August will be the due date for filing of the GSTR 5. 7 days from the date of expiry of the registration or 13th of the next month, whichever is earlier. That is a due date for filing of the return in relating to the NRTP. And the next one, GSTR 5A, online information database access retrieval and services, 20th of the next month. And next, GSTR 6, monthly return by the input service distributor, 13th of the next month. And GSTR 7, monthly return for TDS, 10th of the following month. GSTR 8, 10th of the next month. And GSTR 7 is for tax deductor, GSTR 8 for the electronic commerce operator who is liable for reducing of the TCS. Next, GSTR 9, 9A, 9C, annual return, 31st December. And GSTR 10 Final return. Once your registration is cancelled, once your GST registration is cancelled, before cancellation of the registration, actually, sorry, we can say when you made an application for the cancellation or where the department issued the cancellation order. It could be in either way. Suppose if you want to make an application for cancellation from that day to 3 months, but where the department given an order for cancellation from that day to 3 months, whichever is earlier, you have to file GSTR 10 final return. In the final return, you have to provide what are the input tax credit which you have to be reversed. Reason, whatever the goods held as a stock, already we might avail input tax credit on it. Now after the cancellation, what will happen? Those goods we are going to use for personal purpose, no? So that whatever the goods held as a stock, input goods held in work in progress, input goods held in finished goods, capital goods, in relating to all those things, we have to reverse the credit, and such information has to be provided in GSTR 10. And the GSTR 11 is for persons having UIN number, only for the purpose of the refund. Are you clear? So GSTR 1 and 3B is for normal registered persons, and for QRMP scheme persons on monthly basis IFF invoice furnishing facility 13th of the following month. Are you clear? And GSTR 1 has to be filed only for the end of the quarter. Are you clear? And the next one, GSTR 4 for the composite dealer, GSTR 5 NRTP, GSTR 5A OIDR, GSTR 6 input service distributor, GSTR 7 TDS 10th of the following month, GSTR 8 TCS 10th of the following month, GSTR 9 annual return 31st December, GSTR 10 3 months from the date of the cancellation or cancellation order, and GSTR 11 it is return for persons having the UIN number. Are you clear? Next, furnishing the details of outward supply section 37. Every registered person shall furnish electronically subject to certain conditions and restrictions. In GSTR 1, the details of outward supply of the good or service are both affected during a tax period on or before 10th. On or before 10th of the month succeeding the said period. The tax point example, details of outward supply pertaining to the month of September has to be filed on or before 10th of October. But now it is extended to 11th. Next, details of outward supply shall also include invoice, debit note, credit notes, and revised invoices, etc. All such details has to be provided in GSTR 1. Next, exception. Section 37 not applicable to the ISD, NRTP, TDS, TCS persons and composite dealers. Reason, they have to file other return. Communication to the recipient of the supply. So where the supplier is a registered person, he filed the GSTR 1, automatically it will be auto-populated in GSTR 2A, in case of the composite dealer 4A, in case of the input service distributor GSTR 6A, it will be auto-populated. And the tax period concerns the period for which the return has to be furnished. It may be 1 month or 3 months. And the next one, extension of the due date. Commissioner has a right to extend the due date. That is the reason. Actually, the due date for filing of the GSTR 1 is 10. It is extended to 11. Next, rectification of return. Once you file the GSTR 1 and if there is any mistake, you don't have a chance for any revising of the return. Such mistake has to be adjusted in the subsequent tax period. There is a column 9th and 10th column in GSTR 1. If there is any mistake in the previous returns, such mistakes can be adjusted providing of such details in 9th and 10th column. And such amendments or such adjustments has to be made on or before 30th of November of the following end of the financial year or actual date of the filing of the annual return, whichever is earlier. On or before that date, if there is any mistake, such mistake has to be adjusted. Suppose if you identified such mistake after 2 years or 3 years and you made an application to the department, sir, I did mistake 2 years before, sir, 3 years before, sir, I would like to adjust. No, not possible. Next, restrictions on furnishing of return. So a registered person shall not be allowed to furnish the details of outward supply of a tax period if the details of outward supplies for any of the previous tax period has not been furnished. If the previous tax period is not furnished, automatically you are not eligible for filing of the current year tax period. So apart from that, government may, on the recommendations of the council, by notification, subject to such conditions and restrictions as may be prescribed therein, allow a registered person or class of registered person to furnish the details. Actually, he won't allow. Suppose if the department given permission, in exceptional cases, he can. Next, a nil GSTR1 can be filed through SMS using the registered mobile number. So through registered mobile number, by sending up the SMS also you can file the nil return. The next one, small taxpayer covered under the QRMP may opt for quarterly filing of GSTR1. So QRMP scheme shall be discussed in later in this chapter. Already we done. Next, form and manner of furnishing the details of outward supply GSTR1. Are you clear? Next, IFF for small taxpayers covered under the QRMP scheme. So what is the manner? Invoice furnishing facility 13th of the following month. And GSTR1, suppose for April and May IFF, and for June GSTR1. Otherwise, suppose July, August, for the month of the July and August IFF, for the month of the September GSTR1. What is the due date for filing of the IFF or GSTR1 who are covered under the QRMP? 13th of the following month. Are you clear? Details to be given in GSTR1. Invoice wise details, consolidated details. What are the invoice wise and consolidated has to be provided. I given a small peek about it. Yeah, this is the thing. Are you clear? Okay. So that is the thing. If you have a conceptual knowledge and the learning process step by step conceptually, so understanding of the concept could be easy one. Suppose if you don't have a conceptual knowledge and if you are go through once, twice or even 10 times, we cannot understand properly. So first get the conceptual knowledge and go through. And the next one, details to be given in IFF. Only invoice up, sorry, only the invoices B2B supplies where the QRMP registered person intended to forward the input tax credit, only such invoices has to be provided under IFF, and it could be the discretion power of the registered person. Next, restrictions on furnishing of GSTR1. So he has not, suppose a registered person shall not be allowed to furnish the details of outward supply of the good or services under section services are both under section 37 in form GSTR1 if he is not furnished the return. Okay, if he not furnished the return under GSTR 3B of the previous tax period preceding month, he won't be allowed for GSTR1 or for IFF. And the next, a registered person required to furnish the return for every quarter under 39(1) but shall not be allowed to furnish the details of outward supply if, what's the nature of default? He has not furnished the return in form GSTR 3B. So whether you are a monthly return filer or quarterly return filer, if you didn't file the previous tax periods of GSTR 3B, you won't be allowed for GSTR 1 or IFF of the further tax periods. Are you clear? If you not file the GSTR 3B of the April month, you won't be allowed for GSTR 3B of the May month. Are you clear? Suppose quarterly returns, first quarter, second quarter. If you are not filed the second year GSTR 3B, you won't be allowed to file GSTR 3B of the third quarter. Simple logic. Manner of furnishing of the return of details of outward supply by the short messaging services facility rule 67A. So actually it is a overriding provision. So you can file the return through mobile number. Suppose if you don't have an outward supplies, you can file the nil return by using of the registered mobile number. At the time of obtaining of the registration, whatever the mobile number you given, with the same mobile number by forwarding message to the department, we can file the nil return also. Whether it may be GSTR1 or GSTR4 or GST CMP08 also. Next, communication of details of inward supplies and input tax credit. The details of outward supplies furnished by the registered person under section 37 and of such other supplies as may be prescribed and auto-generated statement containing the details of input tax credit shall be made available electronically to the recipient. And I think we know that concept. We discussed in the chapter of the input tax credit. Now you are the registered person. You have a various inward supplies from the different type of the registered persons. All these are registered persons, right? All these persons has to file GSTR1 and their outward supplies will become inward supplies to you. If they file GSTR1, it will be auto-populated in GSTR2B. Thereby, you can avail input tax credit. Suppose if any one of the registered person not file the return, it won't be auto-populated. Thereby, you are not eligible for availment of ITC. Now, there is no concept of availment of ITC on provisional basis. Earlier, yes, there was an opportunity 100%, 50%, 20%, 5%. In such a manner, we were in a position to avail input tax credit on provisional basis. That is nothing but by the having of the invoice details and providing of such details electronically, we were supposed to avail input tax credit. But now there is no such option. Next, so the communication of details of inward supplies, just go through, easily you can understand. And furnishing of the return, section 39, furnishing of the return, that is nothing but GSTR 3B. All the registered persons has to file the GSTR 3B except ISD, NRTP, composite, TDS, TCS. And form and manner of furnishing of the return. Every registered person GSTR 3B electronically through GST common portal on or before 20th of the following month. Suppose in case of the QRMP, please remember these are the states: Chhattisgarh, Madhya Pradesh, Gujarat, Maharashtra, Karnataka 22nd. And the registered person states of Himachal Pradesh, Punjab, Uttarakhand, Haryana, Rajasthan 24. India, above the India 22nd, sorry 24th. Below the India, below the part of India 22nd. Are you clear? Next, discharge of liability before filing of the return. Every registered person required to furnish return discharges liability towards tax, interest, penalty, fees, and any other amount payable debiting the electronic cash ledger or electronic credit ledger. If you want to file the return, you have to discharge your tax liability, whether through electronic credit ledger or the cash ledger. Clear? And the monthly payment for quarterly return filers. So for the first month, in a first month of the quarter, 25th of the following month. Second month of a quarter, 25th of the following month. Third month, 22nd or 24. Are you clear? And furnishing of return by person under the composition scheme. Up to this part, GSTR 1 and 3B concept is over. So the remaining part is that for ISD and other persons, it is just a small remaining small concept. We will discuss the next session. Now in this session, just we completed the concept of the GSTR 1 and 3B only. And my intention is to cover only these two returns and the due dates applicable to those returns. Please go through once or twice, then easily you can understand. And the next session could be an easy thing. Nothing is there. If you complete it, if you properly understand this session, it's closed returns chapter. More than enough. Okay, that's all for today. Remaining concept we will discuss next class. Have a nice day.